a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Woo! Nikki, I think we're going to have to talk about putting your dad in a home.
They're like flashback moments. Like, he transports into another dimension for a quick second.
He's been yelling the word fist for the last 2 minutes.
Yes.
I knew what it stood for just a moment. Sylvester Stallone movie, Federation of International Truckers or something like that. It was beautiful. Unionized. It's crazy. Speaking of unionized, which has nothing to do with my next statement, you looked beautiful this weekend on your ride.
I was riding for Men's Health, and you need that.
Check it?
you need that. Yeah, I do. I try to do a charity ride. It's called the Distinguished Gentleman's Ride, and the money goes for men's mental health and prostate cancer research. My dad
hits home.
My dad was a prostate cancer survivor, so. But anyway, I'm mostly there because it's men in suits. Ooh. On vintage motorcycles.
Wow.
And
they look good.
Just like catnip for your girl. No, but yes, they allow my bike, which is not a vintage, nor is it a classic.
But it
is a triumph. But it is a triumph.
Yeah.
But it was fun. We met up on the south side in Bridgeport. And so as we were riding, people, even it was still early Sunday, they were waiting to get into the Cubs Sox game. And so they're waiting on 35th to turn in to the stadium. And so they just see this line of hundreds of motorcycles. And so they were all honking at us and like we were all waving. So it was fun. We rode down Lakeshore Drive and to the museum campus. So it was a beautiful day.
It looks cool. Cool. A lot of nice looking bikes, a lot of nice looking people, kind of cool with the hats and ties.
Yeah, like the tweed and the jacket. It is very different. So like
Peaky Blinder-ish.
Yeah. Like this event, it's very like sophisticated. Like I heard one guy who was like, we don't personally have NVIDIA. He's like, but our fund has NVIDIA. Compared to like when the other motorcycle rides where we meet at a gas station and we have to cover our license plates. And their funds do not have NVIDIA. It's just the juxtaposition in the motorcycle community.
It all depends on who you're hanging with.
Right, yep.
6 people you surround yourself with. I get it.
But how are you, Nikki? You were tan. How was your weekend?
Thank you. This is from
Arizona?
Arizona. Yeah.
Oh, okay.
It's just residual. It's finally coming to the sun.
Okay. You're just bronzed.
Thank you.
But you were outside this weekend?
I was. I went to the Cubs Sox game on Friday.
You did?
Great game. Yeah.
Oh, cool.
Yeah.
How were the vibes? Immaculate?
The vibes were really good. I mean, the stadium didn't fill until like maybe the second inning, which was shocking because if that was at Wrigley, it would be absolutely slammed.
Well, no, to be fair, because I was driving home on Friday, it was the traffic. So the line of cars that were backed up to try to park was the longest I'd ever seen it. So I just think that they miscalculated. They're like, what is this south side we need to get to? Like I just think they didn't know. And that's why I think it was late. But how was the rest of the game?
It was good. It was good. I mean, what do we call it? Guaranteed rate now or Comiskey?
It's Comiskey.
U.S. Cellular.
It's Comiskey. It's Comiskey. The food is good though.
Food is great. Like it's pretty easy to get everything. I mean, the seats are nice. We went to like the back. I don't know what to call it, like the bleachers area.
Yeah.
They have like those like viewing.
I did see this. I should have realized where you were. The video you're going to talk about right now.
Oh yeah. I also did the fast pitch machine.
I was going to ask if you did that.
I did do that.
Do we have a video?
We do. I have a video. I mean, for a small nominal fee, I'll let you see.
I want to see this video
No,
because there's a kid that like went viral because he threw like 94 or 97.
Did not happen with my son.
No. First of all, I have not picked up a baseball in quite some time.
I love all the caveats. Yeah.
Even my softball that I play once a year now that I used to play is 16-inch softball, like mush ball. So it's like
Chicago style.
Yeah, Chicago style. So it's a bigger ball. You don't you're not winding up and throwing it hard.
But he does have NVIDIA, and he does have NVIDIA in his fund, too, so that's okay.
The over-under, he put me, did you look that up, too?
No, I swear to hand to God, I did not. And I'll tell you this, I happened to be sitting with Rob, your brother-in-law, and he said 67. I didn't get a chance to write it in there.
That's what he said?
I said 68, and I said,
Did he say that in a respectable way?
I didn't notice that he was holding a baby and he was a little preoccupied.
Yeah,
I didn't hear any condescending tones of his voice.
All right, that's good.
We didn't elaborate on it because I said 68 miles per hour, and then I asked him, and by the time I got back to, I was going to say Rob says 67.
Okay,
you wrote in 67.
My buddies put me at 66 miles per hour.
Okay,
for the over under for my free drinks for the rest of the night.
Okay.
And that is the average, by the way, 66, 67. I looked it up afterwards. And
yeah, I was curious because I wouldn't know, like, what's.
What? Like.
Schlub. If you look up schlub.
Yeah.
Schlub. I was just kidding.
So, a little bit of a wind up, a slight wind up. No crow hop or anything.
Okay.
And also, summertime, it's golf season. You can't be.
And you're on the spot.
You're on the spot. You've been drinking a little bit. You can't throw out.
You've been seeing a chiropractor.
You don't want to throw out the arm. So
right.
I was at 67. So I threw 67, which was my
That's
high.
great.
So I got some free drinks.
I've gone to the Sox game with Josh, and he throws 70, and he's sitting. So it makes it just to put it all in perspective.
Don't make me play the baseball video with you in it. 'Cause I will do that. I have that.
That was clocked at 75. But
I was on target. That's the thing.
You were on target.
2 of the 3
were strikes. 2 of the 3 were
Some of those guys got up there and they just were whipping it as hard as possible. It was all over the place.
Sure.
I was right down the middle.
You were.
Those were pitches.
Those were pitches. Those
were pitches.
Yeah.
Nice. Good job, Nicky.
Yeah, he did great.
And then one of my buddies went to the showers. They
whoa! What happens at the park?
No, they have the old. It's like it's a shower that's like out there.
I didn't know that.
Hot, you can go like dunk your head under it.
But you have to be wearing a bikini.
But that's from the old stadium.
Yeah, from Comiskey. Yeah,
before the renovation.
So did he take the shower?
It's like a tradition thing for the Sox fans, which they don't have a lot of traditions.
No, they don't. But that was good. Nice.
I mean, we did win the series though. So
that is true.
Yesterday was exciting. Like went into extra innings and like a walk off and
home run,
it's
right?
good. Both teams are doing great. So it's exciting. It's nice when Chicago has something to hope for.
Yeah. You went out Saturday night too. You had a long weekend.
I was at Lambeau Saturday for Luke Combs. Wait, in
Green Bay? You went to Green Bay?
Yeah, they had a concert at Lambeau. It was the first one in like 10 years.
So you went to the Cubs Sox games Friday night, and then you got up early Saturday and drove 4'.5 hours to Green Bay?
Yeah, drove there, then went to the concert, then drove. It was.
How old do you think you are?
Listen, I'm young at home.
You're going to need a nap today?
So wait, who was it? Luke Combs? Luke Brian? Luke? There's
a lot of.
I know.
Luke Combs was that.
Luke Combs, okay.
Yeah. I will say, I don't want to say this so loud. Lambeau's a great stadium.
Okay.
I've never been. I have to go.
It's a great stadium. They do it right.
Okay.
They have lots of concession stands, merch tent. Everything's like well done. There's
I haven't been.
People there directing you. Go here. They're all so nice.
Of course, it's
Very
Wisconsin.
Midwest nice.
Yeah.
Yeah.
How much was a hot dog? Did you have a hot dog? What'd you have?
No, just some beers. They did have an F Chicago chant going. So,
yeah, but we chanted F Green Bay at our Cub Sox series, which it brings the city together.
Yeah.
Chanting F Green Bay. Yeah.
It was a little more aggressive. It was like in Luke Combs did like a tribute song. He played Fast Cars, and he was like it's great that we can all come out here together, like just like all like a bunch of people, like doesn't matter,
Yeah, everybody forgets everything.
Yeah. And then at the end, one guy like 3 rows behind me is like, yeah, but F the Bears. And like, just like, you know, like Luke Combs is like, everybody's here, you know, it doesn't matter, you're black, white, you know, your sexual orientation, your political views, we're all
gonna have a good time.
We're having a great time. And then like everything goes, you know, like there's a clap and everything goes silent. And then the guy's like, yeah, but F the Bears.
Awesome.
You know, like,
I love that guy.
yeah, no, it was good. I was just like, oh, God.
It's awesome. I didn't have any of that, but I did go to Bruno Mars this weekend.
So did Jessica.
Oh, wow.
Yeah. Did you hang out with Jessica?
I was in club level. Was she in club
Where's
level?
my shirt? How was Bruno Mars? He's a very talented singer and musician.
That little SOB doesn't stop moving.
Like we're the same height. Like
3 hours? Yeah, you guys are. You might have him beat. I mean, you really might have him beat. 3 hours, that man was...
Was it Sunday night or Saturday night?
I went Saturday night. If I went Sunday night, I would not be here. I almost had tickets for Sunday.
Okay.
And I got home around midnight, and I left half an hour early, probably.
Oh, wow. So it was like a 3-hour show.
Yeah. And Chicago traffic coming down was a little...
Oh, it's so amazing that you made it.
I actually was down by 35th and Shields because I had to go down and come back and come around to...
That is hilarious.
That's why the stadium has to be moved.
It doesn't?
Yes, just for
fine.
you.
Yes, for me.
It's
exactly. But I was in the north lot.
Yeah.
It was the underground lot, so I could get straight out and go straight north, which was good. So
That's nice.
Yes.
How many of Mr. Mars's songs did you know?
I probably knew. I didn't know any of his early stuff, recent stuff,
Right.
Which just came out. It was a romance tour. I didn't know I was supposed to wear a red shirt.
There was a theme. I didn't
Theme
know.
was like red. A lot of red.
Liz and Jenny would have loved it.
Yes.
Red Shirt Thursday.
It was good. It was. So I didn't know the first half an hour probably. Then he started playing some of his older stuff.
Okay.
And Vinny used to sing, yeah, and I can't know the rest of the song after that. But that's about it. Pretty good.
No way
right?
Vinny came with you.
What's that?
Vinny didn't come with you.
Yeah.
He did?
No, I'm just kidding. No, my wife wanted to go.
I was like, he was throwing a party at the house while you guys were there.
So this is the first time I've ever done this with any of my kids. I did not tell him we were leaving or going downtown until like 5 o'clock, about a half an hour before we were leaving.
Do you not know how social media works? That's all the time he's like.
No, but I didn't. I just said we're going out to dinner. We're going to be a little bit late. We might even go downtown. He's like, oh, all right, great, no problem. So I figured we were coming back, and then we got home around, like I said, around midnight, and he was just about walking in. He said he sent me a text message, be home about 15 minutes. I said, honey, let's wait up at the table and make believe we're mad at him because he's getting home at midnight. We sat there and we started yelling at him when he came in, like, what are you doing out so late? I tracked you. What were you doing over here? And he's like, wow, you guys are really mad. You guys usually don't get this mad. I go, yeah, we were at a concert. And then we told him the truth. So he was, yeah.
Oh, great. So not a single lesson learned. Hey, we got a great show for you today. A lot of good content headed your way. It is a magnificent Monday here on Tasty Live. At the top of the 8 o'clock hour, a little options jive. We have a research corner. Kai comes in and gives his outlook for the market for the week. You don't want to miss that. Then at 8:40, the Skinny on Options abstract application. And in my schedule, it just says Dr. Jim Schultz.
Yeah, nothing says
That's
Monday.
the topic. That's the topic. It's just Dr. Jim Schultz.
Hey.
Yeah.
Do you know what the topic
I do not.
Okay.
I do not. It's Dr. J.
Okay.
Yes.
But that's it.
Yeah.
That's it.
No more, no less. Then at 9
All you
o'clock,
need to know.
9 o'clock market measures. It's just Kai Zhang. No, it's a part of our weekly zero DTE breakdown. You guys are just such divas today because from live from the trade desk, it just says Quentin.
Yeah, it's
He needs no other introduction.
Yes.
Yeah.
So that's around that 9:20 time frame. Q from the trade desk countdowns the top trending tickers over at Tasty Trade.
yes.
Yes. That's it. That's the tweet.
That's it.
Hey, I got a great show. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news. Across the wire. Our leading story. Top story. Just in.
In today's headlines,
Breaking news.
All right, everybody. Today is a magnificent Monday. It is May the 18th. What? This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Maybe Home Depot tomorrow.
Okay.
Market opens. That's really about it.
Nvidia this week, though.
What's that?
Yeah, Baidu had earnings this
Baidu had earnings.
Baidu.
Yes, yeah.
Baidu.
It's up like 6 here pre-market, 141.
$6 or so, 6 or
Yeah.
7, a little over 140, closed under just around 130.
That's pretty good, Baidu.
Pretty good at it, Baidu. Yes. That should probably be promptly sold. But
Full disclaimer, I make my slides the night before because that's how this job works. So this first slide, it says oil rises as deadlocked Iran-U.S. peace talks.
Still applies.
Okay,
Yeah,
it's still up. Okay, I thought it was down.
Completely accurate.
Okay.
Last night, even into this morning, it sold off a little bit.
Yeah, I think it got to 103.
104.
104.
Okay.
104 and change. It's 101
So
right now.
last night, Trump posted to Truth Social, for Iran, the clock is ticking fast. There have just been no real decisions made against the stalemate. It does seem that we are maybe ramping things up. Netanyahu did speak with Trump over the weekend about maybe reinstating things in Iran. So things are just getting wonky. Brent crude hit 110.93. And the global inventory concerns, especially even here in the U.S., are mounting. What do we do?
Yes, and the futures rolled also. So now you're trading the N contract, 101 and change. If you look at the backwardation that's going on there, you've got around $80 or so or more in the back month, which is used to be in the high 70s, 72, 74, 76. Now it's 78, 77, 300 days out. So it doesn't look like this is going away.
Yeah, there's apparently this morning we're lifting sanctions.
Another tweet from an unknown source.
Yes. It's hard to track where we're at in this situation, but oil has been it's been strong here. It's been sitting here at 100. Even in the M contract that just rolled over at the end of last week, I think it got to 104-ish. Like that was kind of the closing print, 103,
Close tie.
104.
Yep.
It doesn't seem to be going anywhere, but doesn't seem to move the needle that much. I mean, we had 50-point down move?
On the evening. Yeah, and Sunday,
I guess we closed like down 100 on Friday.
And
that was the first down move we've had in forever.
Yes, and Sundays do seem to mark the lows that overnight.
We were down 50 and then they immediately bought
50 or 100. Yeah.
Average U.S. gas prices per gallon, $4.48.
Not at Costco.
Bad timing for me though. I just had to fill up my motorcycle, but I had to do it in the city because it was after the ride. I paid maybe like $5.59.
You got
like
$24.
No, I just use 87 gas.
Oh.
Luckily, I was
Porsche takes premium.
good thing it's a motorcycle.
Oh no.
But $5.59.
Oh no, you have to get out his mommy, daddy credit card.
5 gallons.
5 gallons.
5 gallons. So I was the light had come on.
That'll last you the summer pretty much.
Yeah.
No, it's like 200 miles, like a tank. Like I ride my bike.
See, I'm so Costco now. I hit the Costco.
Yeah, I'm so Costco now.
I hit the Costco in like Oshkosh, Wisconsin.
Oh, I bet that was cheap.
Yeah,
because the one here is $4.99. Last time I went,
waited in line. I get up there and there's like 5,000 cars. I'm like, this is unbelievable. Like there's a line to get in there.
The Costco in Oshkosh.
In all Costco fashion, they do it so incredibly well. They got the extender pumps.
Yeah,
I love how you're just now like, we know, baby, we know.
I'm like, these guys.
We've been doing this for a long time.
They know how to take your money.
They know.
It's called suburban style.
They know.
Yeah. I haven't.
Use city.
I haven't elevated to that level yet.
Right.
Of the suburban status.
Right.
Shifting gears, Treasury yield surges. Hot inflation data creates tricky rates path for new Fed Chair Warsh. 30-year Treasury yield sitting at 5.12%, the 10-year at 4.60. April import prices were up 1.9%. Energy-driven surges in price are a contributing factor. But what do we do when the bonds come for you?
Making a new recent low down around 110.05. They're 110.22 now, up 2 ticks.
They got absolutely murdered on Friday.
Absolutely murdered.
Unbelievable move.
Yep.
It was over a full point.
Yeah, one of the biggest moves of the month.
Yeah, we were almost at 112, ended at 110 and change here. Just an unbelievable move.
Yep.
Are you playing bonds personally?
I have. We sold the 39-day 107 puts.
Okay.
So we're participating in the upside, but.
I mean, would you look to do something like more like neutral because you don't think they're really going to go anywhere, or you think they're going to go up?
I would think so. I mean, everybody, all the powers that be, are going to do anything they can to keep rates or get rates lower.
Okay,
you would have to think that that's the move, but I don't trade bonds that much. I mean, this is like
Nor do I. I mean, you look at a
you're
sell
sitting at
puts every once in a
110,
while,
like,
right?
Yeah.
Yeah.
How much lower are they going?
Every time I've traded, it's worked out nicely. Actually, like the next day.
You're turning into a good bond trader. You said.
That's
I'm
nice.
turning into a good. I don't know. I don't
jinx it.
manifest that other thing that I used to say about my
Yeah.
talents in trading commodities. Now I'm just good.
Well, speaking of commodities, China commits to buying at least $17 billion in U.S. agricultural products annually through 2028. That is, again, the $17 billion commitment, maybe more soybeans, especially, and corn and wheat. They are also looking for 400 beef facilities to be reinstated. The deal was announced. But when asked for comment on the deal, China said, "We don't know what they're talking about." I'm not joking. So I'm reporting this, but okay, I don't know.
Yeah, I don't know when they've ever hit the numbers.
Sure,
of
right.
What they've said. I didn't we have some.
It excludes the October 2025 soybean commitments. These would be additional purchases,
Okay.
according to the White House.
Yeah, because there were like over the last handful of years, there's been all sorts of they're going to buy,
Right, but they didn't hit those.
and they've never hit any of them.
Right.
So I don't know. I was thinking because you brought the brigade of trillionaires and billionaires and whatnot all over there. You had to think that there was something big coming, and nothing really big happened.
No,
there was
no, right.
no NVIDIA chip deal,
Right.
no Apple facility. You had all Elon Musk,
They're
launching
saving that tweet for a red
rockets.
day again. Like maybe
Probably. Well, today we got the sanctions off of Iranian oil. So
Yes.
that's
just Monday though. So
that's
relax.
giving you like 20 or 30 handles. It's still red, so there might be another one coming before they open.
You don't see this every day. Corn, wheat, and soybeans on a percentage basis are your biggest movers of the group. And
Hey.
yeah, wheat.
Oh, yeah.
Wheat's up big 20. They all had 2 or 3 day huge down moves, now followed by an up move that brings them right to the middle of their range. So
Okay.
the world is your oyster there. I haven't looked at that 13 IV rank. I usually stay away from them.
A little potential merger news in the energy sphere. NextEra Energy is in talks to acquire Dominion Energy at $76 per share in an all-stock deal worth $66 billion. So NEE is the ticker, and then I think D is just for Dominion. Dominion covers Virginia's power grid. NextEra is the world's largest renewables developer. The combined entity would be the world's largest utility by market cap.
Yeah, Dominion is just a big old nothing burger, usually sideways, pays like a 4 or 5% dividend.
Nice.
Depending on what the stock price is. It's up $10, so there you'll get a little bit of a boost on.
Above 66, though.
76 is the price per share. 66
70.
billion.
76. It's 71 right now. It closed at 61.
Yeah.
It's 71, so the deal is at 76. There's probably some, I mean, obviously,
Yeah,
I haven't
there's
looked
risk
at it.
premium built
Yeah,
into
yeah,
here.
exactly.
I mean,
some cash. Maybe it's all. You said it was.
It's all-
cash.
I don't know what I said.
All
stock.
stock. All stock.
All
Yeah, that's
stock.
probably, I mean,
Well, NEE, which is unusual after a potential takeover like this or announcing a takeover like this, is only down $1. Usually it's a little bit more
Yeah.
than that. Down $1.
Okay. I know you guys don't particularly
Yeah.
trade these, but I didn't know if XLU was doing anything. Haha.
it's surprising because I think we talked about this a little bit last week, but XLU, you have all this talk of like energy and data center build out and like the need for all this energy, and XLU has gone basically nowhere. I mean, it's at the lower end of where it's been trading over the last year. It's kind of a weird, when everything data center related is going nuts, you would think the energy companies, and you're seeing some of them like a Bloom Energy has gone crazy, GEV and some of the other Oklo, like nuclear is kind of in a hot topic, but the actual infrastructure that we have hasn't really gone anywhere, which is kind of a surprise. I don't know how you reconcile that. If you think that all this data center stuff is going to get built, you would think that you're going to need a multiple of what the energy usage is right now. And you would think that would be bullish for the stocks, especially the biggest, of the group.
Yeah.
Haven't really gone anywhere.
Yep.
We're going to get a pretty good gauge of consumer sentiment over the next couple of days as Walmart and Target are about to show just how much shopping habits have changed due to the war in Iran. Walmart, the nation's biggest retailer, is set to report their Q1 earnings on Thursday. Target will report their earnings on Wednesday. Retail sales growth was up 1.7%, but shoppers are shifting from wants to needs as gas exceeds $4.48 a gallon.
Yeah, I don't know. I mean, what's the war in Iran been going on for now? I don't know.
Since March.
Yeah.
Yes, it's maybe even a little bit earlier than was it? Yeah. Then I read an article that said they're selling more chicken and tuna cans.
Probably because I don't eat beef, but beef surpassing $7 a pound.
Yeah, well, that's how natural pricing. So what's going to happen now? They're going to have an inventory more of beef, and then beef is going to have to come down. I mean, this is free market.
Yeah, but some of us have 22 pounds of elk meat.
That's right.
So
sitting there.
Screw the beef.
That's
screw
right.
The
Who
chicken.
needs that?
Yeah,
I've got trichinosis
organic.
in my freezer. Organic trichinosis.
Yeah. I'm waiting for the bear. The bear gets hunted this weekend.
Oof.
Oh no!
Yeah.
What are you doing? No, I'm sad. What are you doing in Walmart and TGT?
Kind of
Walmart near highs, 131. What's that?
I said it's kind of scary too. I don't want to die from some weird thing, but I'm eating that bear.
Are you really?
Yeah. Stew. I do it in a crock pot.
Okay, I don't know, man.
You want some?
No, I do not.
Not beef.
No, I do not, because when I go to national parks, I prefer not to be haunted by the spirits of forefathers.
Sure, that's fair. That is fair.
Like
Ooh,
if
I
I
didn't
trip
think
on
about
a
that.
trip on a path,
goes in the woods.
Yeah.
right? Like if I trip on a path, I would like the winds of the ancestors to lift me up to save me from peril, and I want to put everything in my favor. I don't want to reek of bear.
Yeah. Does the 0.2% Native American that we have in our
Yes,
does that count? So that
We're
protects.
conquering those SOBs too. We're going all over the
does that
world.
count?
Yeah, that's right.
I think that counts.
Walmart and Target. Which is,
Walmart's near highs. Let's see what Target's doing. TGT, just off of highs, 121, as high as 130 and change. Ivy rank of 55, and Target's pretty good. You may have did something. It does have earnings May 20th.
right, yeah, it's right, yeah, Wednesday,
Yep.
Thursday there.
Yep.
So, hey, the big dogs of the .com era are barking again 25 years later. Will they have the same fate? Former .com darling Cisco, Intel, Qualcomm, and Texas Instruments are all hitting record highs, some for the first time since their heyday. The S&P 500 is looking at a 23x forward PE ratio. That is bonkers. There's a massive amount of concentration right now in these chip stocks, semiconductors, things of that. But is this the .com or is this different?
Well, it's never different, but it's always unique.
Okay.
Let's put it that way.
Oh, wow, poetic.
Thank you. 109.
Like a politician.
109 got up to 130. Obviously, $40 stock around where Trump bought it. Now it's 109. I leave it there.
It's been a nice pullback. I have enjoyed that.
Has it been? I mean, like, is it enough of a pullback?
Not enough.
Okay.
I needed more. But this was a good start.
Yes, Ivy rank of 80 is good.
The bigger problem is the fact that
we got dollar-wide strikes now after expiration, which is good. We got a lot of dollar-wide strikes in a lot of stocks, $2.5 dollar-wide strikes. Where there was $10 strikes, there's $5 strikes. So you got a lot. You could be a lot more selective with your strategies.
The biggest problem has been these down moves have been just straight V bottoms, and so you haven't gotten paid on any of the stuff that you put on if you did like diagonal spreads or if you had short premium.
Yeah.
If we can stay at this level for like a week or two, then you could start to get happy about it. Right now, it's just not enough.
The top 10 stocks make up 40% of the S&P, and the S&P is up 13% since its March 30th lows. So, 10th longest bull market in history.
Oh.
That's according to Claude, so whatever. We're not going to get it's fine. Let's talk about optical stocks are booming. 300% Corning is up year to date in 2026. Lumentum has seen 65% growth. And optical fiber is replacing copper in data centers, and that pricing is rising faster than demand. Corning is building 3 new NVIDIA dedicated optical factories, and Lumentum has a $400 million backlog.
these stocks, I mean, they're part of the momentum basket. It seems to rotate between the optical stocks like Light, AAOI, Corning is in like the glass, Coherent is in there. That's one side. And then you've got like your Micron, SanDisk's, memory stocks. These are like the two, one every single day, one of these
This is a Momo
is up
stock.
5% and the other one's
But
down.
what's the best way to play this?
Small.
No, but which underlying? Like Light? Is that the best one?
Well,
or-
let's put in context here. Last year, a year ago, this was a $100 stock, and then it ended the year somewhere around a $250 to $300 stock. And now this year, which is only a couple of months old, 5 months old, got to $1,100 stock. It closed at $970. It's $940, down 30. I don't consider this a dip. When you look at June and July options, they're quite wide, like $10 wide. If you're going to do anything in here, it's a small stock play. And even that, I think, is probably not worth it. But you do get bang for your buck.
Yeah, I think generally speaking, the way to trade these is just momentum and direct
Ride the
bets.
waves.
You can't do any like put spreads, call spreads, iron condors here. The markets are just horrific.
They're too wide.
And they just
100% implied volatility makes these spreads
Too much
really cheap.
it's too much volatility
Yep.
for these. So you gotta, if you're gonna trade them, you buy calls, buy puts, and try and like scalp around it.
Yeah.
Just because they're all such high price underlyings that
There's not like an optical ETF.
not
really.
that I
There's
know
not like
of.
a DRAM equivalent.
DRAM. I've been
Yes, I was reprimanded for that too.
DRAM.
DRAM, not DRAM.
Well, I still
or
say
DRAM.
GIF. I still say GIF. I will
Yeah.
never call it a GIF. I'm sorry.
I say GIF too.
I say GIF. So
It's up a buck, by the way. DRAM.
EWY is another way to kind of get into that space via like South Korea and memory stocks. But
Up a buck there
for
too, or maybe even $2 EWY.
optical related stocks, I do not believe there's an ETF.
Hey, the jury is deliberating in the OpenAI versus Elon Musk trial, so stay tuned for the fallouts of that decision. But Anthropic and OpenAI's combined share of startup AI revenue has risen to 89% of the sector total, as OpenAI is trying to prove in court that no one company should own AI. There's basically two companies that own all of the AI revenue. Anthropic is the fastest revenue growth of any company in history, 30x in just 15 months. We are on the precipice of both of these companies coming out with an IPO. But if OpenAI is facing a massive settlement, or if Sam Altman has to leave in certain capacity because of the legal ramifications, that could be interesting.
I don't know who's going to pay for this, but it seems interesting, the story.
What do you mean?
But we pay for it as a company.
Yeah.
Like
Yeah.
we pay OpenAI.
Everybody-
we pay
Right.
Anthropic.
Yeah, the customer hasn't paid for it, though, right? I mean, it's more through the...
No, I know
Yeah.
friends that pay for AI.
Do they?
Yeah. I've
Okay.
yeah. I mean, this, I think we're still very early in this in terms of like people using this. Like, I don't know if my mom has it yet. Like any of these, like,
Your mom?
yeah.
Using,
You don't.
Using AI? No, I did a free AI.
Yeah, but she's a real
What free
estate
AI do
agent.
you have?
You can go right on Google and go right into ChatGPT or anything else like that.
That's Google search. That's
Google.
different.
That's
But
the
yes.
same
Yeah.
thing. Boom.
Yeah.
Okay, so you're not there yet either.
No.
So, but is your mom a real estate agent?
No, she's retired.
Oh, that's right.
She's retired. I
I was
got
gonna say if she's in real estate, I guarantee she's using AI.
Yeah. Well, my mom, was more fiscally conservative. She didn't like on a whim buy Porsches.
Sure.
For example, she saved that money.
I'm going to bite my lip.
Yeah.
That's not what your Uncle Barry says, but I'm going to bite my lip.
I'm going to keep it moving here. Let's talk about Microsoft. Bill Ackman's Pershing Square has taken a $2.1 billion stake in Microsoft, calling it a highly compelling valuation. Microsoft is trading at 21x its PE ratio, and Microsoft, of course, has a 27% stake in Acme, OpenAI, having a stroke. Ackman
Yeah,
bought.
you buy a little of mine, I buy a little of yours. We'll put it out
Ackman
there.
bought after Microsoft fell 10% post Q2 earnings. So
Yeah, the vampires are here to pick the dead bodies. Microsoft hasn't gone anywhere. And then, I mean, when Ackman he's usually pumping a bag here. So
$4.19. It's actually down $2 this morning.
Well, it was up like $18, $19 on the news on Friday.
Yes.
I mean, it was the only stuff. Yeah, market's down 2% or 1.5%.
No, I think the Russell was down 2.5% for the week. Yeah.
It was a pullback in the market.
Yeah. Microsoft was up 3%.
Yeah, it's up 3%, and it's like this stock.
Nvidia was down 4%. AVGO down 3%. MU down 6-7%. The whole sector. Oracle was down 2%.
In fun trivia news, actually, today is the anniversary of the Microsoft antitrust trial. So, Microsoft could have just been wiped off the map, but then it wasn't. So, congratulations. It's now worth trillions of dollars.
It came back with a vengeance, as it is, I don't know, $1 trillion company?
Yeah.
Or something like that? Sure.
But I was like, that's a crazy story. Hey, SpaceX has accelerated its IPO timeline. It's targeting a June 11th pricing and a debut on the NASDAQ, in the NASDAQ 100, mind you, on June 12th. Instantly. That's it. That's the tweet. They're going to try to raise $75 billion, the likes of which we've never seen. It's a faster than expected SEC review drove the accelerated timeline. And the S&P is also going to fast track it to reweight and rebalance. And I think this is going to be the ticker, the SPCX. And so
my boomers are saying you two are wrong, that I can access AI right from Google for free, and they even sent me pictures of it.
No, we
Gemini,
weren't. Gemini, you can't.
You
said Chat
Mom
GPT.
doesn't use it.
You said
I win.
Chat.
It's a little different when you
I win.
Then you do things with it other than how long is it going to take me to drive?
No, AI. Put her in a bikini.
Yeah, AI.
Sorry.
That's what his AI usage is.
Sorry.
Hear me, strength.
Yeah, you think he said that as a joke?
No, I see. He does it to all of Vinny's
The truth
photos.
is stranger than fiction.
He does it to all of Vinny's photos because his son doesn't have game.
100%.
So
I bought him game though.
So SpaceX faster than ever, less than a month away though now.
Spooky.
Spooky?
I don't know.
Well, let's go to the next story. So Tesla is raising prices of its Model Y, but the fun thing that I saw on prediction markets, like Kalshi or Polymarket, I don't know which one, they're pricing Tesla and SpaceX merging at 70%.
Ooh.
Really? Wow.
You can go check me out. I saw it on Twitter. So
Did somebody in the know bet $30,000?
But that's crazy if true, because obviously we can't trade SpaceX yet, but that's on an accelerated timeline. So then what happens to Tesla? Then do they become?
What's the time frame for the merger?
I don't know.
Yeah.
I don't even know.
We're calling it an expiration date now for the merger.
Yeah.
Right.
It is an expiration.
Yes.
But Tesla's raised Model Y prices by up to $1,000 in the U.S. It's the first price increase in 2 years. The Model S and X are going away. So premium and performance trim prices of the Model Y have risen. What is Tesla's stock doing?
Tesla's hanging out at $4.18, $4.19, down around $3. Doesn't tell the whole story. 2 weeks ago it was $3.80. Back in April 1st or so, just about a month and a half ago, it was $3.40. So it's in the middle of its most recent, very wide range of $500 to $350, sitting at $4.18. Good IV rank of 20, because Tesla's had a very low IV rank for quite some time. It's about as high as it's been since October of last year.
Okay.
Yeah.
I've been trading it from back and forth a little bit.
Nothing seems to keep this market down. I mean, we're basically on right now. I don't know what the new tweet is. These the big IPOs worry me a little bit. I've said it before. I think there's a lot of capital that has to be filled to get these companies to the valuations that they're IPOing at, and it feels like the natural easiest way to fill that hole is via other really high priced stocks, the Mag 7s, semiconductors, whatnot, and so it feels iffy.
Yeah.
I don't know, but we'll see.
I mean,
I want some SpaceX shares.
Yeah.
I mean, I think everybody is kind of like, yeah, you got to get a couple.
Sure, why not? You get a couple, I get a couple, we all get a couple.
Sure.
But
Rivian is saying that it is delaying its most affordable model delaying its affordable R2 SUV base model until late 2027 in a surprising new pricing reveal. The $57,000 R2 Performance is now going to now come out in late 2027. Rivian spent 2 years marketing a 45K EV, and now that number is starting around.
This is the Tesla model.
Yeah, I know.
Over hype it and then you underperform. But
Sure.
Tesla continues to go higher. Rivian can't catch itself a bit. Every time
Rivian.
Yeah, down near the recent lows of around $13.80. I mean, 2 weeks ago it was $18. I don't know.
yeah,
IB rank at 25 is pretty good. Markets in June are good. They got $half wide strikes.
Hey.
After expiration. You might have did something for option trades today, every day, Monday through Friday, weather permitting.
oh,
There you go.
Go.
Starbucks is laying off 300 corporate workers, and is closing regional offices in Atlanta, Dallas, and Chicago. It's the third round of cuts under new CEO Brian Nickel, and it comes under $400 million in restructuring charges. No baristas or store-level employees were affected. Nickel's turnaround is including closing underperforming stores, aka those that unionized. What are you doing in Starbucks?
What are you doing at Starbucks? You doing anything at Starbucks?
they still have the big one on.
The Reserve, yes.
The Reserve.
Yes.
Yes. Starbucks trading 106. I thought it was still in the 90s, but I guess it's caught up with everything else.
Yeah, almost
Near high.
107, 106 and a half or so. This would be highs here for the last, at least for calendar.
Market loves a layoff.
Yeah, they do.
They do.
They do.
You are right about that. Yeah, you're right. Yeah.
Here's something that no one asked for, but yet here we are. Smoke weed, earn Bitcoin. Good Trip is a vape pen that blends cannabis and crypto and AI in one device. No one asked for this. So health experts say that daily login streaks are designed to form really bad habits. But every time you puff on the pen, it deposits nominal amounts of Bitcoin into it. Look at your face.
I mean,
It's $2 to $3 of Bitcoin per pen that's unlockable. It's $34 for the 1 gram of live rosin pen. So you get a 200% daily login multiplier.
What do you think about that?
I mean,
Smoke weed, earn Bitcoin.
yeah. You got to worry about that more than me.
Not my thing. Not my thing. You're talking about the
What
little
is
one.
Bitcoin doing to start the
Vinny,
week?
Vinny will get his little pen. He'll be like, Dad, I got to get more Bitcoin.
There are fitness ones. There are fitness aligned.
When you were his age, we would have been multi-millionaires.
Oh no, I went organic. All right, I went straight to the.
Can we,
the
for the
earth.
love of God, just talk about Bitcoin?
It's
Taking a little bit of it on the chin here, right? Down $1,500.
bouncing a little bit right now, though.
Yeah, off of 76 and change.
Yeah, I saw that Iran was setting up a crypto guarantee for the Strait, the passage of the Strait.
Oh, okay. Sure. That's fine.
I don't know.
I don't understand this, but this was all over my social media feed over the weekend. I guess Swatch had a release of the Royal Pop watch, but it triggered stampedes and Swatch stores were forced to close. I guess there was a melee at the one in Oak Brook, and I was like, what are y'all doing? It's not even limited edition. Like, it's going to be on sale for a while, but the resale prices are already exceeding $1,000. It costs $400 at a Swatch store, but launch day saw closures in Dubai, UK, France, US, and Singapore over crowd safety. It's basically 8 colorful pop art pocket watch designs, and it can be worn as a pendant or bag charm. I don't see how that's worth trampling someone over, but I mean, it's cute. Like, I love the pink. But what, Nikki? Did you know about this?
I did. I mean, I've seen the craziness of it too. everything has like they're the secondary market for basically everything has just turned into like a gambling / like money grab of anything. I mean, Pokemon cards, this stuff. It's just maybe there's just a lot of money floating around, but it just seems.
I mean, the number of people in line for a $400 watch surprised me.
Yeah,
it's like in this economy.
That's the thing is, it's not.
But they're resellers.
It's not like somebody that wants this to like have this and wear this.
Right. I saw some like smaller, like younger kids, like
yeah. But the whole goal is to flip it.
Yeah.
It's the same thing. Like Vinny wanted to drop ship. Like he doesn't even know what a drop ship is.
Right.
He just wants to do it because like there's money and like other people are doing it, and that's what this is.
Sure.
Free money.
Yeah, free money. It rains from the sky.
Finally today, for my viral video of the day, I'm just calling this, I have fine-tuned my algorithm to Chef's Kiss. Do you think we could get away with this at the Tasty offices? Office taser boxing. Let's go. Watch this.
Oh, I kind of like it.
Also, where is this office?
Yeah, no Peaky Blinders there, huh?
Call him Mr. Raider, call him Mr. Wrong, call him insane.
Oh, so they're wearing something on their fist?
Yeah, they got like a.
Thank you, John.
Where are the women? Do you have women doing this now?
Did they post? They filmed and posted it.
Yeah.
Like that's on them. Like
I will say, if
Also,
you remember
what's this
correctly, early on in my Tasty career, the Money Show, I did the taser thing. I think it was for Axon before it went public.
I believe you're right.
And
you were the sacrificial lamb in an Axon taser demo?
I was with Frankie and
Yes.
Kid Frankie. They had like a booth there, and it was basically like a exercise that they did for police departments, where you'd have like this like taser thing, and then you'd have to walk through this like thing and like not shoot the civilian, but shoot the bad guy.
Sure.
And then at the end they zap you with it. So like you like get like a zzz.
But not like full power.
No, they said not like a taser, not like the police one that's.
Oh, right, yeah.
You've had to do a lot of things to earn that seat. I mean, you had to do a couple of eating contests. You had to get tasered.
Yeah, I've done a little bit of everything.
Yeah,
I wish we had HR back then. I'd be a rich man. Would have sued the hell out of this place.
What's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. You know what comes up next? We're going to take a little bit of look back at yesterday, which was Friday. We got a nice little option jive, opening bell. Be back in 90 seconds, Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today. Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say? Other than, boom! Trade like a trader. Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and so is the market, by the way, but that's today. Let's take a look back at Friday. As
Can't stop, won't stop, only up. Buy now or
not Friday. Not Friday going into the weekend.
Friday did look.
Was it a little bit of a difficult?
But volatility went nowhere.
Volatility went nowhere actually until the very end of
it. Was red.
It was
red into the last 30 minutes of the day, despite.
And then we made new lows.
E-minis was making lows into the close and in the post market.
Yep.
Kind of crazy.
Yes. Actually,
you have vol expiration this week though, Wednesday, so you got to keep a damper on it.
That's right. I think Russell had one of its worst days ever on Friday. I mean, worst one day decline in about 6 months. That's my forever. My forever is actually 45 days, but I extended it to 6 months for that state.
No, it's getting shorter. Forever is now like 2 weeks.
Forever's intraday.
Forever is like 48 hours. Like that's when it could be over. Everything could be over. 48 hours.
Yep.
Unbelievable.
My Taiwanese sources told me that, so I just regurgitated it.
Thank you.
7 positive weeks in a row for the S&P 500.
Unbelievable.
All right, go ahead. Let's take a look at Friday. First slide, please.
Friday, rough day. Had a big pullback in the Russell, Dow and NASDAQ down about 1.5% there. You got the E-minis down 1.2%. It was a significant move across the board. You had bonds going absolutely banana land. Gold and silver silver was down like $9. I mean, we traded the gold silver ratio. Didn't hold it so long because you're a little Johnny, and we had to take it off. But weekday across the board in the market looked like there was going to be some fireworks into the weekend. And here it is. It was a buy the dip.
Yeah, I mentioned it earlier on the show. It's Sunday night's move is typically the low for the...
It can't be that easy. Every week.
It's been that easy for the last couple of weeks.
You think,
subject to change.
For 4 or 5
No,
of them.
I don't think anything. I try to trade what's in front of me and try not to think, to be quite frank.
I agree. I've been a little shocked.
Who would have thought that you were going to have this kind of rally in the market off of the April lows? I mean, yeah, a little bit of a spring back, a little bit of a V bottom, but not 6,400 on the E-mini S&Ps to 7,400 in a month between friends. I mean, no, I didn't. And this is a nothing burger, as you said, with the move
No, we can't do that. You make the people drink every time we say that.
I know, I forgot.
Can't have them drink this early in the morning.
Russell being lower with bonds being lower makes a little bit of sense, right? I mean, rates go higher, bonds go lower.
That really hasn't been the
No, it hasn't. You've been trying to play that game. It
has not. Yeah. That has not played out. It's been
selling puts in the bonds has worked, but
yeah, correlations have been the traditional flight to quality, the move in bonds, bond Russell correlation, all that stuff has broken down. It's zero. Next one here for the Mag 7s. Microsoft, really the only one that was outperforming of the group. Everything else taking it on the chin a little bit. Tesla had a big move after getting right to 450, kind of sold off. It's right in the middle of that right now. Pre-market. Nvidia had a huge move to the downside. It was up at new highs Thursday. Was it? Yeah, Thursday we got almost a 240 and then ended Friday at 225. So huge moves across the board here. Amazon gave it up a little bit. Google was strong and then sold off into the end of the day. Wild moves across the board.
Yeah. Wild moves across the board for sure. Microsoft finally catching a little bit of a bid, although it's a little bit lower this morning. I don't know that even the S&Ps have rallied. Maybe it's not. It's still down $2 after a big move, like you said.
When we look at the sectors here, so energy was the strongest of the group. We had the front month oil contracts expiring, the M contracts expiring on Friday or into Friday. Into Friday.
Yeah, Friday.
Yeah. They closed like around 103, 104, I believe. We got up there in the overnight session last night. We're now at 99 here, so energy probably will take a little bit of a breather today. XOM down about $1 here pre-market. USO down about $3 or $4. The rest of the market was pretty weak here. So you had metals and mining getting killed. You had huge moves in gold and silver. Gold was basically reversed its entire move. It's basically at lows here, kind of going back to like middle of March, early April, when it was at like 4,400 when they kind of took the air out of that. Silver was down $8-ish on Friday. Like just massive moves.
Massive moves.
In the mining and metals in general. Semiconductors.
Boy, we nailed that gold-silver ratio. I mean, that gold-silver ratio, we were doing around 54.
Yeah, I know. We only got a piece.
Yeah, I know. Listen, but you point things out to people. It's between 54, 55. It's over 59 now. That's $5,000-$6,000 move.
Took the money and ran.
Took the money and ran.
Yeah, but market as a whole looked like not good.
And gold is basically unchanged. Silver's basically unchanged after having big moves in both of them. Almost $4 in silver, which is a huge move, and gold about $100, which is a decent size move.
Yeah, where's it at now? Is it back to
ratio
above 60?
No, 59.25. So,
biggest movers to the upside here. So it was kind of a mixed bag. You're seeing a little bit of a bid in some of the software names. So ServiceNow, I think it was approaching 100. Yeah, it's right around 100 here. Bouncing a little bit from the lows there. Of course, we talked about Microsoft, which had a big day.
I missed that one under 100. I wanted to kind of nibble on there in ServiceNow. Markets were okay, not great.
If you look at IGV as kind of just a software basket, it's had a nice little move higher here. A lot of the cyber stocks, which I've been pounding the table on, those have moved a lot higher here. CrowdStrike nearing 600. I mean, it's moved $200 very quietly. PanW, another one in there. But seems like service stocks are getting a little bit of or are putting a little bit of a floor here after, taking it on the chin. Adobe's on this list, ServiceNow, Workday. You're getting kind of bid in the junk when everything else was kind of selling off. We've talked about that before of like, how much lower do they go on a weak day in the overall market? You see some buyers come in and ServiceNow at 52-week lows.
True that.
On the downside, so you had GLW, you had Coinbase in there. Bitcoin was selling off a little bit. Micron has been crazy to all directions. Intel, SMCI, AMD, a lot of the semiconductor names kind of taking it on the chin there into the weekend.
Good one.
Give you a quick little heat map here. Red across the board. You had Apple relatively strong. Energy was relatively
There's your big green Microsoft you talked about.
Yeah,
earlier.
Microsoft was really the only one in the tech space that was, outperforming the group.
Yeah, you had all the oil stocks there's your energy on the right-hand side there that were all green. We'll see what they do today. We're going to take a quick 90-second break and come back. New day, new time, new bat channel. We'll take a quick 90-second break and come back. We've got Confirm and Send right after this. Back in 90 seconds. Your viewer emails.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. And you know what that means. Time for a little more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Not what I went to bed with last night. Last night, even the S&P's down around 30 handles plus. Got down to around 50 at one point that I saw. You can see them down here at 43.75. Up 15 handles right now. NASDAQ, your leader in the clubhouse with the Russell. And NASDAQ up 160. Again, under 29,000. Now over 29,000, significantly, 29,000, just about 400. Russell up 15 on a percentage basis. That's basically the same as the NASDAQ, and the Dow up small 33, kind of with the E-mini S&Ps. Volatility, you talked about it Friday, really never got any legs underneath it on this down move, a big down move, one of the bigger down moves in the market that we've seen in some time. Caught a little bit, tiny bid this morning when E-mini S&Ps were down around 50. Now down 31 cents, a 1.5% move to the downside. You can see here at the low end of its most recent range, after trying to catch itself a little bit of a bid last couple of days going into the weekend, at least that weekend risk. Bonds are up 7 ticks, another big move here, down to 110.05, up to 111, 110.27, but you can see they too are on the low end of their range. Bitcoin doing the same on the low end, if not the lowest end of its range, down $1,700 to 77.5. Ethereum doing the same, maybe even more on a percentage basis, down 78. Now you've got oil under 199 and change after trading up to 104, basically making new recent highs here, highs that it hadn't seen since the end of April. Now down $1.25, as low as 98.60, up to 104 and change. Big move there. I would imagine volatility is going to stay bid-ish in there just because of the size of the move. Gold up $8, reversal here, traded under 48. I mean, here, so far, everything has been on the lows for Sunday night's move, and now we're higher. We'll see how the rest of the market ends here. Silver up 18 cents. It, too, has had a big move. $4 is a huge move in silver, even bigger on a percentage basis than gold. Go.
Let's do it. Confirm and send.
Let's go. Monday, May 18th.
Unbelievable.
First slide, please.
Birthday's coming up. You got a gift for me?
Yes, actually, I wanted to talk to you about that.
Oh, wow.
Yes.
Oh,
Yes.
is it? Surprised you even remembered.
Have I? I have never forgotten my children's birthday.
I've never forgotten your birthday.
No, but there was another child who forgot. I started trading last year, and the recent all-time highs are making me nervous. I keep wondering if markets will ever feel affordable again. Is this a legit concern, or do you think there will always be reasonably priced product to trade as markets grow larger, with volume eventually shifting toward those products?
It's a great question. I wish I knew the future. I mean, I think everybody feels this way. I mean, regardless of how much capital you have, like prices, numbers have gotten big, and I think obviously the change in markets via prediction markets, betting, option trading, all those things have gotten more prevalent just because it's hard to just buy shares. Like, that's an expensive proposition to just, buy 100 shares of stock. Like, how many people can go out and do that easily? 100 shares of NVIDIA is $22,000.
Yeah.
It's a lot of money.
Yeah.
So yeah,
well, that's why stock volume has gone down and derivatives option volume has exploded to the upside.
But there's all sorts of like Polymarket is a derivative of a derivative.
Yeah. Sure.
So I mean, like,
you're a derivative of me.
It's true. Yeah, I mean, like, if you're asking me, like, is there a value proposition? I mean, maybe you look at a Microsoft and you say that's a value stock.
Yeah,
like that. Some
markets will never ever go away, and they're completely affordable. If you use derivatives, you may have to learn how to do something as opposed to just simply trying to buy or sell.
But they always seem high.
Was Bitcoin affordable? I mean, it used to be, it used to be $20.
Yeah.
Now it's 78,000. I mean, is it affordable? That realm of
context. But then people don't want to buy that. You know what I'm saying? Like when prices go down.
Some people do, but
no, I know.
I'm trying to use an extreme case in a small period of time as opposed to the market, which is hundreds of years old or 150 years old, whatever it is, versus something that's 15 years old, like a Bitcoin.
Yeah.
So,
but everything when we're at highs.
But you could trade an option strategy on $1,000 stock uses $100, $200, $300. I mean, there's always going to be a market there. Never going away.
But it's always at highs. Everybody thinks it's expensive.
Of course.
I mean,
I remember when the market was expensive at 700
for 15 years.
Yes.
And it goes higher, and like that's just.
I remember the Dow at 1,000 was expensive. It's 49,000 and change now, flirting with 50,000.
Yes.
1,000, 1,000. I thought it was expensive.
Yeah.
Next one, please.
Over the weekend, I read that Kevin Warsh wants to measure inflation in a way that is different from how the Fed has traditionally measured it. Based on Warsh's approach, inflation is much closer to 2%, of course. I don't care how it's actually done, and I wouldn't understand anyhow, but would this approach change how bonds are trading? In other words, do bonds ultimately tie back to what the Fed is watching, or does it not matter?
He's the chief of the Federal Reserve now, right? I mean, he's coming.
I don't know.
Not yet. He's coming on.
Yes.
As the new chief. So those who don't know what the name is. I mean, I don't like when they change the way if they change the way the calculation is. The way I read it, and I don't know a lot about the subject, it's more about them doing the mean versus the average. The average
the mean versus all of them.
Right. So an average is you take all the prices and you come up with what the average is. So you have 10 prices and you take them all into consideration and you come up with an average price. The mean is when you take out the highs and you take out the lows. I learned this from our astute research team. And then you get a number. I mean, it's 6 of one, half dozen of another, but I really hate when they measure this in a different way than they've done it traditionally, because then you'll always have somebody saying, well, if they had done it this way 20 years ago, inflation would have been this. And if you did it last year, inflation would have been this. That always makes it a little bit more convoluted, which is probably the reason why they're doing it. Yeah. But I think all these numbers are silly and stupid anyway.
Yeah, it's all silly and stupid and crap.
Yeah.
I mean, you take out the stuff that's inflating and like numbers look better.
Yes.
Right?
Yes,
like
of
you
course.
take out gas and food and, inflation is zero.
Yeah.
You know, like your TV and your car.
Yeah, I take out Vinny out of my equation and my inflation's down to zero.
Yeah,
I mean, you know.
But is that real? No.
Right. No, you still got to pay for them. Right.
Yeah.
Right.
Yeah.
What it is.
Yeah.
Next one, please.
Yeah, I saw a great tweet that all the things that have taken our attention have like 0% inflation. You know, you talk about like TVs, iPhones, computers, like all those things are so much cheaper.
It's good
but the stuff that, you know, really matters, your gas, your food, your housing, has gone just parabolic.
Yeah, it's a good point. Definitely
interesting.
Yeah, I get it.
I'm reading a book about the 1987 crash, and in it, it's discussed the Hunt brothers cornering the silver market back in the early 80s. Do you think it's still possible to corner a market? For instance, could a sovereign wealth fund pull it off? Can you corner a market?
Yeah.
I think you can in some.
I'll put it to you this way. You're not going to be able to do it.
No.
I'm not going to be able to do it. Well, some people I know might be able to do it, but most of the people I know are not able to do it. It has to be in a liquid market.
Yes.
I don't think it's anything to worry about.
Like Avis was a cornered market. GME back in the day was a cornered market.
Yeah.
I mean, but it's hard to it's hard to say that like the other side of the coin isn't also making money. The market makers and other funds are participating in this. It's not just like one person, you know, on one side's taking all of the spoils.
Yep.
Last one.
Which trades do you better remember, your winners or losers? I ask because I'm up this year. Congratulations on your wealth, my lord.
Yes.
But the only trades I seem to be able to remember are the losers.
I would say the losing trades. I mean, the winning trades, they're great and they're a lot more fun. I'll say that. But they come off the table and then it's over and you move on to the next one. The winning trades are the ones you remember that just stink and you battle and you wish you didn't have it. You wish you didn't add. You know, those are the ones you remember. I'd say the losing ones, of course.
Totally agree. I think I'm on the same side of you. But you know what? They all come back into they jog your memory when you go back to them one at a time, and then you realize what happened in a prior life, which was the last trade.
Yeah.
Let's take a quick 90-second break and come back. We've got a little bit of an option jive coming at you. We'll be back in 90 seconds. Even the S&P's up 9 now. We're just up 15. We'll be back in 90 seconds. TT Live.
You guys are out.
Thank you.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive. We are back. We got ourselves a little bit of an option jive. Even the S&P's up 9, NASDAQ up 130, Russell up 9, and the Dow bucking down 19. Go.
Let's do it. Research Corner, we'll look back at last week and some things coming up this week. Let's do it.
Ready.
So you had the summit in China with Xi and Trump. You had, I guess, some positive news out of it. I guess they didn't kill each other, so that's good. But it seemed to be mostly a nothing event for me. Warsh took over the Fed, so you've got that coming up where you got the change or potential change in how inflation is calculated, as we talked about in the confirm and send there. 10-year yields hit a one-year high as oil climbed back above 100, so bonds are at lows, yields are at highs. We're just off of it here with the slight rally we've had in the morning session here. And then 3 of the 4 major indices ended 6-week winning streaks. Only the S&P 500 barely kept its run alive. So you had the first slight pullback, tiny, microscopic. You need binoculars to see it.
Yes. Some would say it was inconsequential.
Yes. Coming up this week, you got some FOMC in there. I guess Putin is heading over to China now. NVIDIA earnings, I think that's kind of the big thing.
You go to China, I'm going to China.
No, we went first.
I'm going to China, you go to China.
First, so we front ran it.
It's like going to Mars. Yeah. I mean, the moon. Yeah, sure.
Yes. NVIDIA earnings, you have an FOMC minutes. Those are kind of the two biggest of the week. NVIDIA, I think, is going to be the event of events.
Do you think it holds volatility up for the rest of the market? It hasn't so far.
I mean, we have the expiration for vol futures middle of the week. I think the day of earnings for NVIDIA on Wednesday. Don't they expire on a Wednesday?
The 20th, yes.
Yes. Mm-hmm. So, maybe that's a source of volatility. Mm-hmm. I don't know. NVIDIA, I don't see how the numbers could be bad given the rest of the space. So,
yep,
we will see. So when we look at the last 2 weeks here, you had a little bit of a pullback last week. The Russell, really the weakest of the group here. Everything else pretty inside. I mean, you've had just absolutely skyrocketing moves for the better part of May and through April, really. So a tiny bit of a pullback last week. I don't really hold much weight to that.
No.
It was. No vol, no. I mean, it seemed pretty mundane.
It almost seems so natural, it's scary.
Yeah.
Like you're getting a little bit. I mean,
you got to get a pullback so you can buy them a little lower for you. Yeah, you can't just buy them higher every single day.
So you look at this. I mean, we went nowhere.
Yeah.
I mean, S&P was basically unchanged, slightly green. NASDAQ went nowhere, slightly red. Dow went nowhere, slightly red. The Russell, which I think is the least not important of the group, but the least traded from our point of view, went down by 2.5%. I mean, it was really a sideways action with new highs and closing near the lows for the week. We've been chopping around this big range. Got about 130, 135 handle expected move for the week. I think you stay inside that. Maybe we test both ends even. Who knows? I don't think we go anywhere is what I'm trying to say.
Yeah. I would love a go nowhere week.
Yeah, I think we could use it. Yeah. I think we could use it.
That'd be nice.
Yeah.
Reset a little bit.
Yep.
When we look at expected moves, so you had a little bit volatility kind of stayed bid. It hasn't gone significantly lower, but it hasn't moved higher at all. We've sat in this like kind of 20 handle for vol futures. The VIX itself, around 18 and change has kind of been the spot. You can see our expected moves a little bit wider this week going into NVIDIA earnings. Not a shock there, but you do have a little bit of extra juice here into this week.
Good.
We will look at IVR across the board here. So you had S&P volatility, bond volatility kind of popping up a little bit here. You had, gold and silver volatility have come in very, very significantly into that down mood. Crude oil volatility has been super, super low. You had a little bit of a bid in crude volatility into the end of last week, but we're talking about a 70 handle. You're getting 104 prints on crude oil, and volatility is really going nowhere. It kind of tells you this is kind of the spot, or at least that's what it seems like. We're going to be in this like 80 to 100 oil price for
all the futures
a long
are
time.
Pointing to that now. Remember about 2 weeks ago or so, maybe even 3 weeks ago, I was looking for a little bit lower oil in the back month. Now it's been kind of upticking, as you say. Volatility has been 72. If I asked you what it's been for the last 2 weeks or so, you'd say it's around 72. It got up to around 75, got down to around 69. It's been hanging out right in here. So it looks like volatility is pretty straightforward in oil. And I think oil vol is trading for around 47%, the IV rank in there. Monthly implied volatility is in the 70s, pretty high, 60s, 70s. So oil's still in play, obviously. But it looks like it's perfectly priced on a volatility curve.
Yeah. It's not getting that same
oomph that it had. Like anything gets. The first time, second time, third time it happens, you get that volatility spike. Hey, we're going to 200 in oil tomorrow. We may go to 200 in oil, but we're not doing it tomorrow. No. So volatility is contracting. I mean, I don't know where oil is going is the point I'm trying to make.
Biggest movers on the week. So you have the Momo stuff to the upside here. Micron, SanDisk, the leaders in the group. Sienna is in there. You had some oil names, which were really strong. You had Mosaic, fertilizer stocks, MOS. CF is another one. Those had bigger moves, giving it up a little bit into the end of the day on Friday. But those have been kind of wild to the upside. On the downside, it's a bag of kind of not much that we trade. Ulta is in there. Adobe, we haven't really traded in quite some time. APP, Axon. It's been a mixed bag.
Mixed bag. Yep. Choose wisely, young grasshopper.
When we talk about the dollar, so the next slide here, DXY rose about 1.46%, a 96th percentile weekly move, breaking out of a 3-month range, which with one of the strongest weekly gains on the year. This is heavily weighted towards the euro and the Japanese yen, so you just have to take that with a grain of salt. Those are the two, currencies that move pretty significantly. Euro fell about 0.59%. Pound fell about 1.21%. The Japanese yen weakened with the USD Japanese yen trading at 158. Dollar was strong. Moving the bonds today is probably reversing a little bit of that as we see that down slightly this morning. But a big move.
Big move.
Gone nowhere, though. Dollar.
Big move going nowhere.
Dollar has been at lows or just off lows for a year now.
Yeah, Euro's got decent IV rank. British pound has decent IV rank, 60s, 70s. The volatility's been expanding in there. The pound, the euro have been going lower, especially the pound. Now the pound caught itself a little bit of a bid this morning.
Yields have been skyrocketing. So the 10-year yield closed at 4.6%. I think we got into a 5-handle this weekend.
Let's take a look here in TLT.
Yeah,
talking about what do you mean by 5-handle
on rates on the 10-year?
Oh yeah.
10YY is or 10Y. I'm sorry.
10Y.
We got it. We got there in the 2-year.
Well,
2YY is a 2-year yield.
Or it says 2YY is about 3.8.
No, I don't think that trades anymore. 2YY. Maybe we don't have it anymore.
It doesn't show any volume or anything, so
10-year yield closed at 4.66 or 4.6%. Its highest weekly close in over a year. TLT obviously has been weak. 93rd percentile drop there. Bonds have been duty.
That's a technical term, sure.
Technical term.
Yes.
Scientific term.
Yes.
SPX kept its 7-week streak alive, gaining 13% over that span. The other three indices snapped 6-week winning streaks, with the Russell leading the pullback at minus 2.3%. There's your microscopic dip. See that little one?
Oh, I see it there.
Yeah, you see it?
The end there? Yeah.
You do one of these?
Yes.
See it there. Unbelievable stretch there. Just been a face ripper.
Been a face ripper. Totally agree.
For earnings, so some big moves that we had last week. I think Cisco was the only one that we really traded. What's that at today?
CSCO?
Yeah. 117, down about $1 here pre-market. Should help us a little bit. But we need it down below 115. We did an iron fly there.
After trading 148 hours ago, right?
Yes. 48 hours of trading.
Sorry.
Until last week.
Yes, I throw out the weekends.
I know. If the market's not open, who cares?
That's right.
HIMS on the downside, big move after earnings there. But you can see most of the earnings have been big moves in either direction here. But when you look at the total breakdown, just up and down, it's very much split here. 48% winners, 52% losers in terms of like the move, but the average return has been upside. So if you think that, or if you feel that these earnings have been face rippers to the upside, it kind of has been.
Yeah.
Usually these numbers are pretty flat, like across the board. You have it skewed to the upside because a lot of the stuff that's kind of in focus right now, these semiconductor stocks specifically, have just been astronomical moves to the upside. So, a little bit of that is kind of in those data points there. And then when we look at upcoming earnings this week, you had Baidu this morning. Is it still up?
Baidu
141.51. So we're up about $6-7.
Right where it was before.
Home Depot tomorrow morning. That stock has been beaten down. It's basically at lows here. You have Target, Lowe's, Nvidia on Wednesday. Nvidia after the close. That's the big boy of the group. You got Walmart, John Deere. John Deere has been a wild ride there. Walmart nearing highs. So definitely some interesting ones later in the week today, or later in this week.
Let's take a quick 90-second break, and we'll catch the opening bells. Even the S&Ps are up 8.5. We'll be back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, the opening bell in just about a minute. Even the S&Ps are up 7. NASDAQ's up 116. I'd like to say that's where they were all morning, but they're not. They made their lows Sunday night. Even the S&Ps Traded all the way down to 73.75. NASDAQ traded down about 400 handles lower than that to 28.9 and change. Bonds were 110.05. Definitely a different market than what we see this morning, right? A little bit of a small bounce going into from Friday's close, which was quite weak. I think we closed on the lows.
We just reversed a 50-handle move in the Sunday futures.
That's right. That's right. Yeah. We were at NASDAQ was actually green for a quick second last night, shortly after the opening.
Yes.
And then sold off. We opened down around 10, 15 handles and traded up slightly for a second and then promptly went lower after that. Let's take a look at what's moving around the market here so far. Even the S&P's hanging steady, up 7 or so. Let's go to our high option volume list, see what's moving to the downside. MSTR down around 9, Meta down around 9, Coin down around 6, AppLovin down 4 or 5, UNH down around 3 or 4, Microsoft down 4, AVGO down 4, Circle down around 3.5, Palantir, BE down 3 and change, Palantir down around 2 or so, Google down around 1.5. Let's go to the upside here as even the S&Ps are up 4. On the upside, you got MU up $25, SanDisk up $20, RKLB, that's your favorite Rocket Labs, big 10% move to the upside there. SMH up almost 2%, that's $9 and change. Qualcomm
Rocket Labs
up 6. Intel, you had to worry about it? Don't worry about it anymore. It's up about $6, 114 and change.
It's a huge move in Rocket Labs. Is that sympathy play for SpaceX? That's what I'm thinking. ASTS as well up significantly there. I do have some sad news though.
What gives?
The DraftKings sportsbook at Wrigley Field closing after 2 years.
Huh?
Sad day.
What is that?
Sad day.
What does that mean?
Oh, DraftKings stock unchanged though on the news.
Well, there you go. It means nothing, I guess. I wonder why.
Why do you need a physical location when you could just do it?
Just do it on your phone.
I mean,
yeah, that's what everything with you kids. Yeah,
kids.
Apple down $2.
Just give me the you people.
Apple down $2. Google down $1.
I can't do anything in those yet.
Uh-huh.
I mean, like, what are you doing?
Tesla down $4.50. No, I don't think you can do anything with them either.
What are you doing, Tesla?
Volatility in by 33 cents, not moving, not going anywhere.
What do you do in Tesla? What does a new subscriber do in Tesla into SpaceX? What did we just get? June 11th?
Yeah.
Something like that?
Something like that.
What are you doing there?
Let's see. June 11th is inside the June expiration. We'll get you right to expiration week or so. July volatility is 52. June volatility is 50. I think you got to do something just in June because the June-July vol differential of just about 2% is too big.
What do you do? It's not that high though. Volatility. It's got a 50 IVR or a 50 implied volatility. IVR at 21. Like it's not like it's like high.
I know it's high relative. I mean, it's
Yeah.
been in the low teens to single digits for most of the last 2 months.
Yeah.
I don't know.
Don't do anything?
Maybe like some sort of, I know you're going to hate this because it's going to be a slow moving trade, but some sort of put broker wing butterfly to the downside, like a 90, 80, let's see, 90, 80. There's not a lot of time left. 60. It's only going to give you a buck credit, less than a buck.
That's what I'm saying. It's like
It's horrible.
so cheap.
1 by 2 takes up too much buying power.
You $7,000-8,000 to
Yeah. But you can do something like the 90, 375. That would be yeah, I agree. Probably
It's a tough one.
It's a tough one. It's a tough one. Maybe it's just a vertical spread.
Mm-hmm.
You know, if you want to play the dip is the way I would do it. But even the S&P's down 2.
Did we do something in Baidu? What's that?
I don't know. Can we?
No, did we? I thought we had something on there. I think we traded Baba.
We traded Baba, yeah.
Baba up $1.
NASDAQ up 90. Russell flirting with unchanged. Dow down 56. Volatility in by 20.
AMD up 13. It's like you get 1 day. You get 1 day of downside. That's it. That's all you can get.
AMD up 13. Ivy rank of 83 is pretty good in there. Doesn't have any earnings or anything. June, July, and here is about the same. You could do something in there if you wanted to go to the downside or the upside. You could do whatever you want on a diagonal spread there. You have a directional bias. We're kind of no man's land.
We're in no man's land, and nothing is.
Would you think you would say that no man's land at all-time highs or just off of all-time highs? We'll just do GDX.
I had a ratio in GDX. I did it 1/3.
GDXJ.
GDXJ. I'm sorry.
That's the junior miners. Yeah.
I did it 1/3. I mean, the markets stink in there.
You just closed this one.
I closed. I did it at a 32-cent debit, and I closed at a $2 credit. So I took a couple bucks out of it.
Yeah, take $2.30 some odd cents on that. That's a great trade.
But it's not. That's the sort of stuff I'm looking at right now. Like I'm not. There's nothing moving enough to move the needle for me position wise.
Yeah, gold silver ratio spread trading 58.70 or so. It's come in just a little bit as gold is actually up $18, reversing its move now.
Do you do anything in that? I mean, silver's like at lows too.
Recent lows, yes, yeah. Silver's really come off. I mean, it's so hard to do after seeing it trade at 74 and now trading near its highs, up 1%, to do something now and there, but basically unchanged. If you didn't like Friday's close, you can do something about it now. Hopefully you did your research at home and you went over all your positions. And you said, what'd you do in service now?
I just had a leftover call in June that I just closed out of, and I'm going to roll into something that's like long July, short June now.
Long July.
Diagonal spread getting something.
Okay. Yeah. I mean, here's one of the first examples of the ones I've put up here where you actually have July trading under June. So really from a setup. Now you did it with the weekly options, 25 days?
No, that's a June monthly. Oh, did I fat finger that?
Yeah, you fat same thing.
Oh boy.
Oh boy.
Yeah, I'm just gonna
you
leave
a bad boy.
I'm just gonna leave it.
You are a Johnny.
1 week difference. I mean,
the markets are exactly the same. I'm looking at June markets here, about 70 cents wide, dollar wide on the 101s, and I go to the June markets you just did, maybe a little bit wider.
Yeah.
Fat fingered mistake. It's okay. You're good, not great. You'll get there someday. Even the S&P is down 6.
Volatility upticking a little bit.
Volatility upticking a little bit. Was in by about 30 cents, 20.50 now. Yeah, it's true. We'll give you that.
USO position is starting to work a little bit. What's oil volatility at? Yeah, it's come in 71.
We were talking about how it was 72 and change. It's now 71, just over 71, 71.03, down $1.32, which was closer to 72.5, which seems to be the mean.
Nvidia, I'm all over the place. I'm just short so much vol in Nvidia. Wrapped right around here. If we have a nothing move in Nvidia, it's going to be a home run.
Yeah,
which would shock just about everyone, right? Nobody thinks we're
look at the volatility in Nvidia going through the roof here.
Yeah.
I mean, I got to imagine the call skew is through the roof here too, even in June with 30 days. Let's take a look. Stocks right around 226. You go $10 higher or so, you're looking at $9-ish options. You go $10 lower, and you're looking at $7-ish options. So you got about $2 worth of skew, equal distance away. $25 expected move in June, but for earnings, you got just about a $15 expected move on those options that expire on May 22nd. Breakfast opening here, except for Bitcoin. Bitcoin down around 2,300, down almost 3%. Ethereum down just about 4%. On the oil watch, 99.80. Hanging out just under 100, big wide range there, down 1% right now, not helping the market to the upside, not hurting the market to anywhere. Friday, perfectly priced.
Yeah.
Yes.
I wish I had some.
I wish I had something for you too, but don't worry.
Hold on. I closed out of some IBIT. I did call ratio spread. I've been long the stock since I wasn't gray haired, which is now, a couple months. But I just closed out of some calls that I had as part of a call ratio spread. No point in capping the upside there. So I take off. I did a calendar spread with Mikey in Costco.
Okay.
This spread, who knows where this is going to trade, but I'm gonna do my.
You're gonna give it a shot.
I'm gonna do my
college try.
I'm gonna do my due diligence here.
With price discovery, you mean?
Yeah.
Oh, good luck.
These markets are like $3 or $4 wide.
Yes, the active month, Justin, is N in crude oil. Matter of fact, it's the only one that's trading here, unless you're looking at the Qs, which are 60 days out.
Man, this thing.
Mm-hmm.
There we go.
Beautiful.
So I did that at
Costco
at 12.62. I closed at
17.62. Great trade.
Yeah. Do you have any feel?
Show a little enthusiasm. Pat yourself on the back. Hurt yourself. Pat yourself on the back. There you go. Good job. I'm not going to do it. As the market goes unchanged here, even the S&P's down 4, NASDAQ up 27, Russell down 8, Dow down 30, volatility in by 19 cents. It really is basically unchanged. Maybe the Russell weakest of the group like it was on Friday.
Do you have any?
No. I have no suggestions. I have no. Apple has rallied. It was down around $2.
Oh, thank God.
No, Apple's been kind of a reverse indicator. Like no matter what Apple does, the market.
It does have like no correlation.
It has no correlation. I shouldn't say reverse. I shouldn't say an opposite to what the market does. If Apple goes lower, market goes higher. No, it just has no correlation. As a matter of fact, the correlation is 0.27, relatively low.
I took off the rest of the Natty Gas. Natty Gas having another decent sized move to the upside.
Yeah, over $3.
I feel like I'm going to miss out on that one because that's been caught up in the straight closure, Middle East kind of situation.
Yeah.
I feel like we're just
That opening his pool.
That's true.
Using gas to heat it. Yeah.
Ooh, that's expensive. It just got more expensive today, 1%.
Yeah.
Brutal.
Yeah.
Sorry, I'm so
Don't worry,
sorry.
they capped you in.
You need some help with that?
No, thank you. I appreciate it. That was very nice of you to ask. Maybe someday, but not right now. But they, don't worry, they locked us in February when it was trading at $4.
Oh, there you go. Perfect.
Yeah. That's what the.
Is that like a?
That's at least what the what do they call them? Utility companies say.
Oh, they tell you. Sorry, your bill.
I go, no, please don't.
They
don't worry, your rates won't go any higher. We locked you in.
They lock you in right in the middle
How can you
of
lock
the
me in at
winter.
4? It's at 3 right now. Well, we did it last week. No,
So then, do the prices?
I'm kidding. They don't tell you anything.
The prices now, do they lock you in for like later on in the summer?
It would be nice, like if you could, like lock yourself in at a period of time. People would be a lot more educated with their pricing. Even the S&P down 9, quietly down 9.
That's basically a crash here.
Basically a crash on top of the unchanged market that we had.
Oh, look at BE.
What's BE doing?
It's actually down.
Come on.
Shocking.
Call the plunge protection team.
Somebody's got to fix this.
260. Where is the plunge protection team? Nobody talks about that anymore. They went away?
Well, it's just taken over the market. That is the market. There's no, you don't even, it's just every day.
Yeah, but unlike last week, you do have, bonds trading 110.25. They hit a little bit of weakness in the market. Bitcoin 77, not 81, like it was last week. Oil $100, I would say, is high. I know it got up to 104 and change or so, but I would say that oil is high. Gold and silver catching a little bit of a bid. If you wanted to make a bear case, which I don't want to make a bear case, but if you wanted to, you got some complementary things trying to put a little bit of a damper on the market.
Something's happening.
Volatility down 16 cents, has rallied about 25 cents off its lows. But nothing's moving.
Mm-hmm.
Yeah, that's what she said. I'm going to take a quick 90-second break and come back. We got more. Nothing says Monday. I know if you think that this market not moving right now says it's Monday, no, you'd be mistaken. Nothing says Monday like this, man. That's right. Dr. Jim is up next. The Skinny on options, abstract applications. We'll be back in 90 seconds with Dr. Jim.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was not a paid, you're not getting paid for this advertisement.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son. And you know what that means? No Dr. Jim, because he's on vacation.
We forgot.
That's on.
Okay.
That's on me. I'm gonna take the ball.
Oh, thank you.
Yeah.
I'm surprised you wouldn't use that opportunity to throw me under the bus again.
No. Why would I want to do something like that? I'm your biggest supporter.
Never do that. Of course.
You know that.
I know. Joking.
Let's take a look at what the market's doing.
If you got some questions, trade ideas, throw them in the chat. I need something. Nothing's happening. So if you're finding something, I am willing and able to throw some capital around. But go on with the market update. I was looking at kind of Google too.
Okey-dokey. Well, let's take a look. So far we've had nothing to do about a lot. Even the S&Ps are down 3. 550 cars have traded so far, 550,000. That's relatively in line, lower end. Friday, if you remember, was significantly higher than that. NASDAQ down 43, really nothing going on there. The more you kind of sit, I think the more it's for the bulls, in my opinion.
Yes.
Russell, which was the weakest of the group, is actually unchanged. The Dow is up 100. Volatility's in by 21 cents. Volatility has been a tough indicator last week. It really didn't expand anywhere. It really didn't contract anywhere. Now it's near the lows, lows to middle. You can see here where it made its new low lows, 2025. Stayed kind of bid going through the weekend, had a spike up last night, met by sellers. Bonds looked weak. They're 110.30 now. They are weak on the low end of the range, but not anywhere near their low lows. Gold and silver have done the same thing. Oil, which was almost 104 and change, is now under 100, still on the high end of its range, still with a good IV rank. Across the board here, you got MU, the usual suspects, up 15. Costco's had some two-sided action.
Yeah.
It's now up 11. Crowd is up 10. AMD. Google has reversed. Google traded down at 394. It's flirting with 404. RKLB has been strong. This is actually the lowest that it's been, up $7. I'm just talking about for today. Your service now got over 100 at 99 and change. Let's see what's bringing us to the downside here. SanDisk down 13, but that moves $1 a clip. Even the markets between the bid and the ask are over $1. AMAT up 13. Down 13. MSTR down 12. Your BE that you mentioned a moment ago, trading near its lows, down $7 and change. Meta can't catch itself a bid right now, trading 600 and change. Meta in the, big wide range from around $870 to about $525, sitting at 600. Much to do about nothing right now as all four indices just turned green.
I did a June. I see some people chatting me. Google move is SpaceX because they have a SpaceX share. They bought shares.
Sure.
SpaceX. So that's a sympathy play there. So I did the 410, 425 call ratio spread in June. I did it at $2 and
50-cent credit, trading right there at mid-price. Market's a little bit wide.
Yeah.
That's a bullish strategy.
It's bearish. Delta.
It's bearish. You did 1 by 2. Oh,
Yeah.
I'm sorry. You did a call one. I'm sorry. They did a put one. I apologize.
No, I did call ratio spread.
31 days out.
I know it's shocking that anybody would put any risk on the upside here.
Yeah, I don't know. I don't know what's wrong with you.
I know.
The way you were setting it up, I thought you would have done a put one, right?
I was looking at both. I went with a wide call one. I said, you know what? If we go up another 5% here, I guess I'll take some heat. 10% is where I start. Like 10% to the upside is where I start to get some heat on that trade.
You will take heat on that trade, and if we sit and volatility doesn't go anywhere, I just put the time frame up to 18 days or down to 18 days from the 31-day trade that you made. It'll be trading for around 60-ish cents or so. So you'll make yourself $2 on a sit market. Sit, boo-boo, sit.
Or chop higher.
Or chop higher, volatility contracting. IV rank is 52. This is definitely a vol play in here too, because you got an extra unit on the upside, right?
Yeah.
Okay.
Metals are
beautiful.
Do I take off some of my gold? I have the micro gold. I feel like you got to hold that. Right?
Yep. Gold /MGC up $22. Again, didn't think this was going to happen this morning, although with volatility in by now 30 cents. And I said the longer we sit here, the more it seems like it goes to the bulls, but I think we're going to chop around here. What about a 0 day?
Yeah, you want to do one?
SPX, sure. Last week wasn't the best for us.
No.
Right?
And you'll see that in our 0 DT piece. I sold some calls in June in GLD against some longs that I have in July. I've been kind of scalping out of these calls on the upside into these moves because gold has had some volatility to it.
Yes,
price volatility.
Yes, it has.
Actual implied volatility is basically flat.
Yep.
It hasn't increased. All right, what are you thinking?
I'm doing you want me to do a $15 wide one? It looks like it's trading for around 385 or so, 74.55. I'm just going to 20 delta on each side, pretty much. I mean, I can move it up a little bit if you want me to, and collect 405. What do you think?
You want to do just a put? What do you want to do?
No. Just what strike do you want? It's $5 difference between strikes. The 20 delta is 33.90.
I wish we had done this when it was lower. You do the J.
Oh, I wish.
I wish.
But your call spread would have been lower. So
yeah,
it's 380 versus $4 and change if you move it one strike to the upside. This is 3 short deltas. This is 2.5 short deltas.
What do you think about a Jade Lizard here?
Go ahead.
20 points wide on the puts, 10 on the calls.
Sure. Like a synthetic Jade Lizard you're doing in SPX.
Yeah, you have some risk.
It's going to use too much buying power.
Yeah, of course.
To do a naked option.
There we go. All right.
And you did it for a 650 credit.
So you have $350 in risk to the upside because you do it $20 by 10. 10 on the calls, 20 on the puts, using the same short strike. I mean, the delta wise.
Well, you went closer to the 30 delta on both of these.
Yeah. Okay. Same short delta on both sides. Your overall delta on this position is it's nothing. There's no delta.
A little bit long, you got risk on both sides.
Yeah, more risk on the downside though. That's why I call this a long delta play, even though there isn't any delta on the entry of this trade because you got like 2 deltas.
Yeah, right. Yep, you're right.
2 SPX delta.
Yes,
I guess is 20 if you're looking at SPY.
Beautiful, good job.
What else we got here? What do you do with these bond puts? They're not. We're too far out to do.
Yeah, maybe on a down tick you could sell some bond puts.
Yeah. What else there? Anything else popping up to you?
Man,
I saw UNH was down a handful. 7.
I mean, we talked about an SPY, SPX. I would probably go to SPY because it's smaller. A June, July diagonal spread. We talked about
calls or puts?
Calls, I was thinking, but I mean, it's entirely up to you. They've moved a little bit this morning, so not quite as good as it was before.
Yeah, I mean, I'm basically flat delta there after rolling.
Mm-hmm. Can't be flat delta in this bull market.
I mean, I have some dynamic short delta. I've been doing like put diagonal spreads, like kind of on a ratio, doing them for small debits.
Yeah,
because I'm short at the money premium in both SPY and the Qs and like SMH, and I did similar things in like BE and AMD, which I have a lot of short delta.
Sure, very nice. Good job. Bonds are up 11, trading just under 111. Apple's down $2. Anything? You have an Apple position? Anything to do with Apple? IB rank of 49 is pretty good. It's at or about all time. I mean, everything looks exactly the same.
I know nothing is good. Nothing's gone anywhere.
Nothing's gone anywhere. Palantir's been weak. It's up 70 cents now. So you missed that. You stink.
Position there. Oh, it's now down, or no? It's up.
No, it's up 70 cents. Or
it was down
30 cents. It was down.
Oh, yeah, what happened? It had a
Palantir traded 131.
And then it just had a straight gap up.
Yes.
To 134.
Yes.
I got a little butterfly on the downside there. I bought in the risk last week.
McDonald's up $3.70. I need that. I actually need a little bit higher right now. Actually, I'm in between my 2 short strikes. I need it to sit right here, but it's working out today. Microsoft unchanged.
Okay, good.
Yeah. Nike up 40 cents. Go, you big animal. NVIDIA unchanged. Palantir, I just mentioned, up 75 cents. XOM down $1.66. I actually have a fairly neutral position in there. Basically unchanged. I butchered it. I had a bullish position in there. Couldn't stand the heat to the downside. Rolled down calls at the worst possible time. All on option trades today. You can see it there. I'm basically down around 60 cents when I should be up $1 and change or so on that trade. Tesla down $6. That's all I got.
We missed our opportunity in Tesla.
We did miss our opportunity in Tesla, unfortunately. Foiled again. All right, you ready to take a quick 90-second break? What'd you just do?
I just bought back. I had some diagonal spread in PDD. I just bought back the calls. I traded at like $3. I bought them back at $1. I'm still long and losing money on that trade, but stuff that has just come in, I'm just taking off some short premium. Volatility's at lows.
Yeah, it hasn't really moved either.
I'm just looking at positions that, where things have gotten cheap and just taking them off the table. So you don't have that, you're not capped.
Well, we put on a 0-day trade, which is basically unchanged.
Yeah, we got to put in an order to close that. What do you close it at? $1?
You did it for $6. What's that?
Close it at $1?
Sure. I mean, last time we did this, we lost $4. I mean,
that's true. That's true. But no, that's not true.
No?
Oh yeah, did we do one on Friday that we lost? Because
last one that we did, we lost.
But we did the Iron Condor and the put Broken Wing Butterfly. We did two of them. Remember, we did two of them that one time.
Yes,
and closed both those. Yours was a winner quicker, which you wouldn't stop talking about the whole day. You were like, I got you.
We're going to take a quick 90-second break and come back. We got more Tasty Live. We're going to talk about a 0-day breakdown here, May 1st through the 15th, with my friend Kai in 90 seconds as the NASDAQ goes down 40. Even the S&Ps are up 8. Dow is up 130.
Crashing.
Russell's unchanged. We'll be back in 90 seconds. This is Tasty Live. Volatility in by 25 cents.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son, and you know what that means? The market's unchanged. Even the S&P's down $1, NASDAQ down 68, Russell down 2, Dow up 96. But all that means up absolutely nothing.
Do we do this until NVIDIA? Is that...
Oof.
I didn't think about that. You have vol expiration Wednesday.
God, I hope not.
NVIDIA earnings on Wednesday. Do we just chop, back and forth until that?
God, I hope
not. That's a big event day.
But somebody who has that answer, I brought him in the room. That's right. It's this man, Kai. What's the answer?
No, I think these 2 days will be good for 0DT. That's what I'm thinking.
Because we go nowhere, but volatility be low.
Monday, Tuesday, I would think with all the,
You already put it on.
Yeah, so we're...
Yeah, so you're stuck, is what he's trying to say.
It's got to be working pretty good right now.
No, we sold off.
Oh, yeah.
But, you got a little bit of long delta on that, believe it or not. Yeah.
Unfortunately, your call side is
like 30 delta. I went 30 delta for shorts.
Yeah.
$20 on
Big shot. You know how he is, Kai. He doesn't go with the research. We spend hours and days and months. I watch you working feverishly with your abacus.
With an abacus. Do you know how to use an abacus?
No way.
Do you know how? No.
You know how?
No.
Oh, he was saying it like you know how. I was going to be so impressed. I was going to say we have to do a video of Nick using an abacus.
Isn't that like a thing that you learn like in
isn't that like a thing that you like? He's talking about you people.
just like everyone in Asia knows.
Yeah,
exactly.
You do.
Yeah.
I don't.
I watched you do a kick one day. It was pretty good.
Yeah,
Could you still do that today?
That hurt my legs.
Hurt your legs that day?
Afterwards, for that one kick.
Unbelievable.
Oh, my God.
You don't know Kung Fu? I'm so disappointed.
Yeah, that's really disappointing.
I'm really disappointed.
Never train, never learn.
Wow.
No.
Wow.
God, the HR spanking we get today is going to be fantastic.
Oh, my
That's
God.
Really nice.
Thank you, sir. May I have another? What do you got for us, Kai? You mean the S&P's up $1?
That's great.
I'm going to do this until they move.
Which means unchanged for
unchanged. That's right.
Yeah. When I walk in...
Uncle changed. Unc changed? No? Doesn't work?
A little soundboard for that one. So your trade must have been off the table already.
No. Before I walk in, is 20%.
20%.
Yeah, I look at 20.
You're greedy. You go for like 50, 60, 70%. I know you do.
How do you know?
I know.
I actually
blood.
He does the research and he's like, nah, I want more.
Nah, I want more. I got him.
I know you.
So my approach is because I put on multiple contracts.
Sure.
So I target at 20 to 25%, take it off first one, the second one. So I'm actually layer out.
Do we have some research coming in that regard too? Because I know
I can, yeah. No, I didn't say that's the best approach. I'm a little bit greedy on 25%.
Yeah. It's okay.
So, yeah, it really depends on the market.
Listen, as long as you know, like you're making the conscious effort yourself, that's all that counts.
For sure.
As long as you know. But I got to caution people, and because you did it on the break for just a moment ago, and I do it all the time. Overanalyze every trade that you make. Like, I know net gas rallied and you were long net gas and you sold it out. I'm like, I should have waited. Don't overanalyze everything you do, especially if you're closing a trade. Like, just close it, take your money and run, or make the conscious effort. If you make the conscious effort to...
I still think keep everything simple.
Keep it tight.
Is really good.
Yeah.
I used to like to manage, if I put on 5 contracts, I used to manage one by one every 25 cents, like 25 cents more. But right now it's probably 2 tranches or 3 tranches, no more. Just try to keep it simple. And before I micro adjust those prices. Oh, it's getting so close to my target. I can move down a little bit. It's a wheel.
Yeah. I like doing that. I in the 0-day stuff, I take the money and run. Like if I'm looking at my
I think that's the right approach.
You think so?
Oh, yeah.
I think so too, because we've seen a number of times where you've been right at the 25% mark, like just there or just under it, and maybe just from the data being, we have 10-minute data, right?
Yeah.
So like in that time frame, you might have gotten that tick, or if you had an order in, maybe it would have filled a nickel below. Yeah. So I don't know. I feel like taking the money and running usually makes me feel better. And even if it's like 5 cents less than my target, if you're looking at it.
If you're looking.
I agree.
Yeah, don't even worry about it. And also Iron Condor, if you trade more, you can feel Iron Condor is slightly less liquid than the naked option, even though that this is SPX.
For sure.
You can feel it. When the market moves fast or when IV is elevated or quiet market, the speed of filling those orders is different. So if you're trading Iron Condors 4 legs, you probably don't want to move too often. Just if you can get filled, just get filled.
Yeah.
Yeah.
We always put a working order.
Yeah.
Always, on all of them.
Yeah, for sure.
Yeah.
Cool.
See, your order was a loser. Now it's unchanged. See how the difference 10 handles makes on the S&Ps. Go.
Nice. Go.
Go.
All right. So we're going to recap for today's content. Recap the first 2 weeks' performance in May, from May 1st to 15th.
Ouchie.
Ouchie. That's the right word to describe.
This is a tough one.
Yeah.
The 0D. So we had February was record breaking, right? Or was it January?
January and March. Both are great.
Were amazing. Like they were historic.
Yeah.
Didn't we have like a 20-day run or something that was?
The whole March is 100% success. January, I believe, either we have one loser or pretty much everything is.
So we went from one of the best to some of the worst.
April was not that good. Yeah.
And May, not great either.
You can guess that. Yeah.
Yeah. So that's how markets work. You get one time where it's amazing, perfect, beautiful every single day. This free
big beautiful bill, and then all of a sudden, no good.
Free money every day, and then you get the next month where you give some of that back.
Yeah.
How markets work.
Yeah. It's called trading.
Yes.
It happens.
Yes. It's not the same.
We haven't even looked at the first slides yet. We finished the second.
That's true.
That's right.
Yeah. So a little summary of what happened in the past 2 weeks. It was, even though last week was kind of flat or red in 3 of the 4 indices, but in the past 2 weeks we still have very strong upside momentum, especially for the first week. If you remember the Research Corner. Mm-hmm. The weekly chart for the past 6 weeks.
We were basically, it was a nothing. It was 0.25% or something.
Yeah, 0.25. But the week
that was
before
on the
strong.
NASDAQ, right? Because the SPX still closed up.
Yeah, SPX is barely 0.2%.
Nothing.
Hey, it's up.
It is up.
Yeah,
you got to keep positive.
Yeah. Old guys like him, they get really excited when it's up.
That's right. We do.
A rare occurrence.
Yeah, but still, you can see for the first week in May, it was pretty strong. It was very strong. Yeah.
And I won't.
So we end up having 7 out of 11 trading days. That's actually hit the record highs in the past 11 days. Yeah, it's still pretty strong. So let's take a look at the classic standard Iron Condor, managed by 25% profit target, no stop loss. What happened in the past 11 trading days? Mm-hmm. So we have 2 big losses, pretty much hit the max loss. So on average, it was negative $150, 149-ish. Okay. And we have another challenging day, which is 14th, which was Thursday, getting very close to the expiration.
Yeah, and some of those, like, I guess one of them on the 13th, you had...
13, it didn't even look back, the market.
Well, wait, which one was that? Oh,
yeah, 13 and 6.
Yeah, so there's one of them that, was kind of flat throughout the session. I think that's the 13th.
What do you mean?
The
13 was strong.
The 6 was just straight down.
No, both are up days.
Up days, I mean, from P&L standpoint. Like on the 13th, you had kind of a point in time where you were slight winner / small loser when you're looking at those trades. I don't know if you do that in real.
Actually, we hit like a 20% profit for a certain period of time, but no trigger is a no trigger in this chart.
And we go by the book here.
Yeah.
25%.
Going by the book, which is what they usually throw at a Batista. But go ahead.
That's true. That's true.
Right.
Okay, so we know it's a pretty much negative if we just keep the standard management. So next slide, we show these 3 challenging days, 2 losing days, and the other one's very close to the expiration. We were able to take it off. So the 13th, we had a kind of a trading in range in the first 1.5 hour until 10. and went like straight down all the way. The P&L wise, which means the stock price actually went straight up. No, the stock price actually trading in range in the first hour. So the P&L wise, we were able to fluctuate between 0 and 20%.
But it was still breached. Like you had a move that was too much where the call spread, because it happened so quickly, it doesn't move all that much. It just trades at like half the width. That's a lot of the problem with these upside face rippers is like you'll see for the first couple hours, you're at basically a scratch because you do the trade at like $3, $4, $5, and the call spread is right at the money. It trades at $4 or $5.
Yeah.
So you're out like a small amount of money, but as time passes and the market stays where it is, the decay goes against you. You have a negative theta, whereas
if you're in the money,
if you're in the money or right at the money, and that starts to really ramp up as you get closer to expiration at the last couple hours of the day.
So 13th, when we measure by open to close, it was not a big move. It was only 0.5% from open to close. So we actually had a huge gap overnight between 12 and 13. So I believe from close to close is 1.5% or somewhere. It's a pretty big update, but from open to close is actually not that big. The problem for this day is the equity, the SPX price never even came back. There's no reverse. There are tiny reverse after 130, but the stock price already breached long call strike, not even short call strike. So there's no help of manager winners at all on 13th. For 6, we saw some fluctuation between 12 and noon, but the P&L was not good enough to trigger that 25%. Yeah, we hit like 20% very closely. That's actually 06. And then the market just went up again. We had a couple of days went really strong in the afternoon.
Yes.
There's no looking back. And the 14th, so last Thursday, lucky, we were able to trigger like a 25 or even 30% of getting very close to the expiration. So this is the tricky part. If you hold it very long until the end of the expiration, a tiny market reverse can give you huge profit back.
Yeah.
You're pretty much long in the money options.
Yeah, you're long the put spread in this case because you're short the call spread. So you have the short call spread that's at the money. Short call spread, long put spread, same thing.
Yeah.
But those three of the batch lasted from until noon to the end of the day. Like you had to hold them to get that 25%, which is, you got to hold the risk at the end of the day, basically.
Yeah. So again, the biggest risk against the Iron Condor is probably not only the magnitude of the move during the day, is does it ever have a decent pullback or reverse during the day and stay there for at least 10 to 30 minutes. That's the opportunity.
Yeah, some of those days, I bet, because we had those like random 20-point pull, like you get like that. And I say random because you have the market basically up, let's say it's up 50 and it stays up 50 for 3 hours. And then you have like one 10-minute blip where it sells off 20 points in the middle of the or later afternoon.
You might be in the bathroom at that time.
Yeah, exactly. It's that quick.
I didn't go to the bathroom. You never heard this story? For 16 years when I was on the floor of the exchange.
In his pants. That's
right.
where you go.
You don't leave.
Yeah, never.
Stay focused.
Yeah.
But back then, you don't have those
Back then, we didn't have bathrooms. We did it outside.
Yeah. And you didn't have GTC orders.
That's right. That's right. Well, no. We had Frankie doing our GTC orders. Everybody would always trade through Frankie. So you never got filled. Sorry, Frankie.
You had to wait till Frankie.
It's just a boring day, Frankie. I didn't mean to do that to you in the chat room. You're a great broker. Excellent broker.
So it's actually good to have features like a 25 or 50% profit target in Tasty Trade platform. It's actually help you to manage that. If you don't want to watch the trades every 5 minutes.
Yeah.
That's correct.
Yeah. Okay, so we had a couple of analysis for the rolling, right? Rolling to the rolling up the put side and rolling down the call side, or rolling both sides. So we want to take a look at if these rolling strategy can help us reduce those losses or improve the performance. So this chart is we roll both sides. So when when either side hits the premium drop below 0.50, like 50 cents, we roll. Roll call or put side, both. And our profit target is 35% of the combined premium. So we keep it simple. If we add additional premium and we target the combined.
Yeah. Got it.
So this one, we did improve the performance by 45%. So we reduced the loss by 45%.
That's pretty good. I mean,
no, it's excellent, actually.
Yeah.
Yeah, so the average 149 in the previous slides. Right now, we reduced the average $84.
Yeah, so you drop your average P&L by like 40%.
Yeah, almost 40 to 50%.
Yeah.
So we still were not able to take those losers off because the market was so one-directional moved.
Well, you shouldn't expect that, too. When the market's up 1% every single day.
Yeah.
You can't expect that either.
No, of course not.
Right.
Of course not.
Right.
So we're able to improve the performance. And next, let's take a look at the improvements. So improvements, the average P&L, success rate, and CVAR, or risk control. So for P&L, I tested multiple scenarios. If we target 25% of the combined premium, 30, 35, 50, these are kind of a preferred profit target we had in our previous analysis. So all these 4 scenarios, we can improve the average P&L. So that yellow red dot line is the standard iron condor. So we can improve the P&L by a certain amount or reduce the losses.
Right.
And the success rate, because we were not able to get rid of those 2 losses, so the success rate is still the same. 2 losers out of 11 trades.
Yeah.
And the CVAR improved in every single scenario. So if you want to reduce risk, it doesn't mean rolling definitely can give you some of more losses if the market starts to reverse back, like in a pretty big
bottom intraday.
Yeah. But in general, the long term, it can increase your premium and reduce your risk by decent amount.
Yeah. And your CVAR, the biggest losses stay the same just because they're
kind of defined on entry, right?
And it's full losers.
Right.
Like your big risk is like the full loss on that trade, which is the width.
Just like yours would be on the put side of the one that we just did here. It's going to show a bigger CVAR if we were to, because it's a bullish strategy, slightly bullish strategy.
Well, you're only collecting on the rolls. You're only getting like what?
Right.
50 cents more profit?
Yeah, it depends on rolling down a call or put.
Call is going to be
more expensive,
is going to be better, but just in general, it's probably 50 cents.
No. Rolling is a call side is more than $2.
Yeah, but then you're only targeting 25% of that. Like 35, you're only adding like 50 to 75 cents of potential more value to your trade if you were to exit it at 35% after the management. So, you're going to be the same win rate, the same max risk. It's just going to tighten up the average P&L because those metrics are moving. Your winners are just getting slightly bigger.
Exactly. And loser is going to be smaller.
Yes.
Yeah.
Slightly smaller.
Slightly smaller.
The average loser. The bigger losers are the same.
Yeah.
Basically.
Yeah. You only reduce like 50 cents or whatever. Yeah.
Yeah.
That's true. So next slide. So we're going to do some macro analysis of how these rolling can improve the positions. So for on average losses days, we only have 2. The improvement's $120 per day on winning days. So rolling didn't only happen on losing days. If you're winning days, when the market moves quickly, you still can roll, but end up with a winner eventually. So on winning days, on average, we improve $80, and hourly improve is $25 per hour. So you actually increase your efficiency if your trades has to hold a little bit longer than you expected. So the only downside is that the average holding duration is longer. It really depends on how bad the day is. Of course, if it's a losing day, you have to hold a little longer. So adding another position is probably going to cost the holding duration is going to be slightly longer. The average trigger time in the past 2 weeks is 10:10, so a little bit past 90 minutes. This is actually 100 minutes. I believe in last time when we analyzed April, it was 9:50-ish.
Yeah.
So you really expect to trigger that rolling around 10-ish on average.
Okay, that's interesting.
Which is actually okay.
Yeah.
Which is okay.
Not too long.
Yeah, I mean, ours hasn't moved today, so.
No.
I mean, but it lines up 30 minutes 30 more minutes until got to do something. Got to roll.
Opner.
No, but you entered trade a little bit late than the 8:30, right?
Yeah.
8:50 something.
Yeah.
I'm a little slow. Okay, it takes me a little bit.
You're busy.
He's a nice guy, not a bright guy.
Yeah, not a bright guy.
Right. Nice guy though. I remember.
Okay, so next one is the strike testing. As usual, the testing is actually not testing. Is the average time that the stock price or SPX stay beyond your long or short your short strikes, short call or short put. On average, 11%, 11.5% stay beyond call and slightly lower than 10% below the short put. Again, these 2 weeks for the call side, we definitely see more breaches and more trading time beyond that short call, but less time beyond lower than the short put. But this stats is better than what we saw in the April, because in April we have 0% staying below put, if you remember.
Yeah, it was
and
all
20
I think it was 20 something.
20 or 22 beyond call side. That was actually one of the most extreme scenarios that we've ever seen. So this one is kind of going back to the normal range, getting close. I actually did the other study we're probably going to use in the June, is how the 0DT perform at the all-time at 52-week market highs. We see those kind of revert back to the normal scenario after 2-3 weeks. So those stats come back to normal range, but in the first 1 or 2 weeks.
So at those periods of time, you probably get, after the 2 weeks, you probably get some sideways. So
the percentage of sideways is actually become bigger and bigger, getting close to the long-term average.
Yeah, when you
first week and first 2 weeks, it's very tough, especially the first week.
Yeah, I mean that in hindsight is pretty. It describes what we just experienced over the last 2 or 3 weeks.
Yeah, but that hindsight is easier than the bottom V-shaped rally, because the all-time high, you see that one.
Yeah.
The bottom rally, we don't know if it's a rally or just kind of a dead cat bounce or whatever.
Yeah.
But that 52-week highs is pretty obvious.
Yeah.
Okay, so the last one, do we even have one? Oh yeah.
Yes.
So the put spread. If you're just one long delta, of course, in the past 6 weeks is a heaven for you. You have 100% win rate. Everything beats long-term average. You don't need to worry about anything about downside.
It's free money.
It's free money.
Yeah.
It's free money. I love free money. How come I can't find it?
Well, because we're looking back at the free money. When you're in the moment,
that's the key.
It doesn't feel like free money.
You were not here last week. And last week we did a put spread analysis. On average, you take off your put spread in
30 minutes.
30 minutes. 70% of the 40% you take it off in 30 minutes. In 70% of trades take off in 1 hour.
Oh, I mean, think about that. You just make your nut and
just go
dumb
for
the
it.
day.
Just go for it.
Yeah, amazing. Good stuff.
All right, my friend. I don't know what to say here. You didn't bring any life to the market. Even the S&Ps are up 5. They've been up about 15.
That's good for the iron condors.
Yeah.
Volatility. Well, I guess volatility.
It was down 40 cents just a moment ago. It's down 40 cents right now. Trading near its lows, 20.27 for the day. Bonds are only up 1 tick. Those have sold off a little bit. But you really have Google's Googling up $10 or so.
What are we looking at here?
What are we looking at here? So far, SanDisk and AMAT to the downside, that AAOI and Nimbus, which have horrible option markets to the downside, MU to the downside, BE to the downside by about 10 handles or so. SMH has had a $20 range. It's down $8 right now versus the upside, which is Costco, Crowd, Google up $10, AppLovin up $10, ServiceNow up around $7 and change. It's a struggle here.
Push and pull.
It is push and pull.
Struggle market is good for the premium seller.
Yeah, volatility isn't moving anywhere, 20, 30. Let's take a quick 90-second break.
Oil's higher too. Oil just moved like...
Oil is up 101 after trading down to 98 and change, up to 104. It didn't really affect the market last night until the very last moment of oil upticking. I don't know. We'll be back in 90 seconds. I'm going to come back with Tasty Trade World Headquarters. So this is Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission.
Yeah, enough fun on the block all day, all night. Is an A and no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty
God,
Live.
they're crashing down 14. Look at this.
They are. I mean, relatively speaking today, I think we've had just about a 20 handle move top to bottom. This is the low end here at 74.17, even though we got well under that last night, as we have every Sunday, making kind of the lows there.
I want to do my little crab trade. Somebody chatted me.
In shop?
Yeah, I moved it a little bit because shop's now basically unchanged. I'm long the 105 in July, short 2 of the 115s, long 1 of the 125s.
$4.24 debit, even though it is a trade that has positive theta decay. It is a long delta.
In the short term, you get that positive.
Yes, in the short term. Yes. Good job. Good job. Even the S&P down 18. You stink.
Why do I stink? I have four delta here.
I'm just kidding. Volatility in by 25 cents. Do you know what time it is?
Yes, I do.
It's time to bring in this man. Straight from the Tasty Trade World headquarters, your friend and mine, Mr. Q. How are you?
Fellas, how's it going? I'm doing well.
Doing very nice. Doing very nice. Thank you so much for asking. Thanks for taking a moment from the trade desk to come in here with us. Been a pretty complacent day here, at least from the outside. Give us the inside scoop. Although there are some stocks, I didn't mean to interrupt you. I asked you a question and then I jumped on your answer, so I apologize. But there are some stocks here that are kind of the high flyers, the MUs, the AMATs, the SanDisks of the world, which are a little bit lower today than usual. Go. Sorry.
Yeah. All good, of course. And I would say
weekend too. I should ask.
What?
I'm all over the place.
I was hoping Glenn would be here. I saw him at the Sox Cubs game.
You saw him there, or you saw him like post something?
No, I saw him there. He was like 2 or 3 rows behind me.
Oh, you had to look back at him to say hi?
Yeah, I had to go like one of these.
Yeah. I like that.
Yes. No, he spotted me from his seats. We were like, a row across from each other. It was kind of funny to see. And Kevin, ex trade desk member, one of our buddies.
Yeah, now part of the CME.
Part of the CME. He was on the big board because CME sponsors the Sox.
Mm-hmm.
He is in the box. He has been lifted to much higher places. Not like us that stay in this
must be nice.
freaking box.
We just stay here in purgatory.
They keep us in the prison.
In purgatory.
Yeah.
Brutal.
It's okay.
Yeah.
The life we lead, son.
It's okay. Where is Glenny? Is he gallivanting somewhere?
Probably.
Yeah.
Did he gallivant somewhere, did you say?
Yeah, no, he's like gallivanting. Like he's always like on a boat in the Swiss Alps. Like
Yeah, he's one of those.
He's one of those.
Yeah.
Yeah, he's one of those.
I like it.
Okay.
Yeah, but I would say when it comes to a lot of those high flyers, I would say for a lot of our customers, that is a much welcomed down move. Because, a lot of our customers, the contrarian traders, right? And so, when you see something just tearing to the upside, you may want to sell some call spreads against it and things like that.
That's scary.
And so, much welcome down move, which is always nice. And I would say, pretty, we had a busy open, I would say, on the trade desk, but now things are starting to calm down.
Yeah, I think people looking from Friday close maybe got everybody a little bit by surprise, especially those who kind of trade and then see everything is fine. That late day sell off makes everything not so fine. Markets get a little bit wide. Probably prudent in the morning on Monday that they're kind of buttoning up positions. I would imagine that's when you're starting to see the most.
Yeah, and I would always say, typically always Mondays and Fridays are our busiest day because it's like, all right, market is now open after the weekend. And then it's on Friday, of course, options expiration, things like that. It is then closing before the weekend.
Totally makes sense, my friend. Totally makes sense.
Yeah.
Let's get to your list.
All right.
We'll let you go.
Top 20 symbols going through the system and their IVR. At number 1, NVIDIA with a 78, Tesla 21, Micron 85, Amazon 20, Microsoft 58, Now 71, Google 52, Apple 49, Intel 82, MSTR 39, Meta 38, SLV 42, IBIT 24, AMD 83, Palantir 24, SoFi 18, Ford 75, TQQQ 64, GLD 36, and CoreWeave 30. Are the options really tradable in Ford for you guys?
In where?
Ford?
Yeah, because it's on the list. 75 IVR.
Yeah.
Right, but that's a little, you need the context around that.
This is one.
Ford's been in play.
They're tradable, but you just have to be willing to sell a 20-cent option.
Right. Or you
Yeah.
have to be willing to take a directional stent in there, right? Like in forward, I mean, it's a $14 stock with a 70% IV rank that has an expected move of just under $1 for June. Yet it's had, $3 move in the last 4 days. So I think it's more of a directional play in here. Now it's in the middle of its no man's land. To Nick's point, sitting at $13, high of 15 recently, a low of 12 or so, sitting right at 13 and change. Now it's both sides. Are you willing to sell 20-cent options? Probably not the best.
Yeah, like what's the 14 call trading for in May?
That's like a synthetic covered call.
Yeah, just out of curiosity.
You mean in June?
Is like, I mean, it's
30 some odd cents.
30, yeah.
Yeah.
You got nothing.
I mean, everything's relative, right? It doesn't use a lot of buying power either. So if you're looking at it from
return on capital standpoint, it looks huge.
Capital efficient. Probably got to do a lot of lots though to get something out of it compared to typically what other people are trading.
Right. I mean, even if you're looking to make $100, you probably have to do 4 contracts, 5 contracts, just to have a chance to make $100. So it all comes out in the wash. There's no free meal. You know what I mean? You're going to either use more buying power with one contract, or use less buying power with 5 contracts, but it's the same exact thing.
Mm-hmm.
Same exact thing. All right, you know what? I'm going to let you get back to the trade desk so that you can answer phones and do what it is you do over there.
We got keep the business running.
Well, but
keep the lights on.
I want what's that?
Keep the business running. Keep the lights on.
Keep the business running. Absolutely. We did a proof of life for your dad, so he's happy now. Call him. He told me to tell you. He'd like to speak to you, like to hear your voice. Let's put his Q's list up there, and we'll go through our own account and see if there's anything on this list.
Yeah, some of the memory stocks going nuts today. You got SanDisk down about 100.
Down big. MP. There's a lot of stocks that were the high flyers.
MU.
What's that? MU, I meant. Sorry. We'll let you go. Put his list up there if you don't mind, and let's go through our own account and see if there's something up here that we can do. I know NVIDIA has earnings. You don't have a position in it. Is NVIDIA something that
I do have a huge position. I have like no delta, but I'm short.
I'm so sorry. You have a no delta position. You are right. You have multiple positions in NVIDIA.
I'm all over the place. I'm long July.
15 different strikes on pretty much.
Yes.
Yeah.
I'm all over the place. I mean, and that is something that needs to be said because when markets are moving like we've seen over the last 2 months, and you're adding positions and you're managing stuff, each trade becomes the whole position. Yes. Like you look at one of your trades, is a call diagonal spread. It might be a much smaller position relative to in the money short calls that you have. And I might be losing on that one, but I'm making 3 or 4x that value on a short position. You got to kind of look at the sum of the parts. Now, if you have one position on, it's a lot easier to track. But in something like NVIDIA, where I'm trying to trade that, we're all over the place. So my net position, just to go through it, I'm long about 70 deltas here, which with 15 different positions, 15 different strikes,
basically flat,
is nothing. When you divide that by
one contract, it'd be extremely long.
We'll say per contract, I'm like 10 deltas long.
Right.
But I'm short a lot of front volatility and front premium. So when I look at my strikes here, so I've got, and I can actually pull this up real quick.
Sure, go ahead.
So I'm long premium in July, short premium in the May weekly expiration going into earnings. You can see I'm basically a straddle here. I've got, a handful of strikes that are at different spots. You put it all together, I'm short the straddle. When you look at my my June position, I have some in the money calls here. So I have some long delta, synthetically long stock. Mm-hmm. I have some in the money puts that are synthetically short stock. I'm long this premium here against short premium in the weekly. So I want the stock to stay right where we are right now. This would be
a nice tight range is what you want.
A nice tight range. An inside move up, inside move down, doesn't really matter. The whole position would be a home run. Now we get a 240 print or a 200 print, I'm probably out a couple bucks.
Yeah, because
right here is right where I want it to
explode. Yeah. Right.
And now if I was looking to
change my delta, like if I wanted to get long here into this move lower, I would be looking to take off short delta positions. I'm not adding any more long delta positions on. I'm not putting any more risk on the table here.
Good job out of you. What was the next one on that list? I think it was, give me that list one more time. I'm sorry.
We got ServiceNow in there. We got Apple. Talking about on the top of the list, Tesla.
Palantir's interesting too. PLTR, you have basically a in-the-money iron condor in there right now. Palantir has had a decent range this morning, up to about 36, down to about 31, sitting right in the middle, close to around 34. Tesla, I know you have a position in there too, I'm sure. Let's see. No, you don't have a Tesla position.
Do I do something in Tesla?
Let's take a look at it.
What about, I know this is such a jump.
Tesla down $9 or $10. Tesla trade up to 421, down to 410. It's sitting at 412. NASDAQ down 135.
What do you think about a cheap butterfly?
In Tesla?
Into June.
What are you looking to do?
I'm thinking like...
It's 31 days. I mean, that's what I'd be trading anyway. But go ahead.
Yeah, but you have, that's like when the SpaceX...
what are you
on June 11th, I think it is. I was looking at June 18th, doing the 425, 450, 475 butterfly, just straight up butterfly. You have an IV rank that's super low. It's a upside shot. I did have 326.
Yeah, right there.
Dude,
right there.
All these butterflies, no matter where you pick the strikes, it's going to trade between 10 to 15% of the width of the butterfly. So this butterfly is 25 points. It's going to trade for somewhere between $2 and $4. Like at 10 to 15, 20%, all butterflies kind of trade like that.
Yes, 100%. And you're looking for, this may look like you're buying a wider call spread, but it's $25. There's $2.5 wide strikes, why it looks a lot wider than what you sold. But you did a classic butterfly here. This is not a broken wing butterfly or anything else like that. That's why it has a low probability of profit. There's really no theta decay.
It's a long vol trade, especially in something like Tesla, which usually volatility expands on the way up. And so that should help. But if we chop around here, the long option is close enough at the money that you could be profitable. Like when you look at a butterfly risk profile, it's binary at expiration. The options, you're selling premium that's further out of the money. And so if you do get kind of a choppy sideways move here, you might be able to make 50 cents or $1 on this trade. Because that long option that's at the money is going to like hold its value.
Again, for $3 and change.
It's a shot.
In total risk, right?
Not a lot of risk.
But you really pretty much set that and forget it. There's not too much else to do there. Taking a look at some of those stocks that you mentioned just a moment ago that are, basically falling out of bed here, down $25 off of highs. MU. Hey, Matt, I looked at this AAOI. It's really gotten hammered the last couple of days of everything being relative after being on fire to the upside. But the markets are... Oh, I want to mention this because I got the emails about it. AAOI is not the good example. Let's go to Microsoft for a minute, see if that's a better example. Yes, Microsoft's a much better example. I put open interest in here, and people wondering, why does this $2.5 wide strike have wider markets than the not whole number, but the old 405s, 400, 410s. And that's because, and why is there no open interest in any of these? Because open interest, you won't get any open interest until tonight's close going into tomorrow, because open interest are the options that are unmatched. And since these just came out today, there'll be volume in them. Let's change this to volume real quick. If Beck can find it, there you go. There'll be volume in them, and you'll notice that the volume's a little bit lower than some of the original ones, but the 05s and the 402 and a halves have basically the same volume in there. Open interest won't be, you'll see that tomorrow after the close, but they're all tradable, but you got to watch out if you're doing those $2.5 wide strikes. The markets are a little bit wide in there. You want to walk up or down that order even more diligently than you would if you were using the whole number ones. Go.
No, that was
okay. I thought you were working on something there.
No, I'm just looking at my positions.
What do you think here? Volatility in 20 cents. Market, even the S&P down 16.
I don't know. I was shocked volatility didn't expand Friday into the down move. Not that it was that huge of a down move. The numbers have gotten really big. 100 points to the downside, 6 months ago, you'd think we were crashing.
Boy,
now
used to mean something.
Now it's, a little over 1%. It's a small move. With the VIX where it is at 18, and change here, 1% move is the norm, or should be the norm. You should expect that. I'm a little surprised into the weekend. There was no bid in volatility. And then, obviously the things have been just tweeted, said, it seems like, and with the move in oil too, it seems like volatility is still kind of cheap here. And the realized volatility of some of these stocks, you look at a SanDisk, a Micron, anything in the semiconductor stocks, we were talking about Lumentum Light this morning. That stock's down 11% today.
Yeah.
$110 move on that stock. You're seeing realized vol in some of these single name equities so extreme relative to what you're seeing on the broad-based indices and the vol futures that you're seeing. Like volatility's down ticking right now, down 29 ticks on vol futures. It's just like it gives me a weird feeling. I feel like
the ick, as you young kids say.
Well, if volatility was higher right now, I would look at like Light or Micron and be like, well, vol is high. You should expect there to be some big moves in both directions, some pain in both directions. Here you have volatility telling you nothing's happening, yet there's stocks down 15% in a clip. Like no big deal here. That's what the market's saying. It's like no big deal. It's just
same as it ever was.
Yeah. So it's a little bit. Yeah, it's a little weird.
I mean, you had a mixed bag of tricks. I think you got to.
Rocket Labs was up $14 this morning. It's now up $1. Like you're seeing 10% moves. That is realized volatility in single name equities, and then the market volatility just says nothing. I mean, look at bonds,
and that's why that volatility funds have had such a hard time doing any type of dispersion trade, where they're buying the cheaper vol in ETFs and selling.
Death.
It's been a death trade. It looks phenomenal on paper,
and that's why the diagonal spreads and stuff like that have been so amazing.
That's right.
Like even if you've done them on the put side, they haven't moved because you're selling the front volatility even in SPY and Qs is elevated, and it's the call side. You're getting so much gamma on them. It's been perfect.
Let's take a quick 90-second break as the E-mini S&Ps are down 6. NASDAQ down 140. That's your weakest of the group. Strongest of the group is the Dow up 140. Your Russell's down $6, kind of mid for the group, as you would say, mid. Bonds are unchanged at 110.20. Bitcoin down $2,700. Big move, 3.5% move for Bitcoin. Ethereum down 112, a 5% move there. Crypto's
we roll down the call spread on our Jade Lizard.
Oh, in SPX you're talking about?
Yeah.
Hang in there, my friend.
Hang in there, you think?
Show a little.
I know volatility's gone nowhere. I feel that way too.
Fortitude.
See, this is what happens. You have not dull, but you have
dull. You can say it's dull.
Market.
It's like an Italian market. It's dim. Yeah, go ahead. Mm-hmm. Yeah. You ready to take a quick 90-second break before I get myself in trouble a little more? We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
Peace.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tilted sideways, grandpa talking trash, man, they wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, whirl out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam, out here raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda. You gotta level up. Just look at me. You gotta level up. But they kinda like it when.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. We both have graduates.
I was going to say, you are not seeing things. I am not TP.
Oh, yes, I forgot.
Yes, TP was supposed to be here. I'm sorry to disappoint everyone. I know TP was supposed to be here, but I ended up coming home late last night instead of today. And I'm going to give another birthday shout out to my mom. Because her birthday was actually yesterday. So we'll send her this link. Everyone, happy birthday to my mom, Carol.
Happy birthday to you. She's so sweet. And I hope she sees Friday's and Monday's show. She deserves 2 birthday wishes.
But yes, congratulations. Annabelle graduated.
Yep, so did Logan. I said, we got 2 graduates, 4 years apart. One graduated high school, they're supposed to. One graduated with an engineering degree. We're so proud of him.
Yeah, it was nice. I don't know, it's a whirlwind weekend. And it seems crazy that I'll never do that drive again. And I'm kind of happy I'll never do that drive again.
Yes, that's true.
I told Lily, you have to go somewhere close. I don't like car rides.
The car rides are terrible. That's why I really love Lexington, because it's a 45-minute flight and it's enjoyable.
Oh yeah, if you could fly.
It's a quick flight. It's a quick hop, skip, and a jump. I told Jenny, I gotta tell the viewers, my mailbox got leveled this weekend. Leveled. I'm talking a teenage girl drove through it as if it were a road.
But it wasn't like in the old days where kids would drive with the window down and hit all the mailboxes with a baseball bat.
No, she just drove straight over it. I was like, oh my goodness. So yeah, we got a lot of stuff going on in our house today.
And isn't your mailbox brick?
No. Everybody in our neighborhood is brick. We are not brick. And the reason is because my brother, who was a bit of a psycho in his younger years, told me never to put a brick mailbox on there because we are on a slight turn. Our mailbox has been hit 5 times.
Yeah.
This is the first one that it's taken it out, but it's been hit by a car 5 times.
It probably once by me, because do you remember how hard it is to get out in and out of your driveway because of the turn?
So
many times it would roll over the grass, and I might have swiped the mailbox. I don't know.
It's pretty funny. Jenny, what are your thoughts on this market? Spoos are down 19 right now.
That's nothing compared to, they were down 50 when I went to bed last night. Here we are on the platform. When I went to bed last night, they were down 50.
They seem to be battling, right? So they were down 50, then they were up, then they were down 25, then they go back. I mean, it's been a back and forth all morning. We'll see where this thing settles out. Can we look at the VIX?
Sure. I don't remember. I don't know where I was, in the car leaving for graduation. I can't Friday, I think the VIX wasn't doing anything too much, and we thought, okay, this market's not going to do much. How did it end on the day?
Oh, we were down 107. Spoos were down a ton.
Oh, I didn't even realize.
Yeah, spoos were down a ton at the end. They were down. We kind of stayed. They kind of stayed down 50, and then at the end of the day, they were down 107.
Okay, I did not even know.
Yeah.
So then we looked at the VIX and it wasn't really doing much. We're like, okay, there's probably not going to be a lot happening today. And we continue to go down and we're down 100 and something. So the VIX, I don't think, it wasn't right. It wasn't right. At 10 a.m., between 10 and 11, the VIX really was not predicting what was going to happen the rest of the day.
It was not. Those are facts. It's kind of crazy.
So it's still just hanging out around 1850 here. 18.
Yeah, I mean, it's still pretty high, but it's not. It's with the two-way action, you would think it would be higher. I don't know. I'm not surprised by anything anymore.
But talking about the move, it was only we did the study, so it was a study on Wednesday. Wednesday we did this Jacob study where we kind of liked this. At the money had a lot less risk. So 4 days ago, we put this trade on and the 74.95, 7,500, this was the at the money. And now we're trading 73.90. So over 100 points away in 4 days.
Yes. And so this was a different one. This is not our normal style. This is not what we have been doing. It was something that Jacob kind of brought to our attention. It's almost like a skewed iron fly because you were $10 wide on the top, $20 wide on the bottom, but you have this almost the same short strike. I think they're off by one, right? You have the 74.95, 7,500. So it's a skewed iron fly because we collected about $13, maybe almost $14 for it.
You know what? One of the reasons we did it is because we felt like the market was a little shaky and we wanted to have less risk because in some of our regular trades, we'll take, 1,200, 1,300, 1,500 on that Jade Lizard and risk, and we wanted less risk. The risk in this trade was only not even 600. Let me see. Let me take a look here.
No, we collected $13 on a $20 wide, I think. 13 something. Yeah, 13.45.
Okay, yeah. So we only had $555 in risk. So or $655 in risk.
Correct.
$655 in risk, but the one before we got in and out of one pretty quickly where we made 200 here. So we made 200 on the 13th to 14th, and then we put it on again and we collected 1345, and now it's worth 1465. It's only like we're 100 points through it, and it's only like $120 loser, $130 loser.
Yeah.
I'm half tempted to just close it for the $100 loss. Net, we're up on these because we need to bounce back 100 points for this to come back.
Yeah.
I don't know.
How are you saying it's only $100 loser? It's $17. We paid $13 for it. It's a $400 loser.
I saw it just mark it I saw it mark when I opened it up like 15 something.
Oh, okay. You can
when I first looked at it, it was marking 15 something. The weird thing is, look at this market. See, look, it just marked 14, now 15.
Put it in for something. Close it for a small loss.
This market down here is 990 bit debit at 2140.
It's not a good market. Well, when you've got an in the money SPX, so now those that one is $10 wide. That 74.95 is $10 wide. It's 105 at 116, 108 at 116. So yes.
I mean, yeah, I don't know. Put
it in defined risk. Put it in for a less of a loss. If we can get filled, great. If not, we let it ride.
Yeah, this market is so wide. Oh, here we already have a closing order in. Because we made $200 on the first one right away. If we take a small loss on this, I don't mind because if we let it just stay here, this could be worth $20.
In the mid-market.
I don't know if we're going to get filled. Maybe we won't.
It's defined risk. If it's $18 and we only have $200 left to lose, if we get filled at $15.50, fantastic.
We'll just leave that and let it work.
Hold on. I got to text my son really quick.
Oh, he has the 0 day on. What are his strikes?
No. It's raining right now, and he has a die table outside, and it's not covered because we have these air conditioning people coming in.
What does he have outside?
A die table.
What's a die table?
Oh, Jenny. It's a table that's bar height that they throw dice on and do all this random stuff. I don't know. It's
okay. I guess I know I remember I want to say years and years ago when Logan was a freshman in college for Christmas, he asked for, it was called a beer die table, but it was not bar height. It was like coffee table height.
Oh, no, ours is bar height. Actually, even higher than bar. When I stand next to it, it's like this. I can put my chin on it.
They're probably used for similar things, and one's coffee table height, one's bar height.
No idea. It's the most bizarre thing ever. I'm sure they're used for similar things, but I just want to let him know that's in the rain. So if he wants to move it, he's got to go move it.
Okay, so I put that order in. I don't know if it'll fill. I mean, maybe we'd get filled if we paid a little more. I don't know that. I don't. It's surprising that it's not down more, being 100 points away. But in 3 days, anything can happen.
It's wide markets. It is down more.
I'm gonna try 16. If we could save ourselves $4.
Yeah, I don't think you're already filled. You look at $12.19.
We'll
just let that sit. Let that percolate.
Yeah. Okay. Liz, YouTube trade of the day.
Ooh, yes. What are we gonna look at today? Bonds.
Yeah, I think we're gonna look at bonds again. Let's open up ZB. We have ZB down. Look at this. It's such a thin line here, but it's had a wild ride today. How low did it get? It got pretty low. Did it get no? I could barely. This line is so skinny. I could barely go over it. Okay, 110. The low 110.05. But it really dropped because we have been in and out. We were in and out of ZBM the last week. And if we want to get back in, so you can see we sold a put spread for 12 ticks and then bought it back for 7 ticks just in a matter of 2 days. So I think I don't mind getting back in with another put spread.
I would like to. Let's do it.
So let's talk a little bit about these futures and how they work. We were in ZBM. What we see up here is ZBM. ZBM only has
4 days left.
4 days left. So we need to go to the next future, which would be ZBU, and that's trading 110.02, so even lower.
Yeah, it is lower. I mean, not by much though. Those are the ticks. It's at least the 110 handle.
Yeah, right. 110.19, and then it goes to a 110.02.
Yeah. So
then we could choose here. We could choose. Do we want 25 days, 39 days? I would be between the two of those. What do you think?
We're gonna sell premium.
Probably. I would say maybe just a put spread.
Yeah, so we're gonna sell premium. Let's go 25 days because it's got a 50 rank.
All right, so 25 days. Now for bigger accounts, I do like the naked puts in ZB. I'm selling, like me personally, just selling some of these 108s for, you see that 34 ticks is $530. I want to see exactly. 531.25. But for smaller accounts, we just have to spread it off. We might have to bring it up and spread it off.
Yeah, we have to bring it up and spread it off, given the nature of our account.
So if I move, then I might move that 108 up to the 109 and see how much this 107, 109 is. The 107, 109, we're taking in $468 with a risk of $1,500.
Your buying power effect is almost the same as the naked.
I know.
That's wide. You got to do it $1.
Well, let me move it further. Let's see if I make the.
Let's go farther in time if we don't like it.
Well, 108, 106, that'll be less buying power because I went one strike further. So we're getting 19 ticks.
I don't like it.
No, I don't. Maybe we just have to be like a baby small trade and get $187 using 800.
I like it.
But the crazy thing is, and this happens with the futures margining, our max loss is $812, but the buying power is $1,139. It's weird. Sometimes that happens where your buying power is more than your risk.
Yeah, that happens all the time with futures options.
Yeah,
that's just it. Is I didn't want the buying power held up for that amount of risk. $800 is fine. Let's hit send on this. We've been in and out of this multiple times, and we'll put a GTC in for 50%.
Okay, taking in $171 using 800, high probability trade, selling that 108, 107 put spread in ZB.
And ZB can still go down. So this is what I love about put spreads, right? So ZB can still fall from here. It can go all the way down to, it's just got to be above 108 at expiration, which I think is okay. We're not saying it's going straight up. We don't know if it's going to go up. It could fall some more.
But here's where it's trading, right where this red flag is, and it can go, like Liz said, all the way down to 108 in the next 25 days. As long as it's above that 108, we'd still keep that $171. Or we're happy taking half of that if we get a bounce up in ZB and we get out.
Okay. Press that button, Jenny Andrews.
All right, Liz, 11 ticks. I'm going to lock it and ship it. And this filled immediately. So if we're happy with just 50%, we can click on this order that we were just filled on and hit close profit at 50%. It will pull right up, buy it back for 6 ticks, GTC, review and send. And now the order's working. Then this could trade at all hours, right? This doesn't have.
This does trade at all hours. I mean, I think I've filled on my futures options positions more often at night than I care to admit. So.
Yeah. So that's in, and that's it. Put spread in ZB. We're back in it again.
Yep. Perfect.
Okay.
We are taking live tweets with the hashtag LAZJNY. We've got live tweets. We're going to manage the account. We do have some earnings today. It's going to be a good show.
I'm going to go into Twitter. Mikey, I saw it. I know. Happy Monday, Liz and TP. I gave him the morning off.
She did. She decided to come home early from the graduation. Now, you did because you went to the graduation. You just didn't stay for a third one?
Oh, I didn't stay for the girlfriend's graduation.
That's okay. I mean, you got a job.
So
and your daughter has school. She's still in school,
right.
Isn't she?
She still has school. Right, exactly. So I went, there was the big ceremony for all the graduates. Then there was Logan's engineering ceremony, and I was going to stay for his girlfriend's nursing ceremony. But Lily and I decided to come home and go to school and go to work. And Logan and my husband went to her nursing ceremony.
Good. Very good. Very good.
Yeah.
But hey, so I'll call her TP for the rest of the show, Mikey, in your honor. How about a simple short put in RGTI? Let's take a look at it. That's Rigetti. And they had earnings last week.
RGTI. Rigetti. Simple short put. All right. Go out to June, 31 days. And I think Mikey said he's getting about 80 cents. So maybe that 14 and a half.
That looks good. Look at that.
Whoa, Mikey.
Woo, you might have did something. I would go with something where there's more open interest.
Oh, okay, the 15.
I was just added after expiration. They do add all these strikes, and you'll see that across the board. Lots of different option contracts were added over the weekend.
The 15 for $1.15. Look at this. We're getting $1.15 using $200. Let me take a look at Rigetti. And it's already, Mikey. These are the products I like. Products that are beaten down, bottom of the range, and low buying power.
We love it.
Mikey. All right, so we're in that. Thank you very much, Mikey. And Frank Walsh posted his economic calendar. And Friday's option volume, 86.3 million contracts, 20% above average levels, recent average levels, with calls leading puts 11 to 8. Among the 500 most liquid single stocks, 30-day implied volatility was higher for 119 and lower for 340. So mostly lower.
It is kind of crazy.
Mm-hmm. Now we've got Bob's list. XPHD, Billy, and VRT.
Huh. There's a handful of earnings that are today, right? There's still a handful of earnings. They're just the big ones are kind of gone, I think, except for Wednesday. Nvidia's on deck, and all eyes are going to be on.
Oh, okay, Nvidia. I didn't know which one. I didn't know which one from this list you were going to call out, but it's Nvidia.
It's for sure Nvidia. I mean, that's
that's the only big one. That's the only. Okay, let's take a look at some of these. XP, HD, Billy, VRT. I don't even know what VRT is.
I don't know what VRT is either.
Vertiv Holdings.
Well, what price is it?
Nah.
Just get rid of it. It's a $336 stock.
XP. What is this?
I don't know, but it looks like a mover and a shaker.
It looks like a mover and a shaker. It's had a range of 17 to 22. The only expected move is only $1.12. So not much.
$17 stock.
There's not a lot here. This is one of those where, when there's not a lot of premium, if I have a directional assumption, I'll just buy an option. That's usually how it goes for me.
For sure.
HD, Home Depot. I don't know why, but I was looking for a small refrigerator for the basement. And every refrigerator, like every small refrigerator I found at Home Depot, when I would put it in my cart online and go to check out, it would say they wouldn't like move it to my basement. They would only deliver it like to my door. So I ended up buying it from Lowe's because they were happy to deliver it to my basement.
It's weird.
I know. Maybe because it was just they were smaller refrigerators and it was I don't know. But
You have to say
I wasn't going to carry that thing in the basement.
Oh, your bum shoulder. We were already talking about that with Josh.
And literally, the delivery people that came for Lowe's, they were like the two tiniest people carrying this refrigerator down.
Were they really?
Yes, there's this tiny little girl. I'm like, how are you a Lowe's delivery person?
Maybe she's strong. Maybe she's like Monica from Friends, freakishly strong.
All right, anything you want to do in Home Depot?
Let's see the chart, please.
Ooh,
okay. Yeah, Home Depot. I mean, Home Depot was hopping this weekend. I went there a couple times.
Oh yeah, you live right by one.
Home Depot and Menards are like rivals. They're right across the street from each other, and you either like Home Depot or you like Menards. I feel like your dad's a Menards guy, isn't he?
Oh, my dad's a total Menards guy.
I know. I feel like he's told me that before.
All right. I'm just pulling up a diagonal. Here's a $15 wide at $6.90 or $12.50 wide for $6.
No, not on a Monday.
Yeah, not on a Monday, Home Depot. Not on a Monday.
Today. Not today, Home Depot.
We would expect cheaper than this on a Monday.
Let's see if you can sell. You got a 97 rank. Let's see. I mean, even if we just did a spread.
Yeah, or what if I know it's an expensive product, but Home Depot has fallen from 425 down to 300. What if we sold the 282 put? What's the buying power?
The problem is if you have to hold that. Now, granted, Jenny, I will tell you. So sometimes in my account, I'll do things that are insane with buying power because I know it's an earnings trade, and no matter what, the next day I'm going to change it. If it's a loss, don't get me wrong. If it's a loss, it's a loss. But I'm not going to roll that. If it goes all the way down, I'll change it to a zebra or something.
Well, here's that. I went beyond the expected move and sold a $10 wide for $1.20. But that's not like a typical put spread for a third of the width. That's just for buying power purposes. I don't know. Maybe Home Depot is just too expensive for us.
Well, it seems expensive to hold if you're going to be selling premium for sure. Yeah. That's why we do enjoy the lower price products with it.
I don't know. I think we got
Home Depot though. There's this isn't one of those things you need to make sure you're doing it. So if we don't think it's going to move, hold on. If we were going to do a diagonal, what about just a calendar? Because the calendar is similar, and I know this is going to sound crazy, but you can sell a strangle. Or you can do a calendar saying it's not going to move.
No, I don't think that it's not going to move. It's a $300 product, and I think it's moved on earnings. I was just trying to pick one direction or stay out of the way of the other direction. I feel like this thing can move.
Do you want to do a directional calendar?
Let's price out. Let's price out a double calendar. No, because what you make on one, you lose on the other.
Yeah.
Let's just go to the expected move, and you're getting 317. I know it's not 217, but it's a 317. 317 count. Yeah, that's still an
I don't like it. Close it up. Close it up.
Forget it.
We're not going to bring something in. I kind of agree with you. There's no way we need to do that. We do not.
All right. Billy. So XP, HD, Billy. What are you laughing at?
You got to go to Twitter.
Okay. Billy. Look at Billy. Jeez.
You know what's so crazy is the market's at all-time highs and everything that we're looking at has been beaten down.
I know. $1.56 expected move. Whoa. Super wide markets.
Yeah, close it down.
All right, I'm going to go back to Twitter and see what Liz is laughing at.
You got to go top down.
So either I misunderstood on Friday or Tom Preston got way better looking. No, he was supposed to be here. He was.
I didn't talk to him. Did you call him and tell him he was off?
Yeah, I called him from graduation. I was like, "Hey, listen, I'm at graduation, but I decided to ditch the girlfriend's graduation, so I'll be back in time for the show."
And I hope he's watching the show. Okay, and then Frank took something from the YouTube chat, which I will go to as well right now. So we appreciate Frank doing that. If you are on YouTube, hello to the YouTube people. You can ask Frank to pop it in there. Sometimes I get a chance to jump in, but not that often.
So this is from DTAB. So And what did SFO? What did we say this it means? SFO.
No idea. How would you say? How would y'all set up a good put for Nvidia?
How would y'all set up a good put? How would you all? It doesn't. He doesn't say y'all. It's just how would you all set up a good put for Nvidia? I really want to copy what you're doing. Can I copy your moves? Hey, you know who? If you know what moves you really want to copy? Wait till you see us on the dance.
Oh my God. I was like, what is she gonna do? This could go.
I don't know. I'm not gonna, I don't have the room. I don't have the space. Maybe if I had a little more camera footage. But I will say often people try to copy us on the dance floor.
On the dance floor. Jump into Nvidia. That is Wednesday though. We're not gonna make any moves until Wednesday.
Am I lying? Am I lying, Liz? Are there people who try to copy us on the dance floor?
There's one person who tries to copy you on the dance floor. And she might be the world's worst dancer, and I hope she's watching the show too. So it's not really that much of a leap for her to
All right. So Nvidia earnings are the 20th. What am I doing in Nvidia? Here's what I don't think I'm selling a naked put in Nvidia on earnings. I just don't think that's what I'm doing. What are you doing for it? We can talk about what we're going to do for Nvidia. I'm going to do probably what I've been doing.
What are you go? I'm long the stock. I've been long the stock, so I've been waiting to sell a strangle around it.
Okay, so
which you can replicate. So I mean, nothing is trading advice, right? Nothing we do is trading advice. But I have the stock, so I'm going to go to the 4-day, right? And I'm going to sell. Which you can replicate this without the stock. It's just going to be expensive. But I've been waiting for earnings, so I'll probably sell the 205 put, and go up to the expected move for the top, and I'll sell maybe the 240.
Okay, so Liz has the stock, so she's going to sell the strangle around the stock.
And you see how I was kind of not aggressive with my strangle, right? I'm outside the expected move by a point on each side, and you're still getting $400.
I'll show you what this looks like. This is expensive because she has the stock. It's a bullish trade. I know she's capping herself to the upside by selling that strangle around it, but she has the stock, and by selling that strangle, she's giving herself a little bit of room. If she takes in, it was 250 and 150, so you're taking like $4. So if the stock goes down by $4, she'll be breaking even because she'll have made that $4 on her strangle, so she won't lose on that $4 to the downside move. But this is still a bullish trade. She prefer Nvidia.
It's bullish, right? Because I've got a covered call and I've got a naked put, so it's bullish. But it's something that I have. I just want to get something on that earnings premium, and I'm going to keep my stock. I'm hoping for a little bit of an up move in Nvidia. I did cap my upside.
Now I have been on some of these earnings just doing like I'll buy just a baby trade. Like I'll buy a $5 wide call spread. I've been doing these a lot lately in this market. I buy a $5 wide call spread and sell a put spread to pay for it. Now, if I have to pay a little bit, here's a $10 wide put spread. Now, I don't want to lose $1,000 if Nvidia goes down, so I might just shrink this and do 250 wide call spread, $5 wide put spread. So I make 250 if it goes up. If it drops down, I have some room. If it goes too far, I could lose 500. I've also on earnings just done. Because, like, you'll compare the diagonal. The diagonal, Liz, I don't know what to think about the diagonal. Because if you go to the 4-day and you sell the expected move, how far do you want to go out with the one you're buying?
Well, that's just it. It's very cheap if you buy the 8-day.
It's very cheap if you buy the 8-day, but then that's when I think that's no different than just buying the call spread. So if I'm going to pay $420 for an 8-day, 4-day diagonal, maybe I'll just buy a call spread for $4. Sure. They're almost very similarly.
Yes. Okay. And I do this. We're going to look at Nvidia on Wednesday for sure, because it's going to be all eyes are on it. I do see that number 217 on there, so I might do something for that as well.
Oh yeah,
Can you take a look at something? I glanced at the chat and people are saying that Microsoft is getting killed.
Is it?
I don't know. I'm just like to look at it.
Okay. So it's not getting killed. And it had a big rally on Friday. So,
that's nothing.
Yeah. So there was a big rally on Friday on some news that someone's investing in Microsoft. I can't remember exactly who. Bill Ackman.
There you go. Ackman.
Yeah, there you go. Okay. Taking a stake. I think that was it. And that's why it jumped on Friday.
Yeah, you sold out of something and bought something else.
So
it's not coming down that much. It's recanting its moves from.
And
Friday.
we have an iron condor. And actually, did we roll one side up or down? Because it looks very tight.
Let's take a look at the position page.
Oh, no. It's one of those buy a call spread and sell a put spread.
Yeah. Oh, it is. Yeah.
So we did this one. Microsoft was 425. Buy a call spread and sell a put spread. And these have
This is exactly what Jenny was just talking about in NVIDIA, is buying a call spread and selling a put spread.
So it's like if it goes up, you make money, but if it doesn't go up and goes down, you have some room before you would lose on this. So we have 4 days to go in Microsoft, and as long as it stays above 412, no harm, no foul. We didn't make anything, but we didn't lose anything.
Right. If it stays right here, and you've got 4 days. Can we see that on the position page? No, it might look. I'm going to say before we get there, it's going to
be a loss. Yeah,
it's going to look like a loss, but it's a paper loss. If we fast forward 5 days or however many days, 4 days, if it stays right there, we don't lose anything.
And you see, we put this on for even, and that's what I try to do. Put these on for even. Again, if it goes up, great. Especially with these stocks that were running. I think I'm tapped out now in Intel. Like in Intel, I was putting these on, and here we have one. But now Intel's run has seemed to have come to an end. We've had all these down days. So I feel like the whole, everyone's trying to buy it. No one wants to miss out. I feel like that's come to a screeching halt.
Yeah, it is. Although Trump today, he wishes he had should have taken a bigger stake in Intel.
Oh, did he say that?
Yes.
Well, should have.
He didn't say he's going to.
Yeah, should have. Yeah. Yeah, we all should have. I wish I had a bigger stake in Intel.
Yeah. Yes, I agree. Yeah. Okay. So that being said, so it's not really falling down that much. Do we have anything we need to manage, Jenny, with this fall?
Let me take a look. With this fall, Spoo's down 40 on the heels of being down 105. One thing that, let's see, Netflix.
Okay, that's what I was going to say is Netflix.
We just have a zebra, and because we had some bullish positions and Netflix was really falling. Now the market's mostly falling, but Netflix is getting a little bit of a boost.
We're getting a reprieve today because look, we're up $238 today.
Yeah, we could look at a ratchet.
I don't know.
In Netflix? I mean, if Netflix could get a little bit of a lift.
It's only up $1. Let's take a look at it. So this is a zero extrinsic back ratio, which is a stock replacement strategy, right? So you take a look at this. Netflix is up $2.35. Our position's up $2.38. Same thing. Like it's doing exactly what it should be doing. It's a 1-for-1 up move with the stock.
And we know when we put on a zebra, we sell the at the money call. So if we're short the 88 call, we know Netflix was 88 when we sold it, and it's trading 89.37. So stock's $140 higher, and this position's up $160. So it all usually works out. If I close this and put on a new one, I'm just going to see if we can take in a credit. If I sell the at the money, either the 89 or 90, this one's 315. So divide that 315. Hang on. Divide that 315 in half, and you're looking at $1.60 ish.
You'd buy the 85s or 86s.
Yeah.
85.
And if I'm buying the 85s, I could actually switch this one to the 89 because I'm trying to wash extrinsic value. So if I'm paying $1.50 twice and I'm getting $3 here, so we're taking in 99-cent credit, so $100 credit to shift this zebra, just to take $100 in risk off.
It's not bad. I mean, we might as well because there's 31 days left.
Yeah, because we put it on.
I mean, or we close it, but I think we wanted a little bit more of a follow through in Netflix.
We paid $8.20 for it. So if we can take in $1 credit, then we've got $7.20 in it. And if it keeps going up and we take another $1 in, then we have $6.20 in it. If we could keep reducing the risk the capital we have outlaid into this, that would be nice.
Yes.
Yeah, I'll take $1, right?
Yeah.
We'll let that work. I mean, 41 ranked. The only other thing we could do in Netflix would be sell it put. But again, we're trying to make a bigger chunk of money than $1.
Yes, we have to make. I just glanced at it. We're digging ourselves out of a hole. I don't mind being long Netflix. Did you try to ratchet it? Did you put it in?
I put the order in.
Okay.
I put the order in for 99.
Let that work. This is not an emergent situation. You know what I mean? This isn't. It's not the end of the world if it works.
Yeah, that's working. Either way, we're synthetically long stock, whether it fills or doesn't fill. that's what the position we have.
And I don't mean to put you on the spot, and you can totally say no to this, but can you go to the interwebs, if you will, go to tastylive.com and show them where they can find where the zebra and the ratchet are?
Let me see.
Just pull up another tab.
Yeah. Hold on.
There you go.
Tasty Live.
Tastylive.com. You too. Can you go to tastylive.com?
And all you have to do is go to shows or learn.
Shows. All the way over.
Shows, and then down to Liz and Jenny Strategy Series. And we have here the zebras here, and
the ratchet is right above it. The ratchet is right above it.
Oh, okay.
So the zebra is the zero extrinsic back ratio. That's your 1-for-1 stock replacement. The ratchet is what you can do for a positive zebra. That's what we just walked over as well. If somebody wants to see this a little bit more in depth, it's a little bit on the older side. It's a couple of years old, but it's the same concept. The concept is still the same.
Yeah, it doesn't matter if the stock prices have changed. The concept's the same, and the deltas are the same.
Yeah.
So,
yeah.
It's funny. If you went back in this, like, where do you think SPY is back in the 2023?
Oh, because we used SPY, didn't we?
Yeah.
I'm going to go 340.
2023. Yeah, I was going to say 400, maybe 400. I don't know.
Yeah.
I don't know. Let's see. 2023, when we were filming the good old the good old strategy series.
2023. Take me back in the time machine. 3 years.
2023. Yeah. 300, 400.
Yeah. Depends on what day we film these. I don't know what day It could be.
Okay. So, you know what we don't have, which has been taking a hit? Oklo. We've been in and out of it, and it has been taking a hit. I've been taking a little bit of a beating in Oklo, and every day it's down. Every day it's down.
Is it really?
Yeah. Look at it.
Yeah, that has been taking a beating.
So we do not have it, and we've been getting in and out. So sometimes puts our buying power is hefty here.
It's not as bad. Well, for a $52 stock, it is. So that's what I don't like. I don't mind $2,000 in Oklo because we don't mind being in Oklo, but for that price point, that's a lot of buying power.
For a $50 stock.
Yes.
Yeah. So $50 stock, taking in 258 using 1800. Our last, let me see, because I think we're in and out twice recently. What did we have? Oh, this was a Bob on Fire. We had a Bob on Fire. We also had a diagonal, right?
Yeah. It doesn't matter what we had. Let's just get back in.
It's thundering. Did you know it's going to rain?
It's currently thundering by us.
Oh yeah,
too.
you said that you were getting the dye table in. Well, this is how long it took the rain to get from your house to my house because it just started pouring.
Yeah, that's how that looks about right from that part of that far. Do you know what's crazy, Jenny? Glancing at us, you know what vibes we're giving off today?
Like I have no idea what.
Wicked.
Oh, the green and the red.
Yes.
What the green and what is it? Green and orange?
Green and pink. It's supposed to be green and pink. I think it's my top because it's orange. It's yellow behind me, but that's why I think we're getting off the wicked because you're very green.
I'm very green. I can change my lights right from my phone. So I can turn them, I can change their colors right in the middle of the show.
I like the green. I think the green looks good. I think the jarring pink dress is what's giving off the
Looking out my window, it's pouring out.
Yeah. Mm-hmm. It's really dark too.
Yeah. They came out of nowhere.
Yeah.
This is how graduation was.
Yeah, you were stuck in the rain, weren't you?
Here, I'm going to post this picture. I'm going to post this picture on Twitter for people to see. And it was no bueno. No bueno.
Was it cold too?
No, at least it wasn't cold. And I don't know if I sent this to you. What's our hashtag LIZJNY?
Yes, that's our hashtag, Jenny.
Okay. So here, I'm gonna go to Twitter and show you this picture. Let me see something. They were handing out
oh my God, they were handing out ponchos. They still made you go through with it. And the kids can't even put it over their caps.
I know. The hood wouldn't fit. It was ridiculous. The hood wouldn't fit over the cap. They were handing out ponchos and everyone was outside it was at the football field, and they kept saying like 30-minute rain delay, 30-minute rain delay. Well, everyone's outside, so most people tapped out.
Yeah, I would have tapped out too. That was for the big one though. It wasn't for his like personal life.
Yeah, right. The engineering graduation was small, and that was inside, which was lovely. But the big one with Jim Harbaugh or John Harbaugh or whatever his name is, it was outside.
How was he as a speaker?
You know, Liz, it made me think that you could definitely be on the college graduation circuit one day.
Hashtag goals. Hashtag goals.
And you would have done a wonderful job. He was good. Honestly, the second half of his was great. The first half of his just okay.
How long was it?
It was long, but the second half was about and honestly, you'll like this. It'll be nice to everyone will like this. I think the second half he talked about just changing lives, and at certain times where he said something nice to someone, and they came back to him years later and said that always meant something to them, and how it changed their life. And so if you could do that once, think of how many lives you'll change if once a month you find someone and do something or say something that could really lift them up. And if he was just trying to encourage the kids to help go out to the world and lift people up and make this world a better place. That was the second half. I like that. Very good. First half, talking about his wild days at Miami.
Oh no.
telling crazy stories.
I'm going to bet and I am a betting woman, I'm going to bet the people in the audience like the first half better than the second half. Not the audience, the
kids. The kids.
Graduates, yes, the graduates.
Oh, I'm sure the kids loved his stories of, the same
Brick Street.
Loved his Brick Street stories, loved his pizza box story. Like the kids probably loved the first half and the parents loved the second half. So whoever helped him write his speech, we're like, we're going to give the first half to the kids and the second half to the parents.
It's pretty funny.
Oh, all right. I heard we're supposed to only down 20 now. Look, we were down 40. Go tell my little John Harbaugh story, and now we're only down 20.
It's been a wild day watching my son's account right now because this is one of those ones where I'm going to give you his strikes because he's right. He's on the cusp. He's 7,400, 73.95. And I watch it go through. Like he does it. And it's funny because he does it from the other room now. So I'm always like, good job. 73. Yeah, he's 7,400. He just needs it above 7,400. So let me ask you this. Small account, right? He's got a small account. And I don't know that I'm going to close it at noon, but here he's only down, like $100. He's been doing very, very well.
Yeah.
Would you roll it at a certain point?
We have viewers that roll it, that if, let's say it doesn't come in by a certain time, they roll it. But
you can only roll it like right now when it's wrapped or when it's close to the at the monies.
And how far out would you roll it? Would you roll it longer?
Well, it doesn't. Well, what's weird about it is that you can only roll it. You can't roll it out.
Wait a second. What am I doing?
You can't roll it out and down.
I put it in backwards the first time.
Yeah, flip that around. Because that would be the closing position.
You would have to roll it to the same strikes, basically.
Yeah.
Yeah, you have to roll it to the same strikes. Even that's a debit.
Yeah, even that's a debit.
Oh, and Frankie's saying, listen to Eric Church's speech. I did, Frank. I'm a big Eric Church fan, and it was good, really good. Did you listen to it, Liz?
No.
He gave the commencement speech at North Carolina.
This weekend?
Mm-hmm. Well, last weekend, or at some point recent.
I did not hear it. I love commencement speeches though, when they're good.
I mean, maybe I'd roll it. Maybe. I don't know. I used to be of the thought of like, if it doesn't hit, close it at noon. But then we saw a study that said you're better off not.
I know. I think I'm just going to let it go because I don't want him over trading either. Do you know what I mean?
Yeah. He's been on a winning streak. There's going to be losses. There are. Otherwise,
I was like, it's going to be painful when it happens, but it will happen.
Yeah, because otherwise, if you're selling a put spread, what is it? $5 wide for how much does he collect?
About $1. Like I think he's got 90 cents.
Oh, okay. So $5 wide for $1.
He's at the expected move. So all that he knows how to do is go open it up, 9 o'clock, go to the brown bar. You sell the first one directly underneath it. Like he'd be down farther if he starts, because that's how I taught him. So you go down one more. And that's it. So, but it's at 9 o'clock and he's getting, I said, you're going to get between 70 cents and $1.
And in our studies, you'll see the average P&L for a trade like this is probably like $37 or something like that.
Yep.
Or 30, I'm going to guess average P&L.
It's $50.
Oh, it is? The average P&L?
Mm-hmm.
Because
if you think about it, you're getting $1.10, you're getting this. So you're going to lose so many times to net it out to.
Yeah. So I was going to say, well, the average P&L is not $1. So you're going to have losses. So he's had a string of wins, like there will be losses.
Oh, for sure. It's just harder for me to swallow.
He might be okay. He might be okay. You never know how the day's going to end.
I know.
I did want to look at because I heard like corn, wheat, and soybeans, ZC. All right. So I've heard people talking about this. They had the big drop on Friday and now rallying back.
It's really right back. I mean, I can't believe we missed that big drop on Friday.
I know. ZW.
Same thing.
ZS. All the same. Yeah, we kind of missed it.
Okay, you can hear the thunder outside. Do you know what is like? It is pitch black outside right now. I don't know what I will do when Annabelle has her grad party if it's like this, because everybody's gonna have to be inside.
Luckily you have a big enough house.
Yeah, I would just have to move all my furniture out like Janine did.
Right.
Which is fine. No big deal. No harm, no foul, right? All goes in the garage.
Well, what furniture?
Like I would get rid of my couches and stuff and put high top tables everywhere.
Yeah. I mean, I guess that's what you'd have to do.
Yeah, we'll talk about this offline.
Positive thoughts only. Like, let's just hope that it doesn't rain.
You're coming over and we're moving furniture if it's like this.
Hey, I got a bum shoulder.
It's funny.
All right. What? And this is why, and I can't do my hair. Like I can't blow dry my hair because I can't lift my arm long enough to blow dry my hair. And so for the graduation, I suffered through, blew dry my hair. Then we were in the rain, ran out into the rain. I was like, this was the biggest waste of time.
And now my arm hurts.
All right, let's do something. Let's make a trade. I'm going to go the old fashioned way.
Did you know what I wanted to do? What we don't have in here that I would like to put in? Emerging markets. I've been hearing so much about emerging markets on other networks lately.
Sure. Let's do it.
And then we also on Friday had all those XRTs, not XRTs, all the X's that we were talking about, all the spider trades, XLF.
What are you hearing on other networks about emerging markets?
Well, some emerging market people came on and said, buy emerging markets. I said, okay, let's look at it. Now, I'm not going to go out there and buy emerging markets, but maybe we'll do something in it.
If there's any premium, and there is, surprisingly, open this up, did not expect it. I would say with EEM, Jade Lizard, it's a perfect Jade Lizard candidate.
It is a perfect Jade. There you go. That's great.
Yeah. So my call spread is at the expected move, short $1 wide call spread, short put for 70 cents or so. And I've got the 61 put at the expected move, the short call spread at the expected move. We're getting over $1, and this is only using $900.
I don't mind it at all.
No, I don't either. This is what the Jade Lizard looks on the analysis page. Let me go to the curve view. I mean, it doesn't look bad, and it's not a bad buying power.
So this is your stereotypical Jade Lizard. This is how Jade Lizards were invented, meaning 30 cents on a call spread, 70 cents on a put. And This is exactly what the P&L should look like. They've been, this is what their definition of a Jade Lizard is. We say it's a Jade Lizard because there's no risk to the upside. So then we'll put up Jade Lizard-esque positions in or buy something to define our risk in very expensive products like our SPX Jade Lizards.
Right. So I'm glad you brought it up. $1.03.
Ship this.
We'll see. If the markets are wide, I'll see if we get filled.
I mean, you can put it for $1.
Yeah, it's filled. We say this, like all we have to say is, I don't know if we're going to get filled. These markets are wide.
No kidding. And then only because I know you have it up, can you go back to the tastylive.com?
Oh, sure.
Only because I know you have it up, because sometimes I think it's good to follow through with this.
And show the Jade Lizard?
Yeah, so it's the same thing. You'd go tastylive.com, you'd go over to
shows,
and then you go to Liz and Jenny Strategy Series, and you can see what a jade lizard is. Because I know we have a lot of newer viewers, and you and I take for granted some of our verbiage, right?
Right. I agreed. And so these videos slowly walk you through all these strategies we created.
Yeah.
And it's crazy to think over the years we've created this many strategies.
Oh, there's more. If you had to add more to this, what else have we done? The spike lizard is on here, isn't it? Spike lizard's my favorite.
Yes. And the zero extrinsic back ratio, or the zebra's on here. What else is there?
The Bob on Fire, which we did not invent.
The Bob on Fire we did not create.
We did not invent, and that's why we named it after Bob, because he gets full credit for it. But people have asked us to do tutorials on the Bob on Fire. Remember, they said they couldn't find it anywhere. But if you type it into Google, you can find Bob on Fire. The Bob on Fire. Fun. The Bob on Fire, the Delta Buster, but that one seems to not be one of our favorites.
We were looking at Oklo. We never put anything in, and I know it's kind of expensive, but the Bob on Fire usually looks good in there when this is down. So we've dropped down quite a bit. The Bob on Fire, if I go to January and we're trading 57. So if I bought the 60, so the concept of the Bob on Fire, buy an at the money call, and here we're trading in the middle. So
you're trying to make it cheaper. Go to the 60. This is a bullish trade. You're fine.
And then cut this in half. So $16 and a half is $8. Sell a call for $8. So you've got the 6,100. You have $4,000.
I know that's what you're supposed to do, but I like to go to the expected move instead and make it cheaper.
Well, okay, so we can toggle it and see, but this one you've got $4,000 in profit potential. 4,000 because you have a $40 white spread, and we're going to cover this at $8 by selling 2 $4 puts. So you're selling 2 of the 35 puts.
You know what I've done on the Bob on Fire, split it. So I've done it. Well, there's no 36. So I'll do a 35 and a 37, which makes a 36. If you want,
but like 16 cents,
right.
16 cents, I don't mind. But to your point, if you're not going to quite get it, you can sell 135, 137.
All I'm just visually for the viewers to kind of understand what's happening is there's no risk all the way down to those puts.
So basically, if Oklo goes up, you've got $4,000 in profit potential. If it goes up from here to 100, and to the downside, you don't have risk until this 37, 35 level.
It's basically 36, right? Because you have one of each. So then you'd be the proud owner of Oklo at 36. I don't mind this. I mean, it's got quite a bit of buying power, but guess what we'll do? If we need the buying power back, we'll close this. Win or lose.
I think that in some products, you pull up the Bob on Fire and you're like, this looks great. We'd get long 200 shares around 36, but we have $4,000 in profit potential from here on up. I mean, who doesn't love this trade?
It is a bullish trade, right? So, I mean, I have Bob on Fire and Oklo. I have my Bob on Fires in Oklo, and I don't kick in until 85.
And I don't mean who doesn't love this trade here in Oklo. I mean, who doesn't love the Bob on Fire? Like, I love the Bob on Fire trade.
No, it's good. It's good. But like I said, it's a bullish trade. So you will lose money if it goes down.
But instead of buying, this is an alternative to buying 100 shares now. If you buy 100 shares at 57.81, instead, how about I put this on? I can still make money up to 100, and I don't buy my shares until 36.
Yeah, no, I love it.
I think Bob on Fire is the clever guy.
Clever. And we're filled.
So, and this is a longer term trade. And when you have a longer term trade, this isn't going to come off for a full win if Oklo runs up to 100 next month.
No, but what we see, and we've kind of vetted this, it's almost like a slower moving train. And the fact that, say Oklo opens up tomorrow at 67, because it's 57 right now, so $10 higher, you make almost 50%.
Right, almost 50%. But now, like, I've barely been, as Intel kept running up, I'm just going to look at my strikes just because, like, I'm barely making money now on the up move in Intel. I think when things keep their vol, so my Intel calls, on it because I switched my stock to a Bob on Fire, and I've got the January 65.95, which
is all in the money.
All in the money, and would be $3,000 at expiration. You see, it's only 1,700. So
yeah, it's about half. That's exactly what we do see. It's about half.
Yeah. But you don't. You're not making half the move anymore. Like when Intel hit 95, was going to 100, went to 130, went to 130. You're no longer. You're tapped out.
You're capped out, but I think it stays wrapped around a half. And as time marches on, you'll get a little bit more. They're putting a little.
Even when Intel was 130, this was still trading like half the way.
Yeah.
Yeah. So then you're just, if you want to keep it, you're just kind of stuck in it.
Yes, for sure. Jenny, we are almost out of time. It is 54 already.
All right.
So let's, I'm going to check Twitter. You don't have to. You can kind of see if there's anything else we need to do in our account. No, we got to everybody on Twitter too. So nothing else needs to be managed. Nothing else. We did all of our in the money signs. Everything seems to be going away. Can we look at Smash? Is that down today?
Yeah, it is down. SMH. So we've got the.
Ooh, look at that. It's finally coming outside of our top strike of the.
The 540, the 545, 560 call spread. So we're below it now.
Not bad. How has it been working with your rolled out SPX trades? Are you battling it with the VIX or is everything okay?
Let me see my SPX trades, because all I have in SPX now are short call spreads. And
this move has to help you. The move on Friday had to help you, and this has to help you. But I think it's hard because you've rolled them out, so now you're battling vol. Like when vol pops, it's going to hurt your call spread.
Yeah, so I can't. It's hard to tell because if I look at my P&L open, it's hard to tell because they've all been rolls, right?
Yes.
So I still have, I don't know, my handful of call spreads. I still probably have like 4, even though now they're all out of the money. They're June and there's still over $4,000 in like call spread premium that has to come out of them.
Yeah, no, I get it. So, pretty interesting. All right, Jenny, we are out of time for the day. Spoos are down 22. Okay, what do you think is going to happen at the end of the day? Nobody should listen to us, but.
Yeah. No, I would not, don't even ask. Stop. I know you ask me this every day.
It's fun. It's for entertainment purposes only. What do you think is going to happen?
I think we're going to be like unchanged. I kind of think we're going to be unchanged.
Darn it. I agree with you because I was going to say I think we're going to be unchanged.
All right, everybody. Have a wonderful day. We will be live from the SIBO tomorrow.
Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. See you tomorrow.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
I'm feeling myself, yeah. I'm feeling myself, yeah. I'm feeling myself, yeah. You gotta level up. Just look at me. You gotta level up. They kinda like it when you gotta level up. Just look at me. You gotta level up.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Glenn Freiberger and, of course, Kevin Davitt from NASDAQ. How you doing?
I'm doing great. Good to see you both.
Absolutely. Likewise. We were just talking about baseball before the segment started.
And golf.
But I heard from someone that you were at the Crosstown Classic, maybe a little litty. You were on the big screen.
Got on the Jumbotron.
Yeah.
That was electric.
Mm-hmm.
Crosstown Classic. More Cubs fans than Sox fans,
Really?
I'd say, at Rate Field.
What day were you there?
Friday night. It was great. Your unnamed source is Nick Batista. I'll out him. He was having a good time with his boys.
Mm-hmm.
He had on a Sox hat. it was a good game. It was pretty close till Cubs busted it open, but yeah, I mean, weather for all 3 games, fantastic.
And they're
Great night
all
out,
high
great
scoring
night.
games too.
Ate walk in, grab a Polish sausage. Where's my seat? By the time I get to my section, there's no more sausage. So had to go back, get an Italian beef, and then I was ready for the game. But yeah, it was a great time. What'd you guys get up to this weekend? Golf. Baseball.
I actually
Child, not my
just
own.
hey, great time to be outside.
Yeah.
Chicago's back. Welcome to
Chicago
summer.
in May. Dude, you can't beat it.
I'm just so glad to stop complaining about the weather.
Exactly.
Because it just makes it feels so reductive.
Yes.
But it's such a topic of conversation and
a
daily
layup.
life living here.
Yeah.
When all your friends, I grew up in the South, and it's like people have been in shorts since February.
Okay, I was in Dallas last week.
Oh, yeah.
I'm going to call that the South. It was hot as hell. 90
Yeah.
something.
See, now it flips.
Oh, yeah.
Now they're in purgatory.
Yeah.
And we get to enjoy a nice temperate climate. So I'm here for it.
And a temperate equity market
Yes.
thus far today. Transition right
Sure.
Yeah. We have NVIDIA earnings week. Everybody celebrate. May 20th after the close, so Wednesday after the close. I just wrote an earnings preview that is on tastylive.com. I put it in the YouTube chat. If you want to click on that link and check it out. I think it's a cool little AI-generated image, if I do say so myself.
I
there. What stuck out to you as far as this report?
I think it's going to be just an insane number that they post for revenue and earnings. I think the big question mark is China, because their forecast has 0 revenue for China right now, but that could be greenlit and all of a sudden $50 billion infused. But they also have this new Rubin product that's supposed to be 10x more efficient relative to Blackwell. So
10x more efficient.
apparently,
Is that even possible?
not like from a holistic standpoint, but there's specific things about it that are supposed to be 10x more efficient.
Thank you for clarifying.
1/10 the loss. I forget the phrase. I just wrote it, but forgot it already. It's Monday.
That's all
I
right.
should have looked, but up-down range as of right now, I'm going to guess 8%.
Pretty close. It's actually a little lighter. 6%.
Oh, wow.
Just over
Okay.
6%. So we got 14-point implied move, $221 stock price right now, just fresh off all-time highs. However, 6% is relatively low for most tech companies that will report, but for the 4-day cycle, you have 14 points of an implied move. For the 31-day cycle, you only have a 24-point implied move. For the 60-day cycle, twice the amount of time, you only have a 29-point implied move. So all of the implied volatility is still really front-loaded, and the 4-day cycle accounts for more than 50% of June and July holistically. So, yeah, lots of implied volatility being pressed into the weekly cycle, even though it's a low notional number.
Right.
I think you'll still see.
You're talking about a $5.5 trillion behemoth. So that low notional still translates into huge market cap.
Yep. It's the beauty of a stock split. Maybe Costco. Maybe Costco will give us a little split here. They have earnings coming up on the 28th, so next week. But
I like that you brought that up. That's one of the names, and this is a point I like to get into often. A name that probably wouldn't be associated with the NASDAQ 100 on first blush, and NVIDIA would. But Costco is, like, depending on the week, a top 15, top 20 constituent. Walmart is as well. And it is another name that's kind of like synonymous with everyday life. You know, there's a lot of people over the weekend that went to Costco, and that's just what they do between your rounds.
Yeah.
And they are a meaningful contributor to the NASDAQ 100, and it's not something that most people would immediately associate with the index.
That's actually,
yep,
I didn't either.
Yeah.
But
learn something new every day.
Yeah.
Thank you, Kevin.
You're welcome. I can keep going there, like names like Honeywell, Baker Hughes, like I mentioned, I was in Dallas and I kind of talked about a reframing of how we think about large cap US equity exposure and mentioning some of the names that are part of the index that I don't think are often associated with it, because throughout time there has been this the tech index. And my sort of big picture argument would be that there's nothing that operates without technology now. So we need to be able to think a step or two beyond that. The likes of Walmart have expanded their margins through logistics and technology. And that's going on across the economy. And so, I'm talking my book here, but the NASDAQ 100 is arguably representative of a much broader swath of the US and global economy than most people probably their heuristic bias would sort of indicate.
Yeah, absolutely. I think that's something that should be on at the forefront of everyone's minds. Just like, it doesn't matter what the company is. That company is using some sort of software product or some sort of accounting management that is driven by these companies and or AI. Like, speaking of golf, like I guarantee you, golf courses around the world are being sold on some kind of like Oracle product that totally makes the booking system and the refunds, all these things much more efficient. Like my dad is an Oracle applications implementation consultant guy. That was a long.
Yeah, I don't know what that means.
Whoa. Well, what it means is he has a hospital that he works for in Montana.
Okay.
But he went to the hospital and they're like, we need to change all these internal systems. And he's like, oh, I've got an Oracle product for that. And he basically he makes a custom suite of products that fit into the hospital specifically.
And they have very specific sort of requirements around HIPAA, et cetera.
Yeah.
That's a perfect example and sort of explains the Big Sky shirt. That is a gorgeous part of the world.
Oh, it's incredible.
Yeah.
Yeah. It's
is
my
that
favorite.
Roughly where he's working out of?
Helena.
Oh, yeah.
So close.
Yep.
But yeah, same area. But yeah, Montana is the most aggressive weather and or scenery. Like you go there and the weather shifts like on a dime, and all I think about every time it happens is like, if you were stuck here in the 1800s, like this is
Good luck.
tough.
People were tougher.
Yeah, absolutely.
There were also fewer of them
That's
year round.
That's true.
Survival of the fittest. So you're telling me Oracle's like civilian Palantir?
Yeah. Yeah.
Good one.
Civ Pal.
Civ Pal.
For short.
Maybe slightly less radical connotations around it.
Yeah.
But no, I think that's a great point you made around the robustness of the NASDAQ, especially right now where you have all these drivers where you always have in the back of your mind these cross-asset correlations.
Yep.
And that really kind of reframes how you think about NASDAQ as opposed to the S&P 500.
Good, planting seeds.
Not.
So let me make then one other point
Please.
as I think about passive dollars, because maybe I've said this before, but the success of a derivative product is in large part tethered to the interest in the reference asset. So passive dollars. I think about that like median, the 50th name in the NASDAQ 100, the 50th constituent last I checked was like Monster Beverage. And I think the weight is 0.38%. So I think about $100 going in, 38 cents, not significant. But then I looked at the 250th constituent in the S&Ps and it's 0.06% allocated, right? Like at some point, why bother? Everything below that per $100 is 6 cents or less. And I do think that sort of recipe at some point explains why off the bottom in March, the NASDAQ 100 is up in the ballpark of 30% and the S&Ps are up 20 or what have you. And we have seen that play out cycle after cycle. To be perfectly fair, on the downside, you're going to see a similar dynamic where the NASDAQ 100 earlier this year was down very close to 12% and the S&Ps were like 9.5%. But over long time frames, the math works out fairly well on that when you think about indices that typically move up roughly 3 out of 4 calendar years.
That is a really interesting point. I remember specifically seeing a Monster Energy tweet where it was like, if you invested in Monster Energy 20 years ago, you'd have $20 million.
It's legit one of the best performing names in the past couple decades. Oh,
100%.
Now let's talk about some ADV growth, huh?
Let's do it.
Well done, production. So we go back and forth ahead of these programs, and I try to give you some sense of what I think is interesting. Now, big picture, this is going back to the beginning of 2022. To be fair, the NASDAQ 100 NDX options have unequivocally benefited from the introduction of daily expiries. In August of 2022, we introduced the Tuesdays and Thursdays, and you see really, really meaningful growth, okay? Relative to other index option products, NDX has been growing much more rapidly, to be fair, from a lower base. Let's put these numbers in a little bit of perspective. May average daily volume in the ballpark of 125,000 probably doesn't seem wild, but when you think about the notional exposure and a roughly $3 million underlying reference notional, 2.9 million, you are talking about the equivalent of about 5 million Qs, okay? So a lot of notional exposure is being managed in here. The point of caution, and I don't know if you guys have some like banner where you could be like, this dude is a little bearish, it should go up over my shoulder here. I am a little bit bearish and have been arguably for a couple of weeks. But the months I called out here, July of 2024, like maybe January of last year, if we could pull it back up, I would remember, May of this month, where you see a meaningful pop, March of 2025, right before tariff stuff. October 2025, that's when Bitcoin was whatever, 125,000. When you see those big jumps, when I see them, I get a little bit concerned. They have often coincided with big jumps higher in the index. In these handful of instances, high dispersion, low correlation, generally driven by a handful of names, and some sharp drops. So August of 2024 was that. We talk about the carry trade unwind. I would say it was dispersion implosion in early August. March of 2025, just after that was tariff concerns. October 2025, October 29th was the previous high for the NASDAQ 100. January of this year, we saw a pullback, and now May. Again, I am not trying to influence anybody's trading, but I like when people think about what index might more appropriately correlate to their overall portfolio holdings and thinking about maybe expressing the same views they may in a competing index and take a look at the one that I care about the continued growth of. Sorry for that monologue.
No,
that's fantastic.
I think a lot of this can also be explained by, to your point, like the concentration of some of these names and the fact that even this rally from the lows, from the war lows, has been largely driven by 10 names.
Yep.
And really like 2 sectors.
Yep.
So what drives the market higher in a very concentrated way can also pull the market down in a very concentrated way. Especially when you bring in the human element of, let's say you invested at the lows, or like I know you've taken some shekels out of Microsoft. There's people that are out there that are still just like static long, or they're invested with leap options or whatever. They start to see a couple days of losses and they're like, maybe I should close this, which creates selling pressure and can really just like add to, if that is to happen, it can add more pressure to the downside. So I think this is really interesting where you see these previous high points followed by low points.
Yeah. Who knows? I would love to see this just continue higher. So would the people that I report to. But ultimately, your audience is concerned about their account balance. And how do you protect that after a run like this? How do you potentially tweak? I think about late March. I think I was in here talking about how upside in NDX specifically was unusually cheap. That is not the case right now. In another visual, when we get to it, it has become that on a relative sort of vol to vol basis, downside is cheap. And you see that play out through cycles. Again, not telling anybody, man, your production crew is on it. Okay. So here I have to plug some guys like you guys talk to Brent Kachuba at Spot Gamma periodically. I talk to Brent. This is one of their visuals that I rely on regularly, explaining it for somebody that maybe hasn't seen it in the past. They look at a constant 1 month 25 delta put relative to the call, and it's put vol minus call vol. So it's kind of always positive, and that thing vacillates between 12 vol points wide at the sort of March bottoms, early March panic about the war, and we are now back into 3-point vol points wide. So let's just say some realistic numbers would be about the 1 month 25 delta put trading on a 25 vol, and the 25 delta call trading on a 21 vol, or I'm sorry, 21 and a half. That is cheaper than it's been in quite some time. And I am reminded, I am old enough to have lived through like the late 90s and 2009, the old floor saying of like owning insurance when you can, not when you have to, can make sense. Again, that informs, and I look at these other inflection points in October of 25, those low points have been great entry points for long exposure. Again, just my opinion, and if you have that this guy's been a little bearish sticker, you can apply it.
I've been waiting for them to put it up there. I've been looking.
Downside is now cheaper than it's been in quite some time. Could it get cheaper? Yes. We have seen an unusual amount of interest in upside exposure. It has been warranted. In many situations, it's worked over the past couple of weeks. That could change quickly.
So in terms of, this is super interesting, in terms of, not only this raw level, but as a function of time, you don't really often see this level sustained, regardless of how high we might creep. Is that a bigger takeaway to you rather than the extreme itself? Or could this continue?
I like the way you put that. I could have stretched this out, but the visual becomes, I think it loses a little bit of luster and like thinking back 4 years. Sure. But that is a really good point that the staying power, I think options are so attractive because there are a lot of structures that allow you to be potentially wrong directionally, but have staying power. And from a vol perspective, I would argue your point there makes a lot of sense that like you're probably not going to get hurt too bad carrying a little bit of sort of skew in the market here. But who knows how that plays out. We both work in compliant, driven worlds. But your point about, yes, this is something where it would probably be difficult to get beat up too badly resonates with me.
Very interesting.
Yeah, I think when it comes down to using NDX and kind of strategizing for something like this, where like maybe the market keeps drifting higher, vols kind of low, but if you were to get this downside move, how can you make the most of it? I was looking at this morning, and I was just filled on a trade in NDX. So
let's talk about it.
I did the same thing that I do in SPX. So I really like to do these wide butterflies in SPX. So like 100-point wide, 50-point wide SPX butterflies. I think they're very easy to manage. I have one here that's was 100 points wide. And what I've been doing is instead of keeping that 100-point wide put credit spread, if the market keeps ripping higher, I'll just move the long option and bring it in. So I'm reducing the width of the credit spread so that if the market does reverse, that butterfly is way more valuable and can hedge the entire portfolio. I just got into NDX. So I did the June 18th, 30-day AM settled expiration, but I did the 27.7, 27.4, 27.1, 300 points wide, symmetrical butterfly for $1,000 flat. So what I like about this is
for 10 points on a $300 wide spread.
Yeah. So $1,000 of risk, like 30,000 max profit if you were to just pin it perfectly. But I like these trades because if NDX keeps rallying, that $1,000 is not going to go to zero. This is such a big product that it'll be like $100, $200, $300 loser if the market keeps rallying. But I have offsetting bullish positions that would benefit from that. But if you get the reversal, and especially if we look at the curve analysis here, if you get the reversal on this thing, right now, it would be, if we get down to the 27.4, which is kind of like right here, erasing a little bit of this move, it would be a $700-800 winner, huge return on debit paid. But if you kick this out and you look at like the beginning of June, now we have the evaluate date at 17 days out, leaving 15 days-ish for this expiration cycle. Now you're looking at $1,400 if you just get down here. So this can be a huge reward relative to risk, especially if I place this, I offset the risk with other bullish positions or neutral positions, and then if I get the lucky timing of like we're 2 days out, you get a 300-point sell-off in the E-minis and a massive washout in the NASDAQ, this can be a massive hedge just because it's $1,000 of risk for, what is the max profit? $28,000 max profit. I'm not shooting for that, obviously.
You started that with, this is something I've done probably for quite some time in SPX, and I bet there are tons of your listeners that could maybe say the same thing. So thank you for saying that. I can go out there and say like the same strategies you might run in another index product, but we are increasingly seeing that take place. And as far as relatively wide butterflies go, huge fan. Like the point you made about that ratio, being able to manage it, get a little bit creative with that as markets move, it just gives you so much flexibility and power to be wrong and still potentially turn that into something that works. So thank you.
Yeah, thank you.
Yep.
You would just need the NASDAQ not to go up every single day. We're on pace for our first consecutive down day in like a month and a half. What's going on?
It was funny. Last night I looked at the markets and I was like, ooh, maybe a little spice today. And then I looked this morning.
Wake up.
Everything's up. Everything's up. I'm just like, oh.
Crude went
never
back
mind.
down. So Friday was the biggest down day in the NASDAQ 100 since March 27th, right before the lows. We have seen a vol up, market up dynamic for kind of 2 weeks now. That's unusual. Right, when unusual things persist, at some point there will probably be some mean reversion, and the question becomes, right, like, well, here, let me pivot a little bit. The oil thing. When I was here 2 months ago, we talked about how that really negative correlation between oil and equities was in play. That too broke down over the past couple of weeks, where oil's been creeping higher and the market doesn't care. At some point, might that come back? Or how do you guys think about the energy dynamic and the inflation that sort of might run alongside it?
Yeah, I think you're thinking about this exactly how I am. And I come from looking more at currencies, and you have a similar kind of relationship with interest rates, both projected and across the risk curve, and you start to see more and more that it's more about inflection points than 100% correlations where this up, this down, and we're certainly seeing one of those inflection points right here today with crude oscillating around that $100 a barrel level, where it starts to play through again. And I think for the past month and a half, aside from being long equities, shorter and shorter time durations for trying to get directional across asset classes has allowed you to, play when those pick up, but also when those break down a bit. But as for the future, I don't know how much longer
What
this environment
about
can.
rates? I am getting outside of my general comfort zone here, but I track them week over week and globally. Rates blew out last week. That has knock-on effects in currencies. How do you see a potential angle there?
You're absolutely right. And I think the most interesting example is looking at this pound dollar, because you have, like you said last Friday, a global bond sell-off. And so that's, equal price action for U.S. rates and rates in the UK. But you saw a completely different dynamic play out through their currencies. And it gives a pretty interesting backdrop to view potential trading opportunities, because one step, the second order effect below that is just confidence. And you aren't seeing that in UK politics right now. And it's all about foreign investment. So you have, in theory, when rates are this high, that could produce an inflow in demand for holding that asset. But you have this confidence. Maybe it's politically, maybe it's like we're seeing here in the U.S. with just overall economic growth and continued capitalization of these large name equities, where you have these high yields corresponding to dollar strength, but not corresponding to pound strength.
Currency.
And so, like you said, these correlations break down and pick back up seemingly when they want. But this market has been particularly interesting to watch. We're seeing a big stabilization here for the UK to start the week, and a big pop in the British pound. But overall, this week we'll have inflation statistics from the UK, but that'll be taken with a grain of salt and viewed through the lens of how sustainable is this inflation? Is there growth to defend it? And those corresponding central bank hikes or cuts with differing growth, that's really the catalyst right now in the currency space, because it appears to be right now that the U.S. can sustain it, and you could have more of this Buy America, where not only are U.S. equities going up, but the dollar is commanding more and more demand, or you could see that confidence falter, and it's not good for the bond market or the currency space.
Fascinating. Oh, yeah, you pulled up the forecast for U.S. rates?
Oh, yeah.
That one moved last week.
Oh, it's insane. I look at this basically every day that I'm here.
The
Can't
CME.
say that I look at it when we're out and about on the weekends.
When you're on the back nine?
Yeah. But maybe. You never know. But yeah, I mean, we have a almost 50-50 December decision between staying at the current rate and hiking 25 basis points, which at the beginning of this year, that was not even a question that we would consider hiking rates. But here we are. It's been wild.
The probability of a cut has essentially been priced out. It's, like 40%, 25 basis points, and like a relatively small percent of a bigger than that hike.
Mm-hmm.
And we had Warsh confirmed Thursday or something last week. Like, feet to the fire. Welcome to the job, Kevin.
Yeah.
But it'll be funny. But two kind of similar dynamics in equities and with this new Fed that'll be interesting to monitor, at least, is Kevin Warsh's Fed. He doesn't want to project as much, what they're going to do. Mix that in with, if we move away from quarterly earnings to semi-annual, a lot more playing in the dark. But I have no idea what that'll mean from a price action perspective. Or I could see both cases for volatility, right? You could see it cluster in greater or fewer number of occurrences, or I could see more speculation year round with like just a few instances of recentering. So.
Yeah, I think the less forecasting they do, or the less public forecasting they do, the more the actual event matters, and you'll just see heightened implied volatility in SPX, NDX, all the products that could move based on a surprise in either direction, because it's all about like the surprise factor.
Yep.
When they go on stage, by the time they go and they talk, like, you know what's going to happen. But if you no longer know what's going to happen and it could go either direction, that's when the markets can really chop. And that's what we saw during COVID. Like every Fed announcement, every CPI, PPI report was sending the market up or down 200 points. So we could be back there.
Fun times.
That sounds fun.
Indeed. Well, thanks, Kevin.
Thank you for having me.
Appreciate
So
it.
fun. I
Absolutely.
appreciate it. Look forward to
100%.
being back here in a couple of weeks.
Yeah,
All right.
Good seeing you, Glenn.
Cheers.
E-minis and NASDAQ down a little bit here. E-minis down 35, NASDAQ down 300, Bitcoin down 2,800, and ETH down 5.8%. Kind of a big move there.
Man, yeah. There's been no advantage to weekend trading for these cryptocurrencies. All it's meant is bad news, that they're ready for the bad news on Monday and continue to sell off. It's not like they're already priced perfectly.
No, it's been super volatile, but this currency space here, I looked at the profit loss. I see I've made back a couple $100 since last week, which you love to see. We're almost out of the water here in this dollar franc. Maybe a couple more days like this, and we will be right back to a slight green number, and I can close this position once and for all.
Yeah, I mean, this pre-market today, you had even more glory for you. We got as high as almost 78, 80 there, pulling back a little bit, but still structurally pretty strong for your dollar franc position. First down day in a week. And we're seeing this across the board. Just a bit of a consolidation day in U.S. dollar, less volatile of a reaction than we're seeing in the equities, which surprised me on the open. One of the more fun openings to the week, I think. And we still, now we're seeing, NASDAQ keeps going. Now down almost 320 points. And we're not seeing as much continuation for this U.S. dollar, but it makes a little bit of sense. Just some breathing room from a very strong week for it yesterday. But as I said with Kevin on here, the market to watch this week is this pound dollar. We've had a huge day, and that one keeps going to the upside. But after dropping 2% in 1 week last week, the pound has a lot more work to do, only up almost 1% today before getting back to those levels. So you have a similar thing that you have in equities. You know, is this a one-off day, or do we have stronger continuation long-term for this U.S. dollar? Like you hinted at, the interest rate picture does spell some more potential upside for this U.S. dollar. Is it already priced in? I'd argue you have kind of the expectations and the confidence I was speaking to in the currency space are a bit disconnected. So I wouldn't be surprised if we saw more follow through with similar rate cut hike odds. But it should be another exciting week as we still, even in the currency space, have this NVIDIA earning as a catalyst.
It's going to be bonkers.
Bonkers.
Yeah.
Were you able to manage your positions Friday, or did it still go up on Friday? Did it pull back on Friday? Yeah, it pulled back on Friday. Because you had last we spoke about your positions, they had gone very well for you. You went further into it to the upside, and then you got another 4% pop.
Yeah.
So did you take anything off?
I did. I took the whole thing off. So I took it off, I think, the next day. So we talked about moving the calendar spread into a diagonal spread. So I did that, and then the next day it was up another like 4%. So I closed that for a $300 winner, and I no longer have an NVIDIA position, but I will have an NVIDIA position on Wednesday.
Because now you can go into it with a pure earnings perspective.
Yep. But I did close that Costco trade. So I don't know if I think we talked about this too, but it was the same thing where Costco, I had the short option pre-earnings. I rolled the short option into the earnings cycle on a rally, reduced cost basis from like $500 down to $1.70, and then into this continuation in Costco This was a big winner. This was a $630 winner on the calendar spread there. So yeah, it's getting closer to 1100. So I'm like, I don't need to hold this risk anymore. I'll just close it and then re-enter for earnings when the time comes. But I am going to close this this little position. I've got this pound Aussie dollar.
There you go.
$50.
Yeah, that's
One
not
click
bad at
close,
all.
Smash.
And that one was, when we were looking at the chart, that was a severe price extreme.
Mm-hmm.
And you got a pretty quick bounce off it. You put that on last week. Because, we hadn't really spent too much time at those lows. And, up 100 pips today. That's fantastic. Well done.
See it. Thank you. Hey, it's you. It's all you. Illuminating
Nonsense.
these pairs that are at
You gotta
extremes.
you
That's all
gotta
you
do a
need.
little digging, but everything. The nice part is you have access to 36 combinations of the overall offering is 86. But if you're just looking at major pairs, meaning you're just monitoring 5 or 6 economic hubs, you have quite a bit of flexibility and customizability to look for if you're a technician. You know, the tape structure that looks favorable to you, or piggybacking on a fundamental thesis that appeals to you. So, yeah.
Yeah, and you have the ability to trade like directly on this chart. You can set stop loss orders, profit target orders, those sorts of things.
Yeah, which is nice, especially when you have these charts are, more akin to a futures chart. We have these tick 24/5 from Friday close to Sunday open. And so, if you were to put a bearish position on in this market from a risk reward standpoint, it wouldn't be ridiculous for you to put a stop loss right at those highs we tested this morning, even just on this most recent candle, and just play for a little bit of reversion back. So easier to know when you're wrong graphically, and just how much profit you could expect from some of these positions depending on your time horizon. Because remember, when you went into this dollar franc position, you said, I want to hold this for 6 to 8 months. Remember you said that?
Yeah, I did. I said, hey, I want to just hold this forever.
And everything is going to plan.
Yeah. So, you can, I have this position on. You can create the profit target or the stop loss here, and just manipulate it however you want, which is just a magical thing. But I will be holding this until it is profitable, because that's just how my brain works. Whether that's a good or bad thing is yet to be seen, and we will eventually see the green on this thing, I think. And if not, at least I'm picking up $3 a day to hold it.
Booyah.
Yeah.
How are we looking? What else is interesting this week? I mean, are you looking at any IBIT options? Because if you backtrack from what we expect to be the week's catalysts, NVIDIA earnings, and anything off the cuff in terms of our favorite straight, the Hormuz variety.
Yes.
It's hard to imagine bad news coming out of it, unless it's open fire again.
Which hopefully...
I mean, you've got, like you said, a stronger move here when you think about where we were in Bitcoin on Thursday than we are today.
What about ETH? Down even more than Bitcoin. Because I have this IBIT position where I have 100 shares, and I've got the short call against it.
Oh, nice.
Way out in December, because I was just rolling up and out and just manipulating where my cap is. And I ended up with the 55 strike, and even into the sell-off today, like, it's still gaining value. And you'll always have delta gains on an option, even though this is out 214 days. If we get an IBIT price that goes sub 40, closer to 35, like, this option will be $100, and I can buy it back and then get back to a more near-term option that's closer. which is the beauty of short options against 100 shares of stock, is you can just manipulate it however you want, depending on what your situation is. But ETH A,
I mean, IV rank real low, which is that
which tells you that this 61% IV, although the 61% IV is high for any product, it tells you that this could be even higher with an IV rank of 12, or it has been higher.
Does that quick Dr. Data math check, IV rank, does that have any sort of dependency on overall asset price or not?
I mean, indirectly, yes, because the price would, the price moving aggressively will change implied volatility, which will change IV rank, since implied volatility is what IV rank is based off of. But it's not a direct mathematical thing. IV rank is just what's the high of IV, what's the low, and where are you at right now. But the other underlying factors that can change or contribute to changes in implied volatility, like the stock price increasing or dropping, does affect IV rank indirectly.
Because if IV rank takes the last full year, if now we are at half the price of Ethereum that it was for much of the past year, it's saying, is it on a percentage basis or on an actual raw? Oh, very nice.
So yeah, you can do this for any product. You can just chart the IV rank, but I would say this spike up here, massive spike in Feb, what was that? I don't even remember. We can take a look. That was probably the initial sell-off, yeah. So from 26 down to 14, cut in half, beginning of this year, IV spiked. But that's another thing with IV is IV rank. So this huge spike is changing the IV rank because it is inclusive.
Yep.
So this spike in IV rank is what is creating this 12 IV rank to the downside, even though IV itself in ETH is still high, 66% is still good if you're trying to sell premium. So I think there's always something to be said about that. And when you have these big macro events where all IV ranks are through the roof, once that event falls off the 52-week, it changes all the IV rank readings. So
not punchline, not worth attributing too much weight to because of that outlier propensity.
Yeah, I'll look at IV rank, and if it's high or low, I'm like, okay, that's interesting. Let's take a deeper look. But I always look at IVX because IVX, it goes back to the statement of if you have an IV rank of 100 in gold, but then you look, or TLT, which actually is probably pretty high right now, 51% IV. You might be saying, oh, I got to sell this premium. Then you look at the IV of 14%. Oh, there's no premium to sell because the IV rank in TLT means nothing from a short premium standpoint. From a long premium standpoint, or if you're trading it directly, sure. It can be something that can trigger you to start trading it or stop trading it. But I don't care. This IV rank could be 100. If I look and I see 14% IV and you go and try and sell an at the money option for less than $1, this just doesn't do it for me. Where ETH A, 13 IV rank, but 60% IV, way more premium, and you can sell that same dollar option for a $15 product instead of an $80. So much more inclined to do something like this, especially into a sell-off. I think I'm going to get a little spicy here and just sell the in-the-money option slightly for the covered call exposure of getting a little bit of intrinsic value in this sale of this option, but also extrinsic value to hedge a little bit to the downside. But this is mostly a static delta play with a little bit of extrinsic value.
Very nice.
So we'll see. We'll let that work. We'll let that simmer. I'm going to pop over to the YouTube chat, see if there's any questions here. If you want to join us real quick, we're on Tasty Live, streaming live, as always. Here we go. The Rubin platform claims to reduce inference token costs by up to 10 times and requires 4 times fewer GPUs to train mixture of experts, MOE, models compared to NVIDIA's previous Blackwell platform.
Why?
Smash. Yeah. Smash. Yes. Thank you for the help. 1/10 the inference cost. That's
what you meant to say.
That's what I was trying to find. I couldn't find it. The inference cost. What else we got here? Costco is not only a great place to buy gasoline and rotisserie chicken, it also makes a great poor man's covered call trade. Currently carrying 4.7K in profit. That's a lot of chicken. Yes, it is. That is about 80 years of Costco membership cost, I think.
Pretty impressive. What about Walmart? They've got earnings this week. Earnings meeting, getting close to all-time highs.
Yeah, I think like it's interesting because you think about inflation and how it affects everything, and I'll always check like what's Walmart's stock price, what's Costco, what's McDonald's. That's like the big three.
Yeah, but you're starting to get, like Kevin was saying, different dynamics. That rationale might not hold when you have.
McDonald's in the dumps here. Decent.
Did not pop on their news of McDonald's Park.
Yeah. Which I'm very intrigued to see the offerings inside said park. There's going to be like
flagship. Is that a good enough answer for you?
Yeah.
Flagship. You want international? You want to be. I thought that'd be kind of fun. It's a soccer.
Yeah.
First stadium. You get a little international with
That's what they should do. If they're not doing that, they should do whatever game they're hosting or whatever country they're hosting, they have a different menu item from that McDonald's.
All right. I'll talk to my guy.
Yeah. Appreciate it.
My guy, Ronald.
Does he wear white makeup, big hair?
I can't say.
Oh, Glenn. Silly. Yeah.
But for something like, I guess Costco's next week, Walmart, if earnings are on Thursday, are you doing anything today? Like, is there anything in the price that would make you act today as opposed to Wednesday? Or you're just playing with less complete information if you do something? Like, obviously, in hindsight, today could be the high and you sold into it and it works out. But going into it, there's no reason to act today unless you thought it was a price extreme.
Yeah, I mean, it's a great question because like we've done these pre-earnings trades with the long option in the earnings cycle or after it, and then the short option before the earnings cycle. And I like those setups because it gives you the extra ability to roll into the earnings cycle and reduce cost basis, like I did with NVIDIA and Costco. Both worked out very well. But here, you don't have that. You're just placing a trade before earnings. And I think it can work out if you have a directional trade. But if you place a neutral trade today, it is not something I like to do because neutral trades require the earnings announcement to be announced for you to get the IV crush that you're looking for. So if you're doing like this random like 5-point wide iron condor, I don't like this trade because this stock is going to move. Implied volatility is going to stay bid. The premium is going to stay bid. Like you're basically just putting this on now. And if there's a crazy move in Walmart,
you're off-centered.
You're off center and you're just taking losses. Like there's no profitability on this trade until the announcement happens.
Right.
So if it's like straight up neutral, I would not do it. But if you want to play like for a direction, I think that's fine. Like if you did a 135, 140 diagonal spread here, like you're still going to make money if Walmart rallies before earnings. And that's just because of the delta move here. So full directional trade, sure. Neutral trade, I'm waiting till earnings.
Interesting.
Yeah. Can we break down Liz and Jenny's Oclo trade? Sure. Crosstown Classic. Let's break it down.
Let's show you what they could have done better.
Jokes Jokes, all jokes. It looks like a risky, somewhat risky form of a Super Bowl. I would have to agree. Oh, this is out in Jan. Wow, they're getting spicy. Yeah, so it looks like they are buying a call spread, 6,100, 40 points wide, selling a 35 put and a 37 put to finance the whole thing for credit. So yeah, the expiration graph is like this. So they're basically buying this call spread out in January for nothing. They're offsetting the initial cost of the call spread with the ability to take 200 shares with an average basis of 36. And maybe that's what they are okay with anyways, which I think is interesting. So yeah, we've done these Super Bowls with defined risk put spreads. This is just an undefined risk put spread, but they're taking 200 shares of risk at 36 to finance the entire cost of a 40-point wide call spread to the upside if this thing really explodes. So I would assume that they said, hey, if Optical rallies, we're going to be golden. We're going to lose the value in the puts. This call spread's going to appreciate. And if it doesn't, we're comfortable taking these shares anyway with an average base of 36. That's it.
Genius.
It could work. It could work. I scrolled to the bottom of the chat. How about a 2:30 NVIDIA calendar? Yeah.
The dentist's favorite calendar, 2:30.
What a layup. They're just giving you layups.
Zing.
Here. Yeah, that was good. I didn't even think about that.
I know.
You're just one step in me. But yeah, I think this is totally viable. I probably will do something similar to this, maybe a diagonal spread instead of a calendar, but same story applies. If you are trying to make money on this pre-earnings, you're gonna have a harder time. If you look at the Theo, it doesn't really come into play until until this announcement happens. And you can see this here. If I kick this out to the 20th, all of a sudden you get that big jump in implied volatility, especially if you start crushing these. Shit. And you crush this. So, yeah, short premium component, like I get it. Like you'll still make money if you get a rally to 230, but it's not going to be nearly as much as if you wait till earnings. And with a calendar spread, you're probably trying to center it to be inside up. Maybe you wait because NVIDIA could sell off 20 points before the announcement. You just never know.
And your inside up looks like 220 instead of 230.
Mm-hmm. Well, Glenn, that's that. Time flies when you're having fun.
No, come on.
No, please don't. No.
Don't make me go back out there. They're mean out there.
We do have a good lunch today, though. Tempesta.
Yeah.
Extremely solid sandwiches. And by solid, I don't mean the crust that like cuts your gums, because I hate those sandwiches. But this.
Good sourdough.
Yeah.
Strong. It's more of like a turkey salad type deal.
Mm-hmm.
I'm a fan.
Yeah. Well, let's go hit it. Thanks for joining me.
Of course.
Yeah. If you want to keep tuning in, we got plenty more content for you.
Keep the party going.
Just keep it on.
Why stop now?
Yeah. Keep that YouTube channel popping off. We're streaming live on tastylive.com as well as the YouTube channel. So stay tuned. We got plenty more content coming your way, and we will see you same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ave María Morena. Ave María Morena. Ave María Morena. Caballero eres morena. Ave María Morena. Le digo rumba buena. Ave María Morena. Morena pero que me muero. Ave María Morena. Morena, morena, morena. Ave María Morena. Y tú son los ratos buenos. Ave María Morena. Morena pero mira morena. Ave María.
What is going on, everybody, and welcome back to Risk and Reward. It is a new week, and the slight holding pattern that we entered on Friday continues into today. Errol is back from his voyage to Colorado. We are happy to have him. And how you doing? How was the trip?
Pretty good. I appreciate it. It was pretty fun, honestly. It was pretty cool to see the mountains. They never get old. So if you haven't been in Colorado, you're definitely not missing out. And this time we had driven through, we were going to Grand Junction. It's pretty close to Utah in the corner. So we had taken the long route. So we drove through like Breckenridge, Frisco, through Vail. I've never actually been over there, but the sites are pretty nice. So the stories are true. It's beautiful over there, and the air was crisp. But it was a good time. How was your weekend, brother?
Good. Yeah, sounds like quite the scenic route. Yeah, good
Yeah, it
weekend
was.
for me. A lot less eventful than the one before, but played golf on Saturday.
How was
Played
that?
pretty well. Happy camper.
Nice.
Yeah, I'm pleased with that, and ready to hit the ground running here.
Yeah.
We can jump straight into the Tasty platform and have a look at some things. Obviously, the overarching news of the day is that we are continuing on this slight downtrend, and again, it's one of these short memory things where it's like this is a 1/3% down day that we're having. This is not parabolic by any means, but after you've had the run up that we had, stringing together 2 down days of about this size feels a lot larger.
Yeah, it does.
So yeah, I'm pleased to have rotated mostly in a neutral delta at this time, and I do still have a few long positions that are panning out for me as well. McDonald's is logging a green day against the rest of the broader market, as is Netflix. I have longs on in both of those. United Airlines is unched on the day, but with how far we've gotten past my strikes now, Theta is starting to prop these up more and more. We're 11 DTE. I've been looking to get this one off all day. I mean, literally, I've had this working since open. I moved it up a few cents. I don't want to get slipped too bad, but I do have 3 of these, so it feels wise to go ahead and take one of those off on United.
Nice.
IBM also logging a good day against the rest of the broader market. So this one, I've been like exactly unched on this position since the moment that I put it on. It'll be $10 red or $10 green, but we've hung around there. But it's moving in the right direction. A lot of room to go, but a lot of time to go as well.
Yep.
Yeah, and that's pretty much it for the excitement in my portfolio. On the loser side of things, we have Meta. I'm giving Meta one more day. I've decided. I have this 600, 605, which is very much on the dance floor, and feels like it's certainly still in some danger, especially with the way that Meta can move. But feels okay. I'm not worried about getting that one off. But I have a 710, 715 that's expiring on the same day, 31 DTE, and I'm giving this one just one more day. I want to see how Meta opens tomorrow. Because a $100 run out of Meta in 30 days would not be unprecedented by any stretch. Sometimes it does that in a week. So I am willing to let these stretch a little further than I typically would with something that's this far out of the money on a percentage basis. But at the same time, I do need to see some action sometime before things go too sideways. We're already down a little over $230 notional on that position. So I don't want to let it slip away from me too bad. So keeping a close eye on that one. Tomorrow will be 30 DTE, and yeah, we'll look to manage a little bit. But should we open 2 or 3% higher tomorrow and moving in the right direction, then I will continue to let it ride for just a little bit longer. So yeah, quite the complex situation with Meta there.
Yeah. No, kind of in a similar boat there on Meta. I'd put on a little bit of long delta, but I just looked at the position. It says exactly 0. So can maybe hopefully that theta play out a little bit. Maybe we get a directional move, but it's been a little boring on my end too.
Yeah. We'll see. But yeah, hoping for a gap fill here.
Yeah.
Sometime in the next 30 days, and we'll see where we go from there.
Yeah.
What's going on, everybody in chat? Jared Griffin, nice boy. Good to see all of you. Used to live in Vail for a season as a ski bum. How about that?
Nice. Yeah, it was beautiful. I think the one place that I was thrown off guard a little bit, like I was very impressed with, was Frisco. Frisco's in between Vail and Breckenridge. Breckenridge is super popular. Vail is super popular. Frisco's right in the middle. They're doing a lot of construction down there, but it's one of the most beautiful places. So I think Frisco is heavily underrated, for sure.
Yeah, there you go. That's one that I'm sure just like 10 years from now it'll be just as big as the other two. It's like things.
It seems so.
Places are just slower to catch up like that.
Seems so.
Hoping SLV goes up more. Plenty of time. 31 DTE. Chilling. Good, Ranch, because my SLV. I'm out of SLV now. That expired this past Friday. I was going to say I have one more week, but I don't. So yeah, silver can do whatever it wants to now. I don't care. No dog in the fight.
Yeah. I bought some puts on SLV last week, and hey, the mobile app is actually really solid. Like I know they talk a lot about the mobile app, but like the function of it and the UI, in my opinion, is actually really solid. But I was able to close that one on the phone just to check out what silver was doing. But that was the only position that I had taken from the end of last week, at least. But we got some volatility in silver towards the end of the week. I don't know if there's any news or what, but an expansion of volatility for sure.
Yeah. The bottom just kind of fell out of it on Friday. Opened way lower, which I really needed. I had that position where I needed another 75. So that got home with flying colors, just
nice.
right in the 11th
buzzer beater, right?
What?
A buzzer beater.
Yeah. Quite literally. Just barely snuck that one in, but ultimately that's one. If we're talking a buzzer beater, then the final score was not reflective of how close this game really was. I mean, it needed it under 75, and on expiration day it closes at 69. And you think that looks like a blowout, but it was not. It was very scary.
I love to say people don't really remember what the score was; they just remember who won.
It's
you
true.
know what I mean?
It's
So
true.
there we go.
Yeah. But yeah, definitely a little bit more room to the upside for silver. It looks like seems to be finding stability down here at this 69 level.
Yeah.
A little bit of a gap to fill to the upside, and yeah, maybe could even chase down 80. Hey, big deal. Good to see it.
Yeah. Jared said my literal only beef with the mobile app is the charting or lack thereof. Honestly, I could agree with you on that point as well. But outside of the charting, I think everything is actually super solid. But I might piggyback off that opinion too, Jared.
Yeah, the executions are really strong.
Yeah, they're smooth. They are.
But yeah, that's pretty much what I have going on today. Not a whole lot of excitement for me. Not a whole lot of management other than trying to rotate out of this one United Airlines. Microsoft and IBM are my two most recents, both moving in the right direction. BuzzFeed holding these gains. I'm not buying that it can really hold these gains, but does seem to want to hold these gains. Down 6% today, but after you're talking about 100% days and all this other noise, 6% is actually a pretty small move.
Yeah.
Looking for this gap fill to the downside on BuzzFeed as well. Would like to see that bottom start falling out.
I'm sorry. What was the gap from? What was that increase?
Oh, they got bought.
Oh, they got bought out.
Yes.
Okay.
Yeah, they got bought out last week at like almost 300%.
Oh, right. I think we touched on that earlier in the week.
We talked about it when I had first put the position on.
Yeah.
But yeah, they got bought out, and so I mean, yeah, to the market's credit, like that, the money is there. Like it's a tall ask to see this slide, and I wasn't putting this on planning for this to gap fill right back down immediately because there is a substantiated reason for this move. I just think as the buyout excitement dwindles, this will be one that we'll just see, do these little. It's one where like it'll never make a big move in a single day, I don't think, but it'll just be one where it loses 2 cents a day on average for like 90 days, and then suddenly we're right back down. I guess that would put us in the negative. Maybe not that much, but something like that.
No, I love it. I know today has been a little bit quiet. I know VIX is sitting around 1834. You got any thoughts on volatility right now? We haven't really gone anywhere. I know we got a little bit of up and down, a little bit of a slide to the downside, but it's still pretty calm.
Yeah,
calm
we did.
waters.
Yeah, we tested the mid-19s this morning, but then as soon as we established that it wasn't going to be some big sell-off, things pretty much came right back down. I'm not too surprised. VIX had started to move up at the peak of the up move as well to semi-price in some of this, which is part of the reason that this isn't a bigger jump. Actually below Friday's close on the VIX now. So I don't really know. I'm not surprised to see no volatility, no real substantiated volatility here, just because it's when you zoom out and look at the macro environment, this just isn't that volatile. This isn't some giant unexpected sell-off. If there ever were a time where you could reasonably expect a sell-off, I think it would be off of these highs that we were experiencing, and it hasn't been a aggressive sell-off. It's not like we're gonna chase back down the lows or anything. It's just this little healthy breathing period. I don't feel like there's any real reason that I would expect colossal VIX expansion in this environment.
Yeah, definitely.
But yeah, it's everything on my end. What do you got over there? What are you kicking off the week with?
A little bit of the micro Nasdaq. We can jump to the TC platform over here. We did a little bit something, but not too much. But focusing on Nasdaq right now a little bit. I was checking out. I think overnight, Sunday night, we slid a little bit to the downside. Then we had a pretty aggressive move to the upside at the beginning of this week. We can go ahead and jump to the TC platform over here on this end. So a little bit of NASDAQ and then a little bit of Meta. Now we're up about $2 on Meta. That's been probably one of the most boring positions I'd say in the portfolio right now. 31 days left to expiration, $5 wide vertical spread that we had put on and sold for about $1.65. So we're going to be patient for that. Maybe we'll manage in about 10 days, but we did sell the 590. So, I mean, if we come down to the wire and Meta doesn't pull back any more than it already has, that position should be sitting pretty for the time being at least. But outside of Meta, a little bit of the micro NASDAQ again over here. We took an initial loss in the morning, and then we had entered one more time. Wasn't trying to do anything too crazy, just trying to get back into the groove a little bit, but it was nice to be able to at least start off the week with a little bit of green. So now we can kind of use some of those profits to risk into some of the next trades that we might take throughout the week. But even if the market rebounds today to certain levels that we might want to trade off of, I think it's going to be pretty much hands off. Not trying to do too much right now. You doing too much, you know what I mean? Like, not trying to do too much right now. But with that being said, we can jump now to the TradingView platform. Take a quick look at a couple of the trades that we had taken over here. But we were looking at NASDAQ this morning. It was interesting again. We're in such an awkward spot, trying to not get all confuddled and confused with us trading at all-time highs and trying not to let that bias really affect the trading too much, especially because I can tend to be very short biased, especially as we continue to rip to the upside. So sometimes pulling these longs around all-time highs can still be pretty difficult. But we managed our risk best we could. The first entry was about 20-point loss. That was with one micro contract. And then we had just entered one more time with a couple contracts. And then we started to scale out after we started taking out some of these highs. But we had a little bit more conviction in this long today, especially after the market opening up here at 8:30. We continue to sell off. We continue to make lower lows without even having any higher highs. So this continued sell-off, we had some of our areas of interest down here at the lows. And because we hadn't had any type of rebound yet in the day and we sold off all morning, that's why we had a little bit more conviction to pull the long and then size in twice the size after the first trade. So that was nice to start off the week. But I mean, if we zoom out over here, you can kind of see, that was just a little piece of the price action that we've really seen for the day. But we'll take a piece of the pie and we'll go on with our day. There was more opportunities where we could have pulled the trigger on another long here, or maybe started getting short around here to the lower lows and maybe selling off to the Asia low from Sunday night. But, not trying to do too much once again. A little piece of the pie. I'm really hoping volatility can expand here a little bit, but the ranges are still pretty solid, especially if you're a scalper. You know what I mean? Like this was just a little tiny pop in the market. And that was about 83 points. So if you really pick your spots, the market definitely has a range, even though volatility, really hasn't been expanding like that. But that's all the excitement on my end. Just a couple trades on NASDAQ over here. I'm not trying to do too much, and we'll see what we get for the rest of the day. And for tomorrow, what's tomorrow? Tuesday. I need to double check to see what type of exciting headlines we might have soon. But that's what we got over there. We can go ahead and check out Bitcoin and silver, see what some of these products have been up to.
Yeah, market looking like it maybe wants to bounce a little bit here.
A little bit.
Yeah, maybe wants find on the bottom a little bit on SPX at least. I assume NASDAQ is right there with it. Yeah, tiny bounce coming in off these lows. So we'll see if we can continue that trend. Josh Danto with a solid recommendation. Brew Pub in Breckenridge. Vanilla Porter, also good. Corroborated by Jarrett. What's going on, Ace Ventura? Good to see you. Superstar, happy to have you back. We do feel graced with your presence. It is the highest honor. Thank you for coming to hang out. Saturday night, good to see you as well. Edward, good to see you. Pick a bad month to stop drinking. No kidding.
That's funny.
Kind of want to buy bonds here to hold for a few years if we were at a low. Yeah, I mean, not the worst idea. Bonds aren't something I keep up with too much, but definitely some lower levels coming through here. Oh yeah, I was like, why does this look so weird? I'm looking at bonds on a 5-minute chart.
Yeah,
that'll do it. But yeah, we're way at the lows of the bonds. I mean, not to say that things couldn't get a little bit lower, but to quote the great Tom Sosnoff, anytime bonds drop, I think they're a buy. That's a Sosnoff signature right there. So if you want to go buy that line of logic, bonds have dropped. Perhaps not a bad buy.
Let's go Bitcoin. Yeah, we've been seeing a little bit more volatility in Bitcoin. It's so funny. Every time I see, I think it's Market Watch or Unusual Whales. I think we're also partnered with Unusual Whales. I think they're one of our sponsors. But funny enough, every time you go on there, they always take the trading view chart and then they expand it, the scaling to where it makes the market look so bloody. And every single time they do that with Bitcoin, you'll have 1,000-point slide to the downside, and they're making it look like there's a market crash on Bitcoin. So it's kind of funny. But the market has been putting in a little bit more downside here on Bitcoin 2 consecutive days now. After that little bit of a rally we've been seeing after we broke outside of this level of value here. So I don't know if Bitcoin is a buy right now. I don't know how you guys feel about crypto. I don't know how you might feel about crypto either there, Brother Gus, but I want to pull the trigger long. I want to get on some long delta, but it's a little uncomfy for me personally right now.
This slide is definitely making me uncomfortable. I don't like this retest of 75 that looks like it wants to come in, and then below that, all of a sudden we could just be chasing the lows again. I don't know. I would have liked to see a much more confirmed breakthrough 80. We did manage to hold over 80 for a few sporadic days here and there, and you can see. These are daily candles. It's very wicky. Anytime we actually seriously started to try to test that level above 80, it would come right back down in the same day. And then now we're stringing together 4 straight red days. It's a sketchy spot. Could potentially be a nice bounce spot. I'm not going to get any longer, given how insanely long I am Bitcoin already. It's actually the freaking biggest loser in my portfolio right now is these IBIT Well, aside from Novo Nordisk, we don't talk about that. But I have these IBIT leaps, progressively out. Still 242 days at the shortest, so not feeling too constrained yet. But
some time, yeah, you got time.
Would like to see some momentum come through here sometime, and we just haven't managed to get any sustained momentum on Bitcoin, in aggregate. So scaring me a little bit is my answer on that one.
Rand said, I have an Ethereum position that does nothing but make me uncomfortable.
I think we're in similar ETH positions, Ranch. I believe we entered this around the same time, or maybe you even put me on getting involved with ETH as well. But yeah, I do have some ETH also, and it's just similar story to Bitcoin. Although, but this one I did time the bottom a lot better. Only down 66 on this one. Granted, I only have one of them, but got involved a lot closer to the bottom with ETH. Have a lot of time left on that as well. I still think a run in crypto is inevitable sometime in the next year. We just, it's a long winter going on right now, but summer must come. The flowers must sprout sometime. So I do think in the next year, it's inevitable we catch some kind of rally. But I mean, to be transparent, I am less confident in a return to, say the 120, 130 level for Bitcoin than I was when I initially got involved with all these leaps. I think maybe we would top out at 100 if we were to catch another run now. But when crypto gets running, it does have a mind of its own. You just never know.
Yeah, definitely catch some momentum. And Andy said, been living up here in the Rockies for 30 plus years, a great place to live. Yeah, I would say so too. I was born and raised in Colorado Springs, so very used to the mountains, very used to the town, Denver, all those kind of things. But I will say, I think it's very beneficial, and I've loved being in a city. I know after Colorado, right after I got out of college, I was living in Tampa, Florida for 4 years. That was the first time I really got to go out, learn myself even more, meet a lot of different people, doing a lot of different things. So I see the benefits of being in a city. Then now being up here in Chicago, another city, very concentrated, a lot of business professionals doing all kinds of things, a lot of connections that you can make. So I think Colorado is an amazing place. I was never living in Denver. I don't know how the scene is for the business professionals are in Denver, but I think Colorado is a great place to be, especially maybe in my 40s, 50s. But I think I've gotten a little bit used to something a little bit more fast paced. But my mom is still out there in Colorado, and she's from Texas actually, and so she was visiting the last couple of weeks, and she was back in Colorado. I think she's going to be moving back to Colorado, so it's kind of funny. I think it's just kind of the vibe that you're looking for during the time of your life. So Colorado also has the most bachelor degrees. Shout out to my little brother being the first boy in our family getting the degree. So shout out to him. After his graduation, we had walked up to each other, and shout out to T for real. He had walked up to me and he goes, "Somebody had to do it," and gassed me up, and that was really funny. But shout out to everybody graduating around this time of year. I know it's kind of crazy. I don't know, college students get a lot of knocks, but college is not easy. They think, college kids are just out here to have fun and do this and that, but it can be very overwhelming. And keeping up with all of the assignments, not only that, one thing that's completely different is the fact that a lot of your grade is based off of your exams. That's right? So a lot of times it's going to be on you to really go into your dorm and do your own studying, ask questions, go into the office hours, do those kind of things. So once again, it's not easy. I know, college, but it's not a walk in the park. For sure.
Yeah. I mean, and obviously this varies widely depending on what you do, but I think in the experience of most corporate jobs, the workforce is so much easier than college is. To me, it's always been, being out very recently, it's in college, you never actually there's no time where there's just genuinely no stress.
Right.
There's always the next thing. It's always building on itself. There's assignments due at midnight. There's all this stuff you got to do when you get home. And then you get out and you get into the workforce and it's just it's 5 o'clock.
Yeah.
I'm good.
Yeah.
And until tomorrow at 9 a.m., there's nothing that could affect me right now. So it's a lot. You can have a lot better work-life balance.
100%.
Actually.
And it is nice for that focus to be tailored in one direction a little bit more than kind of spread thin during all different topics and whatnot.
Oh, Jared, taking responsibility for the ETH petition. It's okay, Jared. It still aligns with my thesis, and I think I'll be fine. Plenty of time left on it. You're 50-50 as it stands right now, but losses aren't realized until you exit the position. So we got all kinds of time left to let this run. This all makes me think. I know that there's some statistic, and I have to touch base with the research team to figure out exactly what it is. But there's a statistic involving when specialty ETFs come out, they're all specialty ETFs are actually down in total, like if you average them all out, because they usually come out when things are at peak hype and then wind up sliding.
Yeah.
So like in the case of like IBIT, ETHA, these crypto ETFs, things like that, they come out when the thing is at peak hype and then the ETF will actually wind up down. I think the same might be true with the space ETF, or at least it was some months ago. We've seen quite the rally in that sector over the past few months.
Yeah.
Yeah, anytime these new fancy little ETFs come out, often they wind up trading down just because it takes so long to actually get a product into the stock market that by the time you get it out, the hype is gone and they wind up sliding. I don't know the exact statistic, but I'm just that's on my mind as we talk about Bitcoin, ETHA being down.
No, 100%.
If you work 40 or less, yes, absolutely. If you work 40 or less and you work in a like corporate situation, this is not to say that somebody working in the coal mines every day has an easier job than a college student. There's definitely levels to this across the board.
There was one time when I was in college and I had messaged my professor. It was for one of the writing papers. I had messaged the professor and I just had such a writing block. And I was sitting in my dorm for hours just like, I have such a writing block right now and I got to get this thing done. And I was like, you know what? Let me just use my words. Let me just email him and be like, hey, professor, this, that, and the other. I'm really trying to get this done and this done. And then we come into class the next day. He's like, yeah, Errol, no, totally fine. And come into class the next day. Everybody got an extension for like an extra week. So I was like, hey, I didn't out myself though. Because that was me. But no, I get it. I definitely get it. But don't harsh my specialty ETF Mellow. What is he referring to there?
I'm not sure. I was trying to figure it out too. Mellow? Is there some kind of ETF that I don't know about? Melon stuff. N is not close to W on the keyboard. I'm not sure. But we're getting pretty close to at our time here. Nothing new from me going on. Just feel like we're in a serious holding pattern right now, and I want the market to pick a more decisive direction. I think I've done well to this point on the way up. I'm scaling out, making myself neutral. Now I'm very close to fully neutral. Still just a teensy long bias, but pretty much fully neutral, which I think leaves me in a strong position at this decision point. And then once I feel like we have a more decisive direction picked, I will get directional again. But this feels like a holding pattern to me. I'm inclined to think it's a dip.
That's fair. I mean,
I don't know.
It's been a cancel crash every single time.
Yeah.
When I saw the rebound this morning from the sell-off from overnight, I was like, another cancel crash? How many can we really put in? So I feel like this market is really important to just remember until proven otherwise. I know that'll be for my case. I'm not going to be putting on more short delta until we see more convincing downside action. With that being said, we'll see what we get. We'll be patient.
Yes, yeah, and NVIDIA earnings on Wednesday, obviously.
Oh, there we go.
As Jared points out, I think that could definitely make the market make a decision one way or the other. So perhaps I won't have to sit on the sidelines for too much longer than that. As on the sidelines as you can be with 30 positions open, but sidelines in terms of my directional bias, that's to say. Say hi to Chase and Julia for me. Hope they're doing good. Miss Louise, too. We can say hi to all three. They are all, Chase and Julia are here in the office every day, and Luis is still doing work for us as well. We're in frequent contact with him. They are all super well.
Yeah.
We'll be sure to do that.
Luis got to be a guy that has the best vibes that I've ever come across in literally anybody in my life. I'm not even joking.
Yeah.
So shout out to Luis.
Oh, yeah. Luis is awesome. He might be here right now. We love you, Luis. But all right, that'll do it from us today. Thanks so much, everybody, for watching. We really appreciate you taking the time. We never take it for granted. Errol and I'll be back here same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to come hang out. We have a full hour tomorrow as well, so come hang with us for the full hour. We'll hopefully
Futures Power Hour.
Yeah.
We'll Sorry, Chris. No.
Keep you guys as entertained as you keep us. Full hour coming tomorrow. Be sure to come hang out. Stay tuned for Future Power Hour coming up next today. We'll see you guys next time.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer?
So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. It's still Monday, May 18th, 2026. You're watching Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, got to see you a few times this week. Thomas is out, so thanks for filling in.
Always a pleasure.
We have an interesting market set up here today. Lots of Iran war headlines driving the market back and forth. Some U.S.-China trade war news or deals. I don't know what we want to call it. But we are trapped right now in an ethereal plane, stuck between OPEX on Friday, Vixpiration tomorrow, NVIDIA earnings on Wednesday. It feels a lot like people are just shuffling papers around right now, Mr. Spivak.
It does. I mean, I think the more interesting thing, because you saw this really gather already overnight, even before you had the open on Wall Street. You saw a kind of early reaction to Friday's price action at the Asia Pacific Open, because of course they hadn't had an opportunity to price in what happened on Wall Street and the inflation fear trade of late Friday. And then everything kind of settled and went into a sort of consolidation mode. It's as if the market is girding itself for what is midweek event risk, whether you want to look at the FOMC minutes or NVIDIA, and get a little bit more even in their exposure, not overextend to one side or another before that event risk passes.
You know, we were looking at some of the catalysts overnight, including Samsung. Samsung was down 3% or so from Friday's close, and then it's since rebounded. In fact, just today, Samsung's
rapidly, as a matter of fact,
8%. Yeah, so plus coupled with the move off the lows. I mean, it goes to show how the market is very sensitive to the AI infrastructure trade. But we need to talk about treasury yields here as we start off this show. The yield curve is shifting. It's moving. It's evolving in a way that may make some people feel a little bit more uncomfortable. So 3 points on our chart here. The lightest colored line, May 19th, 2025, where we were a year ago. Second lightest green line, April 15th, where we were a month ago. And then the dark green line is where we are today. So outside of the short end of the yield curve, the 1-year yield, everywhere along the curve, we're seeing higher rates right now. 5% has been reached again when we look out to the 20s and the 30s, which is probably unnerving. We're not there on the 10s, though, and that might be the key number to watch, of course, Ilya. Kevin Warsh is getting sworn in this Friday, and we have a new summary of economic projections from the Fed due next month. So put this all together for us right now. At what point does the market really become scared of higher rates?
I think we're watching it as we speak. I think the beginnings of this, of course, really go back to the very start of the year. Even before this war, what were we seeing? Crude oil started to creep higher in January. The bond market started to nudge up break-even rates with crude oil at the start of January. The pace was gentle, but this sense that building inflationary pressure coming primarily from energy is going to be something that starts to limit how low interest rates can go at first, and then whether they can go down at all, next phase, and then whether they're actually going to go up. Of course, with the war, we got a sharp shock in that last direction. Dramatic rise in yields, dramatic rise in the dollar, a fall in gold. All of this is emblematic of the market saying this will be inflationary. The response will be higher rates. We've seen that shift in the outlook for every major central bank, barring the BOJ, because they're on their own time over there. That's been the case for decades. The Bank of Japan runs a different kind of ship. Everything else, dramatic hawkish shift, and the RBA has already started to dip into this new reserve of rate hike expectations. They were only set for 2 hikes this year. They've already done 3.
The rate rise has not bit the stock market yet, although last week when we do get that 30-year auction where the coupon fetches more than 5%, the buying has calmed down a little bit. And today here on the other side of OPEX, Ilya, we're starting to re-anchor our attention to maybe the macro story here, which NVIDIA is part of right now.
Sure.
You're right. NVIDIA is the central asset.
It's at the heart of it, yeah.
It is the primary point of interest, but today's charts likewise showing an evolution in that maybe it's dead already, technical structure. Friday's close got us below the 1-week moving average. Today, we have tried to scale back through it unsuccessfully thus far in both the S&P 500 and the NASDAQ. S&P 500 currently trading in at 7407, 25 points lower, just over 0.3%. That 1-week moving average today comes in at 7433. And so we've made a few attempts intraday to get back through there. We have not been able to climb that ladder just yet. The NASDAQ has a little bit more weakness involved right now, given the fact that we have seen it dip below there on Friday and find a little bit more follow through here today so far. But I'm trying to contextualize this weakness, Ilya. We just had this major run up right now. We have NVIDIA earnings coming up on Wednesday. I want to take a page out of the Sosnoff book here, right? If he's a bull, you want to see, right? He would talk about this a lot before earnings. So NVIDIA earnings are coming up. If you're a bull, do you want to see the market go into the earnings at highs? No. And if you're a bear, do you want to see traders sell down the prices 2, 3, 4, 5, 6% before the earnings release? Probably not. So you have this reshuffling of the deck right now where folks are taking some cream off the top. I don't think we can talk about today's action, broadly speaking, without even noting that something like the Dow Jones is trading higher, however modestly, which is why I mentioned at the start of the show earlier, it feels a lot like papers being pushed around because we are in the midst of this lull, so to speak, before the events that matter this week come to pass.
I think if you take a look at the near-term positioning in reasonably constructed indexes, so not the Dow Jones, but let's say the S&P 500, let's say the NASDAQ, and you take a look at, let's say, the 8-hour chart, just to kind of lock yourself into sessions, right? Because the 8-hour chart just about corresponds to a day's worth of price action during the actual cash market session. So if you take a look at the 8-hour, you can look at the 4-hour as well, but I think the 8-hour is very instructive. At the April 11 high, you have this kind of inflection point for both of these indexes. And or rather the May 11th high, the most recent one. There you go, that one. And you can see that all of what's been happening up into this, let's say from late April going into early May, was this kind of steep leg in the up move where this kind of backfill through a former high just was not occurring. And so it seems you've hit some sort of pause. And either you're going to find a kind of period of consolidation and then the next push higher, or this is some sort of point of exhaustion. I think the price action you're seeing today is telling you you're probably not going to have a break of its own volition. At the very least, you need to get on the other side of key event risk. And maybe that's what has to happen here. I mean, NVIDIA doesn't necessarily have to say anything bad. They just have to say something that is explosively great as usual. Because we've seen them lose increasingly larger pieces every time over the past 3 quarters that they've announced numbers that were great. They just didn't exceed already astronomical expectations by very much. And so over the past 3 quarters, we've seen the surprises have gotten smaller, 3%, 5%, let's say, on EPS. And the stock has taken ever larger beatings.
Yeah, NVIDIA right now, that weakness coming in down $4 or so, 1.8% on today's session. Semis are just broadly speaking not having the greatest of day off, 2.55%. And it does feel like for the first time in a little while here, we may see a local swing low in semis that has been breached. I pointed this out last week, Ilya. I was looking at the chart here. I had these little circles highlighted where you get this little, it's an 8-hour time frame. You can go down to the 4. It doesn't really matter what you're looking at, but there is clearly a change in the technical behavior of this market right now, where these dips in that 2150 EMA band on this 4-hour time frame had been previously scooped up reliably. It's how I was buttering my bread for the past few weeks. We're not seeing that here right now, right? This is not the sending a session or two or a little bit of time down here. This is the market's now flipping through the envelope.
Bit weaker.
It is a little bit weaker. So in terms of deploying new bullish capital here, from my point of view, this is not what you want to do. I was happy to do it last week several times and over the past few weeks taking bites of that apple. But would I put that trade on again today? Would I look out back to the highs and say, oh, we're going to buy the dip? No, I'm stuck in that position right now. But that's why I was doing it out of the money, because if it does expire worthless, where's the edge in selling puts? We were talking about this yesterday on First Call.
Yes.
Markets near highs, volatilities come in. Why are you selling puts up here if you're expressing a bullish point of view? So I'm just going to sit tight right now. If we were to clear out the lows that we had here, so we have this brush down on the 12th, but I'm really watching that pivot low on the 7th, 73.36. That might be enough for me to say we're probably done. And if you look at the NASDAQ, those same swing levels, 28,750, 2,800, 550.
And if you look at the structure also, it's a little bit cleaner than the S&P.
It is
a little bit more reminiscent of some sort of a Head and Shoulders type of top.
It could be toppy. Could be toppy. It could be toppy. And this isn't a great time of the year either. So some nuance. Sell in May and go away is for the fools, for the birds, because you buy through July. However, that doesn't mean every single day during that period the market goes up. And there are stretches when the market has a period of softness, which we are now in. So from May 17th up until through May 25th, okay? Basically, we're talking about around Labor Day, Ilya.
Yes.
Historically speaking, since 1950, the market has averaged a positive return on only one of those days. May 22nd, where it's averaged a gain of 0.03%. So I'm thinking about this accumulation of factors here right now. We have NVIDIA earnings. We have expiration. We just had all this dealer hedging come undone post OPEX on Friday. If there is a period for bears to strike, we're now in it. You have the window of opportunity. But by the time we get to this point next week, the calendar then flips back into bullish seasonal mode. The 26th has averaged a gain of 0.2%. That doesn't seem like a lot, but in the grand scheme of things, that's a decent number. 28th has averaged higher by 0.28%. Early days of June, same thing, 0.18, 0.17, 0.18, 0.17. you have to go back to the middle of June before you get into another window of seasonal weakness. So if the market breaks down from here, right, big picture stuff, S&P 500 has had a historic run. Okay, if we get a little bit of a spike in vol, we do get that pullback down to the 1 month. Wouldn't be out of the another 120 points or more than 120 points off the high right now we had from just on Thursday. So getting another 120 points lower, say between now and Thursday or Friday this week, that's not a huge call. No. But if we do get down there and then you start to see some price action where the market stabilizes and, we get through NVIDIA and we haven't broken down, maybe it's a good place to start to look long again. So not today to deploy new capital here. I have now this out of the money call spread that may be the last in the chain of trades that breaks and proves to be unprofitable. So be it. But we have a little bit of a roadmap now to work with. Lots of event risk, lots of options market particularities, and the calendar tells us we're in the weak period of the year for the month of May.
Yeah, I think there's a lot coming together here. The larger question for me is going to be whether this is indeed a pullback that's going to get bought, or whether this is something larger because the shift in all the various macro factors seems to be toward the one thing that markets really hate, which is a rise in the cost of money.
Exactly.
Because what this gets to the heart of is that there can be a debate until the end of time about what is the better investment, what is going to be the faster growing industry, what is going to be the more lucrative opportunity. That debate doesn't even have space to happen until people decide that money is plentiful enough that they're going to go deploy it towards something, towards some productive and or some sort of an endeavor that they expect to generate a return, whether it's an investment, whether it's a capex build out, whether it's a government choosing to upscale infrastructure, any of that, never mind actually participating in financial markets and making those kinds of investments. All of that activity hinges on there being a sense that money is available enough and that you can do that given the level of risk. There is nothing more of a dampener on absolutely everything than a sharp rise in the cost of money, which is, of course, exactly what we're watching.
This, to me, puts the June FOMC meeting as a more interesting meeting here, Ilya, moving forward, right? If the Fed comes out and signals that it may need to hike rates, like a summary of economic projections change, that's a month out from today, June 17th. Mm-hmm. A summary of economic projections change, signaling that hikes have to come, and they have to come sooner than what the market's currently discounting, would probably be problematic, because right now we only have a 20% chance of a September hike. Market is favoring December with a 61.43% chance. And I keep going back to 2022 because we get the signal from the Fed at the January 5th FOMC minutes release that they are indeed hiking. Get the message from what we said to you in December, we're hiking soon. The war breaks out in February 24th, 2022. And then in the March meeting, the Fed delivered and started hiking rates aggressively here. Mm-hmm. And I know that warshes the chair, but the composition of the FOMC is not materially different enough from where we were just a few years ago for these folks to not remember the lessons learned. So I'm still very bullish. However, in reconsideration of some of the charts and news events that are coming down the pipeline over the next few weeks, and the rise in yields in particular.
Yes.
Warsh's comments about whether or not the Fed may need to temporarily hike rates could be a catalyst that I think we are underappreciating for how it could shake the confidence in the market rally.
Yeah, I think you wouldn't even have to have him say that much. All he would need to do is come out and say, listen, let's be clear. We are very committed to our inflation target, and we will not compromise on that. And that's really it. That's all that he has to say. Because the markets, I would imagine, find, of all people, Kevin Warsh credible when he says inflation is a concern. He's only been talking about that for decades. Now, of course, he's recently become a kind of structural dove, where he says that AI and other productivity growth, which, by the way, started booming before AI, to everybody's, I think, collective surprise, but that this is going to be disinflationary and ultimately maybe even deflationary because it's going to be just so much more productivity. Okay. But that's not the kind of argument that says you should hike rates or cut them in the next month, quarter, year. That's a very big picture thought. And so even though Kevin Warsh might have said recently, for maybe obvious reasons, hey, listen, we might need to cut rates because of these big picture ideas, that should not color his perception on what to do right here and right now. And all you'd have to do is really make that clear for markets in a kind of semi-obvious way. And then the conversation about what the Fed's going to do next might change very quickly and very dramatically. And you're muted.
Sorry about that. Russell 2000 here. Yes. Falling a little bit more out of bed. It's now the worst performer on today's session. 27.75. The low from Friday last week is 27.73 here. So we are prodding and poking. And I want to pull up that 8-hour time frame real quick because we do have that former high from January. Okay, January 22nd. That's coming into play now. And you could make an argument, which I'm going to make, that the Russell may be turning the corner in the worst way possible. So for all the talk about domestic equities doing better than international ones because of global supply chain issues, again, going back to 2022, Ilya, and 23, you had small caps which were hammered by the higher cost of capital, which intuitively makes sense. These are not mega cap companies with gigantic balance sheets that have been able to issue debt on their own terms, maybe even in foreign currencies at favorable rates. These are companies that are subject to the whim of the barter markets. They're price takers, not price makers. And so a period of higher interest rates, of rate hikes, of all that jazz from 22 and 23, really problematic here for the Russell. So let's not ignore the fact that we do have this weakness today. We don't have a big bump in vol. So I'm not sure if we want to make too much of it, but we're starting to cross those thresholds, right? 10-year yield is through 4.5. The 20, 30 years are through 5%. Fed rate hike is still not discounted for earlier than December this year. And if I'm Kevin Warsh, just for the sake of my credibility, I have to put it on the table as early as June, given all the incoming data and the news that we've seen over the weekend where we're giving waivers again for oil for Russia, which probably doesn't mean that the molecules are going to start moving out of the Strait of Hormuz anytime soon.
Yeah, I mean, the damage in the Russell is noteworthy. I mean, these are your cyclical names. This is the stuff that gets hurt in an economic downturn. And then you start to say, well, what does that mean for the central argument of the first quarter? So much conversation about, oh, look, the AI build out is outpacing consumers. Go ahead, squeeze consumer. The AI build out is bigger, stronger, and more powerful. It's only 14% of the economy compared to consumer 68%, but boy, is it growing fast. And it's going to grow into the moon. Well, if you look at what the Russell is saying you can't squeeze consumers to that kind of an extent and expect that the economy isn't going to go into some sort of a downturn growth-wise. And that's clearly the case. I mean, it's almost the notion that the AI build-out is going to outpace consumers and therefore everything is going to be fine, like it was in the first quarter, seems almost as ludicrous to me as the notion in 07, 08 about decoupling, that the U.S. was going to go into a corner, have its mortgage crisis, but Europe and China would continue to power the global economy, and so everything would be fine. That also was ludicrous. And, of course, by 08, we found out just how violent the contagion was. So I think you look at the Russell and you see this kind of aggressive underperformance, and you're saying this doesn't say that the AI boom is broadly positive for the economy. This says that there is speculative froth in one pocket, but in this growth-sensitive pocket, things are looking darker.
Things are looking darker. The semis are the ones that you have to watch, Leah. Since the rally started, this is the worst day for semiconductors. So cracking ahead of NVIDIA. Post-OPEX, pre-expiration. Place your bets. S&P 500 off 21 points here. A little bit of a nothing day so far, but tech taking it on the chin. Oil floating higher, contributing to the ongoing turmoil and tension in the bond market. 2% here on CLN6, 103.05. That is getting into the highs that we had from the end of April in this particular contract, 103.78. We technically did breach that today with a high of 104.37. But perhaps the best way to look at this market is through the continuous contracts, because it's been the front month from the start of the war that has reflected all the supply concerns. So we want those prices reflected here as well. And taking that step back, we're still very much dead set in the middle of a range. Yes. 119.48, the high that we had at the start of the war, has not been breached yet. Although Ilya, ticker agnostic, bottom left to top right with this big type of coiling price action, we would be looking for an extension to the upside.
You would be looking higher. Yeah. You'd be saying this is a narrowing, almost like an overlapping narrowing set of triangles where you have a big one and then a narrower one inside that's coiling in. This is waiting to spring higher.
And it's been springing higher, and it's been acting in a technically reasonable way. And, on one hand, the short put spread stuff, that's been the predominant majority of how I've been playing oil. It's working. I've been sprinkling in short call spreads whenever it rallies a little bit too much. I still think that's the right way to go about this because the ranges haven't really broken. I know CLN6 looks like it's on the highs right now, but we're thinking about oil holistically here since the war started right now. Volatility is at a 47. I mean, I'm looking at this market, Ilya, and I go, yeah, the reality of the supply disruptions continuing and looking to sell puts on dips, it works. It's been the bread and butter, right? As people who have operated in this side of the market, not just as like short-term zero DTE type of stock traders, but folks who have paid attention to the commodity world for the entirety of our professional career. There are certain things that maybe we got earlier on that others didn't. So I'm still going to sell those calls. I want this to work out a little bit more. I'd love to see like a 105 or a 110 print first before I go out and start selling like the 140s again. But if we get any sort of drift lower here, positive headline, we saw the sanction waivers today and we have this and that, and Iran is willing to send its nuclear material over to Russia.
Oh, goody.
Right. Perfect. None of that has really mattered. So dips, sell puts, I feel way more confident about the sustainability in that move still. But either way, oil's been one of the few things working out.
I'm still holding long here. I think to your point, having grown up in FX markets and by extension, kind of commodity adjacent markets and rate markets, I think both you and I learned just how pervasive a macro trend can be and how much people have relied on very simple trend following in those markets where it actually works. And so when you look at what's going on in oil here, I mean, it is classic. We're just stair-stepping higher. And so for me, I bought the last dip. I'm sitting long. I'm doing it in, at this point, still a call verticals way, because when you get these pullbacks, it tends to become more attractive from a vol pricing perspective. You start to get better risk reward on buying call verticals. And so that seems to be what the market wants to give you when this thing unclenches a bit, at least this last go round. So let's see. For now, I'm operating the same way you would if you were ticker agnostic here. You would look at this and you would go, okay, since January, this rally has only accelerated.
I'm looking for a little bit more, say, optionality here, so to speak, in terms of the strikes that we can operate around. Right now, CLN6 is at 29 days, CLQ6 is at 59. So if you're following the typical Tasty methodology, 59 DTE is probably the one that you'll be sticking to. Over in the Q6 contract, Ilya, we're seeing similar types of gains. The reality that the molecules won't be moving anywhere, anytime soon. This one is much more cleanly cycling up into new highs. You can see here we go out to U6. This one is cycling up into new highs. December Z6 cycling up into new highs. I don't need to keep repeating that here, Ilya, but the entire curve is telling you that we're going to be seeing sustained supply disruption unless we get horrible demand destruction elsewhere. But oil at 95, 100, I know I've sounded a bit like a jerk and indifferent to people's financial suffering, as people have been kind to point out in the comments. They're also wrong, because the American economy can handle oil at 95 and $100 a barrel, because oil at $100 a barrel in 2026 is fundamentally different than it is in 2006. And this is not, carrying water for the Trump administration. There is inflation that we have to talk about here. And when you're paying $5 a gallon in 2006 versus $5 today, real wages have doubled since then. So conceptually be like paying $10 a gallon, right? For us to have the 2006 type of pain for the consumer. People are driving less these days. More people use public transit. There's a lot more cleaner tech out there. The miles per gallon per car is higher. There's a lot of electric vehicles on the road, Ilya. So the impact to our broad economy from oil sitting at 85, 90, 100, 105 is diminished. It's not that it sucks. It sucks. No one likes going to the pump and paying an extra $20, $30, right? I could be using that on, could be beer money, I guess. But this is kind of the whole, we're not high enough to induce demand destruction. We're also not high enough to induce more supply coming into the market. And so we're kind of stuck in this horrible waiting for Godot type of purgatory where, well, I guess we're going to have to see the futures curve roll up to current spot prices because nothing's changing. And if nothing changes, prices need to rise out in the future.
Yeah, I mean, the situation is getting to a place where almost nothing that happens as a function of a breakthrough is going to change the near-term trajectory. And so really, it's almost as if the markets need or have already priced in everything. And it seems like they're still somewhat biased in the direction of having, let's say, erred on the side of optimism for how long this is going to last and what this is going to mean. And focused on, let's say, immediate data. There's still a good bit of backwardation in the markets. It seems to suggest that we're going to get a little bit of a disruption and not a tectonic one ultimately. Mm-hmm. But if you consider we've spent down a ton of the world's reserves to shield this at this point.
Refilling the SPRs is going to keep oil with a floor underneath it for something like getting back down to 70 or 75.
You reopen the Strait tomorrow. That's right. Tomorrow. Then you add the months it's going to take to restart actually moving things through it. Let's say without any tolls from Iran. Let's live in
do you see this
a very stylized reality. And then you have to refill SPRs. Oil is going to be expensive for a while.
Am I missing something here? Like the market knows best. I'm looking at a Q6. I'm looking at 91 days to expiration. Where are the recent price levels? Before the war, we were trading down at, we closed that day of 65.
We're breaking highs.
I can go out 91 days and I can sell 65, 64 for 1 to 9. That's not too hot. But if we start to tinker here, you're telling me I can sell the 69, 71 and get paid out basically 4 to 1 still? Risking 800 to make 200, 82% probability of profit. 82% probability of profit and still getting a 4 to 1 risk to reward. Yeah, let's more puts to sell, more short put spreads. The market wants to give it to us. We got to take it. This has been it's been all reliable recently because there's still a severe misunderstanding about how the molecules are not moving. Apparently, we're going to have to relearn the lessons of the past, which I thought we learned
have
in
to work
2022.
this backwardation. There's still a lot of this backwardation to work down. Yes.
To chide the Treasury Secretary once more. I'm in a feisty mood today, Elliot. Maybe it's all those peptides.
Sometimes you got to chide the Treasury Secretary.
Bessent, well, my future job one day. Bessent himself says that backwardation is the indication that the market is expecting prices lower in the future. Horribly untrue. What it does tell you is that if the supply problems that we're facing are not addressed materially, then the future prices are going to have to roll up to meet the current spot price, which is why ETFs like USO are able to generate positive roll yield in these backwardated markets. They're taking the more expensive front month contract that they already own. They're selling out of it. They're using the proceeds then to buy the cheaper next month or back month contracts. And so that difference, if you're selling out of the N6 today, it's at 103.22. And if you're buying the next month, you're going in at 98.37. So that $5 difference, $4 and whatever difference, that's going to be your roll yield. And so you can generate positive roll yield in these environments. There are ETFs that are structured to do things this way. And as long as the supply chains continue, the future is not being predicted for lower prices. The future is being predicted as we hope the supply problems are gone by then, but if they're not, prices are going to go up.
Yeah, that's right.
Natural gas here is getting a little bump. We've been looking at this as well, Ilya. I know it's not the typical crude trade, but 290 was crossed at the end of last week, which in the M6 contract triggers a potential inverse head and shoulders pattern for move up to, you can call it like 320, 330. In the N6 contract, it's just starting to get going here. You could see how we're poking into that 50-day. We're poking above that former January swing low right now. It also feels like a little bit of an inverse head and shoulders down here. Ilya, I know I have not been able to tempt you into this, but a little birdie told me that you were having a conversation over the weekend with someone who may be part of a natural gas trading team at a major firm. And he was looking at the same thing, which, who doesn't love confirmation bias?
Confirmation bias is great. And of course, all of us are looking at the same thing. Because you look at this, and whether you're at a big firm or you're just you, what you are doing here is ostensibly looking at the range of factors. And you say, okay, what's the range of factors here? There's a technical consideration. There's the ongoing disruption of the Strait of Hormuz consideration, which is actually much more disruptive to nat gas in some ways than it is to oil. Because, for example, the bombing of the Gulf states' capacity there by Iran, as they've lashed out during this war, has probably set back critical supplies a year before they can come back online to sort of capacity levels, even if you turned them on right now. So there's a whole range of factors here. And if you look at the technicals, as I think you must, because anybody can have whatever theory, but you do have to look at what the price action is saying. The price, after all, is the market's collective wisdom, not just yours. Then you say, okay, well, price structure-wise, it does look like what a technician would call a head and shoulders pattern, or at least some kind of a rounding bottom. You were setting lower lows and lower highs, and you are not anymore. So by the definition of what a downtrend is, this has stopped being that. The lows have gotten higher recently. And so I think you look at this and you go, okay, well, given the preponderance of factors, you would be looking at some sort of a bottoming here, maybe. Now, sure, one Thomas Westwater would come on here and tell us all kinds of deep dive information about the idiosyncrasies of the market itself.
Can I do that instead?
But yes, please.
Last injection period, natural gas storage in Europe, for example, was up by 5.7 billion cubic feet. The 5-year average has been for adding 13.4 billion cubic feet during that window. So the current inventories are at 1,403 billion cubic feet in Europe, which is 509 billion cubic feet below the 5-year average. We are below capacity there. We're looking to undershoot the 80% threshold that Europe typically arrives at by the end of summer as it gets ready to build for the winter heating season. So there's that right now in the short term. The injections that we've seen into inventories have been smaller because of drawdowns. And then there's likewise, Ilya, the fact that the country is just heating up right now, which is going to put additional strain. Now that we're moving, warm weather in April, when you're 5 or 10 or 15 degrees above the average temperature, it means instead of being in the 50s and 60s, you're in like the 70s. But when you get to late May and June and you start saying, okay, we're going to have temperatures that are 3, 5, 10 degrees above normal, you're now talking about temperatures that are pushing the 80s and 90s. And that has different implications, right? The AC demand, cooling demand is about to go up across the country, particularly if you're in the Midwest. Sorry, Minnesota. That does not look fun. So there is a little bit of a tail here, right? There is this story where maybe we're going to see higher demand for natural gas in the short term. We know that we're drawing down U.S. inventories right now. I've seen a lot of people, just as a corollary, cheering on the announcement over the weekend that China's approving all these ranchers to import beef again moving forward. It's going to be great business for the American farmer, sure. But we also have a herd problem right now in the United States. And so we don't have gigantic beef inventory, so to speak. And if we're selling more of our existing inventory abroad, like we're doing with our gas right now to satisfy global demand, then we're reducing the available supply here domestically, which in turn lifts prices. So I'm looking more and more bullish on natural gas here, Ilya. It's a 10.5 IVR. Volatility is so low. It is so cheap to express a view here right now. And so consistent with that, even looking out at the Q6 contract, because sometimes when you're playing these tops and bottoms, you really just got to give the market time to just marinate, for lack of a better phrase. Timing is difficult. So time in the market is what wins you here if you're calling for a turn. I think we have to look out to the Q6, because if we can get an opportunity here to look for 3.536, that 3.536 area, go 3.37, we can lay out risking 1 to make 3. And we don't even need it to reach those levels. We just need volatility to go up and price to move so people panic and start bidding up the price of these options. So I'm here thinking that there's an interesting opportunity in gas that we really haven't been able to explore. It's finally turning that corner. 295 to 325 here is 30 cents. So 355 becomes your inverse head and shoulders target in the Q6 contract. I'm going to play for a little bit beyond there, looking for effectively just a boost here in the prices of this call spread, given the fact that vol is so cheap. So let's see if we can add something else here. I'm also playing this short term, as you know, 8 days to expiration. This is starting to work out, but just like another 10 cents would really help.
I think not an unhelpful thing here is that the price of nat gas in both Asia and in Europe has started to tick up again.
Yes.
There was a little bit of a pullback from those hysterical highs. So we started, of course, the war in late February, and the peaks in the price were about, let's call it, early into the second half of March, about March 19th or so. We then get a pullback around news of the ceasefire. And as of about the middle of April, these prices have started to climb back higher. Both the European benchmark, the TTF that you have there on the screen, as well as the NYMEX LNG Japan Korea Platts future that is the benchmark for Asia. So that all is suggesting that just as you are about to start refilling inventories, in particular in Europe, ahead of winter, the price is already creeping higher again. So there's going to be a significant magnet for U.S. exports there, and because of course there'll be money to make. Nat gas onshore is still very abundant, but the pressure is going to start to build here.
Just thinking about this in terms of like break evens and what this could do for our natural gas prices. I have the Dutch TTF contract pulled up here on the screen. It's the European benchmark.
Yeah.
1 barrel of oil is 1.69941 megawatt hours. So if Dutch TTF, I'm just working out this math here, if Dutch TTF is currently trading in at our 50.25, that's equivalent to $82.80 per barrel of oil. So as it were, we know that Brent is trading at 111 right now. It's not a perfect substitution because they have different use cases, of course. But if oil is going to remain at these elevated levels up here, Ilya, there's almost like a natural magnet pulling the European natural gas prices to the upside, which then in turn has the knock-on effect of it making it more expensive for them to refill their inventories, which increases demand for American natural gas. And we've seen all these things happen in recent years. So this isn't a new playbook or some crazy theory. Maybe we're getting to that timing window where this all starts to work out well. This is the week where, if nothing changes, we may start to get reports that Europe is hitting tank bottoms for their jet fuel. And that would have global implications, perhaps, for growth, one might think. Bonds dead cat bounce here, which is really all we need to talk about it in those terms, because we did have a little bit of a jiggle to the upside. We're actually now negative. We were up by 3 ticks when I wrote that title, Ilya. So that only further underscores how much of a dead cat bounce it is, because we are now fading. Oil up, Indeed. Bonds down, big break at the end of last week. I cashed out of my long put spreads at the end of last week. We got the movement that we needed to see around CPI and PPI. I'm hoping that we can get a little bit of a bounce here, a little bit more of a bounce, which was the whole, like, oh, this is a dead cat bouncing, let's wait to sell. But if we can get back to 112 in ZB or 110 in ZN, I think first blush, you have to treat this as a market that's breaking out, returning to the breakout point, use it as a way to reload, not call a bottom.
Yeah, I mean, I think you look at this and you say, how much cleaner does something have to look? And I think the sort of sniff test that you've been applying, which is to flip the chart upside down and go, if you saw this on a stock index, what would you do? You would buy it with all the money you could find. Because this would tell you, oh my God, this rally is about to go. Well, just apply the same logic here.
That's it. I don't think we need to go much further than that with bonds. We started at the top of the show. We see that we're getting these rate cut odds decimated, hike odds building across the curve. Even today, we tried to undo some of Friday's damage, and the market goes, no. Keep those hike odds in place. I'm curious, though, if the Fed ultimately does hike rates in June, could that be what stops the market from freaking out? It's a recognition that they're doing what they can to cap inflation. They're fighting it. They're not going to risk reinflation, as it were, keeping rates too long during a transitory energy shock. What's the catalyst for you to stop thinking that yields are going to keep going up is effectively my question.
Evidence of economic damage that starts to suggest that there is demand destruction to a point that whatever recessionary tendency is emerging is going to be more violent than the price shock. And essentially the pull from demand will be overwhelmed by some sort of economic turmoil.
Is that happening? An Atlanta Fed 4% GDP now growth estimate here?
Not at the moment, no. And I think really the question here is going to be, to what extent are consumers squeezed? And how quickly does that overwhelm what's going on with the AI build-out? Because the AI build-out is not going to die a fast death here, unless, of course, bottlenecks are ultimately what squeeze it. But it's one thing to become less optimistic about how much it will do as you extrapolate forward. It's another thing to see weakness in the GDP data. That the GDP data may not impress markets much going forward, but that doesn't mean it's going to turn negative. And so you look at this and you go, okay, well, is this about perception or is this about reality? And I think you're going to have to start to see reality where the consumer is such a drag that there's just nowhere else to go. And
we're not there yet.
The consumer has been slowing for 2 consecutive quarters, but we're just not there yet. We're just not there yet.
Hindsight being 2020, of course, the case for bonds, I feel like that you and I have put the argument for. You have to be really bearish on economic growth in the short term.
Yeah.
Right?
Yeah.
And let's say the Fed decides that this is all transitory inflation. They're telling you then they're not going to raise rates, which means the market has to do its bond vigilante act of berating the Fed into submission. Oh, you guys don't want to give us rate hikes? Okay, 2-year yields got to go higher then. And the curve twists and turns. So, 4% GDP right now, inflation, PPI, CPI, we're talking about annualized rates that are running 4, 5, 6%. Categories, doesn't really matter where you look. It's broadening out again. We've seen diesel prices jump. AAA right now, that's AAII, wrong bookmark. AAA right now has the current diesel price sitting at $5.631 national average. The all-time high is $5.816 in June 22. The grocery prices that everyone hated, Ilya, arrived in early 2023. So when we talk about there being knock-on effects still, Treasury yields are sensitive to inflation. This is still building. Why call the low? You're calling a top in the economy. You're saying that the economy is going to fall into a deep recession here. You got to give yourself enough time for that to work out if it works out. As you and I have seen, this economy has taken its punches. It's proved to be very dynamic and constantly evolves. So
the bet has to be higher rates for now.
Higher rates for now until proven otherwise. Metals here are having somewhat of a blah day, off a little bit. Gold bounce near former swing lows, but not exactly the highest confidence bounce. Silver is holding up at the uptrend from the March and, early May swing lows, but that's about all you can say about it, considering it's down 15% from the highs 3 sessions ago.
Friday was a really ugly day at silver.
And here I was complaining to myself that I didn't have enough silver when it started breaking out.
It was the combination of it being risk aversion and rates induced risk aversion really came together for silver. I mean, we talk about how silver, unlike gold, has a little bit more of a sensitivity to risk sentiment because of its industrial character. It sort of straddles a little bit, not unlike platinum and palladium, the world between base metals and precious metals, obviously skewing to precious, but not as cleanly as gold. And so it really just came together badly. It was higher yields and stocks weren't liking it and sentiment was deteriorating. It was the worst of all possible worlds.
Worst of possible worlds. So the structure here isn't looking good again. Ilya, maybe this is just another, pullback into support, but you can get long down here. SLV is probably going to be the better vehicle for something like this. And the chart doesn't look exactly the same because of the futures market here. But down around this zone 65 or so, it's been accumulation, if you will. This has been tough. I'm glad I did the out of the money calls because the risk is limited and the downside is much smaller if I'd been selling puts, where I might be in a stickier situation right now. The chart certainly has let us down, or I let down the chart. I don't know. Technical analysis is so subjective, more art than science, as we like to hide in when we make mistakes.
Yeah.
But to that point, there's really nothing to do down here, because if you were bearish already, then you got Friday's move and now you're sitting at trend support.
Right.
And if you're bullish and you are already bullish, you're asking yourself, do I want to put more eggs in this basket? There's a case to be made that if you don't have either position on right now, this is an interesting place to buy the dip, just like it could be in gold.
I mean, you're sitting kind of on support.
And that's really all it comes down to, right? So if I'm already in short, I'm not adding any more yet. I might if there's a big break. If I'm long, do I want to add in here? No, because I'd be doubling down on the losing position. If I'm neutral, do you want to buy at support or sell at support? You buy at support, and if you're wrong, you can flip over and read it the other way. So I'm
already short, and I've been short. So for me, this is okay. Well, let's see. Either the trend continues or it doesn't. But you're not getting out. You're just waiting.
Copper, on the other hand, offers perhaps the most tempting chart I have seen. Now, the metals complex obviously is having its problems.
Maybe
But those
after nat gas. Nat gas is a very compelling chart.
I love the fact that we have these former highs here, and granted, we're doing our intellectually disingenuous exercise of hiding the spike around the silver gold liquidity shot.
I mean, frankly, the fact that the fact that these levels hold before the spike and after, I mean, you almost don't even have to hide. I mean, you can see that that's a weird aberration that proves the rule rather than anything otherwise. I mean, look at those bars. That's
several of them. Bang,
yeah, I mean,
bang.
You get the moment you get the breakout higher, the very next bar is utter meltdown.
Right. So what I'm thinking here is with the 1 month moving average at 620, which is right at this former resistance level, turn support.
Yeah.
If breakout, pull back to breakout level, resume higher. This has got to be an opportunity to get long. So recent highs that we had, if this is a breakout that's working out, we should get back to the highs and we should clear those highs. So 6-7 at a minimum. See, I hate that I said that. At a minimum, seems like a reasonable look. Going 10 cents wide, risking 1 to make 4 at 27% probability of profit. Yes, yes, yes. Take that trade all day. Backfill. If we get below the 1 month, the 50-day, then maybe this thing is dead. But this is the line in the sand where if you're a bull, you got to defend here. This has been the level that has determined support or resistance, price advances or not in recent weeks and months.
Yeah. I mean, I think that's fair.
Am I allowed to invite people? Can you come help me defend the line with my single on this Tasty Follow account? This one little call spread.
I mean, I'm not going to do it through HG, but both actually, Nat Gas and this, what I am looking at is something smaller in size, just to see if maybe I can nibble on it. I think it's very important to be cognizant when you're doing stuff like this. I would take a trade that looks like this on a chart in a currency or in gold in a heartbeat, because there is your M6 currency contract, there is your 1 ounce gold contract, and they give you flexibility to scale in, to scale out, and to be the kind of trend trader that you can be. But HG is a big contract. So if you're going to do that, you're going to need a good amount of capital to do that in a way that isn't stretching. And so for me, if I'm going to take that kind of an approach, and my standard kind of window for a trade that works is, let's say, 4 to 6 weeks. So that's how long I might need to tie up margin capital. I have to think about it in those terms and say, well, if I'm going to express the trade, then maybe my vehicle is UNG. Maybe my vehicle is CPR for copper, but the setup is certainly there.
The dollar's having a interesting session. It's down versus most major currencies except for the Japanese yen, which higher yields and higher oil prices is effectively eliminating all of the intervention efforts. Ilya, on the 28th of April, we opened up at 63,005. We're currently at 63,045. The following day, we had a steep sell-off, which brought dollar yen spot rate up to 160. The following session thereafter, April 30th, we got the intervention. And we got a second rumored intervention on May 6th. And then oil prices stayed elevated and yields in the U.S. pushed higher, subsuming the rise in the 30-year yield in Japan to all-time highs. And now you have the situation where you have a country that imports over 90% of its energy and pays for it in a different currency, is having a problem during an energy crisis, and their currency is weakening because every time oil goes up, they need to convert a little bit more of that yen to the US dollar in order to pay for that barrel of oil. It's really that simple. As long as oil and yields are up, the yen can't have a meaningful recovery. However, that's not the trade. Now, the trade is, as we approach 160, the BOJ and Ministry of Finance have to defend that level, because the second they let it break in the market, when they intervene and they try to push against it, the market's going to say, oh, call your bluff. You guys don't have it anymore. You guys can't do this sustainably moving forward. So the depth of the intervention reactions, this a big one, this a smaller one, perhaps is a tell. It doesn't mean we're not going to get a third bite of the apple here, and having some yen intervention trades on might be worthwhile. Just some lotto tickets in case something occurs. But if we start to see dollar yen break 160, 161, and the BOJ and Ministry of Finance not step in, this thing could get really ugly really, really, really quickly. And then I don't want to get ahead of myself here, but September 16th, 1992, White Wednesday in the UK, Black Wednesday across the rest of Europe, the day that Soros, Besant, Druckenmiller et al. Broke the Bank of England. And it was all about their reserves. So the BOJ has plenty of reserves right now. Ministry of Finance, they have plenty of reserves right now. But this is an interesting story that needs to not be overlooked. You and I are going to cover more of this later because we're on overtime together. I'm getting the tap from the producers to wrap things up. I know that you have some dollar interest here, and I'm curious what you have to say about that in about an hour and a half time. But for now, tomorrow's calendar, Canadian inflation, UK jobs report. Not nothings, given the fact that we're dealing with a global inflation scare. So let's see how it all plays out. Do we have a new catalyst on Vixpiration Tuesday ahead of NVIDIA Wednesday to help drive these markets? Ilya, you and I are done here for now. Tasty Live programming continues, of course, after a brief break. You and I find ourselves back at the helm at overtime, 4 Eastern, 3 Central, every Monday through Thursday here on Tasty Live. So please do join us. Until then, good luck trading. Brief commercial. Tasty Live back in 90 seconds.
So welcome back to the How to Build a Portfolio Crash Course. Jim Schultz back here with you guys. In this episode number 3, we are going to focus on the role that individual stocks are going to play in your portfolio. To this point, we've already built up a decent little foundation, right? Episode number 1, we talked about our portfolio targets. Episode number 2, we talked about the power of using indexes. Well, now it's time to layer in some individual stocks. So without further ado, let's do it, man. Let's dive right into episode number 3, adding individual stocks. So as we kind of alluded to on our way out the door back in episode number 2, there's a really good chance that indexes are not going to be enough. There's a really good chance that for you to hit your portfolio targets in theta, in delta, you are going to need some individual stock exposure. That makes sense. Well, before we do this, let's make sure that we all understand it. We all remember what it is that we've signed up for as premium sellers. When you sell an option, which is what we primarily do, you want its price to fall over time. So that way you can buy it back later at a lower price. Doing this would lead to a profit that is really no different from buying stock or buying an option, letting its price increase, and then selling it later at a gain. Selling the option first is just this process in reverse. But even more specifically, we primarily sell out of the money options, so their prices are 100% extrinsic value. Over time, these extrinsic values will naturally be falling, as an out of the money option must sell for 0 at expiration. So we want to benefit from this with our new positions as premium sellers. Okay, so now that we're all on the same page in terms of what we're even trying to accomplish, it's going to be easier to see the power that individual stocks can play, the role that they can have in your portfolio, if we take a look at one of the most important metrics that we use at Tasty Trade, implied volatility rank. So implied volatility rank, or IVR, is a metric that we lean on heavily, and it shows quite literally how the implied volatility for a stock stacks up against its historical self by taking the current implied volatility of the stock in the numerator and dividing it by the previous year's range in implied volatility, the denominator. We're able to more accurately gauge where implied volatility is right now relative to where it has been. For example, let's say that last year's implied volatility ranged from 10 on the low end to 35 on the high end. If the implied volatility right now is at 15, then the implied volatility rank is going to be sitting at 20. The implied volatility is 20% into the distribution of all the implied volatilities from the last 12 months. Similarly, let's say that the implied volatility were 30 based on last year's range of 10 on the low end to 35 on the high end. Now, the implied volatility is 80% into its distribution or range from the last 12 months. So this would lead to an IVR of 80. Okay, all that stuff about IVR, that's all well and good, but why is this important? Well, let's look at a couple different reasons. First off, and quite simply, higher implied volatility rank means higher option prices. Since higher IVR can only happen from higher IV itself, and higher IVs into the Black-Scholes model lead to higher option prices out of the model, higher IVRs are going to lift option prices. This is helpful because remember what we've signed up for, guys. We want option prices to fall over time. So if we can sell them for a higher price, ceteris paribus, then we automatically have more room to work with on the backside. But second, volatility is a unique metric in that it tends to mean revert over time. This means that volatility expansion is often followed by volatility contraction and vice versa. Therefore, entering positions with higher IVRs can put us in a more favorable position to benefit from volatility mean reversion. A word of caution here though, while volatility has been reliably shown to mean revert, we never know when it's going to happen. It can remain extended longer than we can hold on. All right, Jim, I have to admit, man, a couple minutes in and you've sold me on this high IVR situation. So where can I find some high IVR opportunities? Well, let me give you two really good resources. First up, the pre-populated watch lists on the platform are excellent tools to start with here. The default watch list, or even Tom's watch list, will give you a pre-screened list of all the stocks you see us trading day in and day out. Sort these watch lists by IVR and you will be in business. But second, earnings. Earnings for publicly traded companies come around every 3 months. And generally speaking, earnings tend to lift the IVs or the IVRs of stocks as traders bid up option prices in anticipation of potentially explosive moves. Thus, these are a great time to establish new short premium positions. Just be careful as these big moves can make earnings a tougher go than more regular trades, but it's still worthwhile to check these out to see if anything jumps out at you. Now again, use indexes first, right? Like lean on what we talked about back in episode number 2 and use the indexes to begin to populate your portfolio. But there's a really good chance that you're not going to get there. You're not going to get to your portfolio targets with indexes alone. So this is when individual stocks come into play. Now, naturally, some of you, all of you, especially you beginner traders out there, you're thinking at this point like, all right, Jim, like you nudged me in the right direction when it comes to implied volatility, when it comes to individual stocks, but man, you left a lot to be desired when it comes to the specifics, when it comes to the strategic detail around how to actually execute these trades. That is 100% correct. And the reason why I did leave a lot to be desired here is go back to Crash Course number 1 and Crash Course number 2, both of which are already available on our YouTube channel. And we went through all of that in very, very fine detail. So be sure to give those guys a look if you haven't done so already. And man, just like that, almost like it didn't even happen, episode number 3 of the How to Build a Portfolio Crash Course has come to its natural conclusion. I will see you in the final segment inside of this Crash Course, episode number 4, the day-to-day management of your portfolio. I'll see you there. Boom. So welcome back to the How to Build a Portfolio Crash Course. Jim Schultz here with you guys for the final time inside of this Crash Course. Man, we've already covered a lot of ground inside of this guy. We've already talked about your portfolio targets. We've talked about using indexes. We've talked about adding individual stocks. Here in episode number 4, we're going to talk about arguably the most important part, the day-to-day management. And my hope is that after this episode, you guys will begin to see how everything comes together. So let's do it, man. Let's dive right in to episode number 4 of the How to Build a Portfolio Crash Course, the day-to-day management. All right, so the day-to-day management, it really boils down to one singular thing. You need to identify problems. If your strategies are working, doing nothing is almost always going to be the move. Like if things are going well, like sitting on your hands and unplugging your mouse is almost always going to be in order. But naturally, there are going to be times, maybe on a daily, maybe on a bi-daily basis, where things might not be going as swimmingly as you might have hoped. So here, you need to identify the problems. And specifically, you need to differentiate between problems at the position level and problems at the portfolio level. So position level problems. These are usually going to be pretty obvious. Like they're going to jump off the screen and stick out like a sore thumb. They could be a huge move in the stock, could be a situation where one of your strikes has been breached, or maybe you've just naturally reached the 21-day marker in that cycle. Sure, some of these are going to be a bit more surreptitious, like, your index, individual stock exposure, but usually you won't have to go hunting around to find these guys. They're going to find you. Now, with your portfolio level problems, these should also be fairly clear, mainly because you took the time to establish your portfolio targets at the very beginning. Are you too directional? Do you have enough theta working for you? Do you have too much theta working for you? These are all going to be common questions that you're going to find yourself asking yourself as you are viewing your portfolio. Knowing what you're trying to accomplish with your delta and with your theta will allow you to see very easily when things are off target. Okay, so now that we've got our bearings set and we know what it is we're even trying to accomplish when it comes to day-to-day management, let's dive deeper back into the position level. First off, it's important to mention that we've already built an entire crash course around strategy management with the ins and the outs of how to adjust our most popular strategies. So I'm not going to regurgitate that here. Instead, I want to offer more of a bird's eye view of your portfolio as it pertains to defined risk strategies and undefined risk strategies. Okay, so starting off with your defined risk strategies. These are going to be, your short put spreads, your short call spreads, your iron condors, etc. These are going to be pretty hands-off. A lot more laissez-faire where you just let the trade go and you give the probabilities room to breathe. Either you take the trade off at your profit target or you end up absorbing a loss. Now, could you adjust these? Sometimes, yes. But that's more of an in-depth discussion that we're not going to have here, because if we did, I would be front-running myself before the next crash course that is slated to follow this one, so stay tuned for that. Now, with your undefined risk strategies, your short puts, your strangles, your ratios, etc., this is where all the subtlety and nuance is going to start to show up, right? Any adjustment, wizardry, or management magic is almost always going to materialize with naked positions. Now again, check out the strategy management series for more of the tactical moves that you would actually make. But generally speaking, from a problem identification standpoint, which is our goal here, remember, it's pretty simple. If you're out of the money, you do nothing. Once your strike is hit and things move in the money, that's when you act. If you're before 21 days to go, you do nothing. Once you get to 21 days to go, then it's time to move, then it's time to act. All right, so those are the frontline actions that you're going to want to take at the position level, which I would argue should be addressed first. If for no other reason, then these guys are usually going to be very, very obvious. But still, we have some portfolio level problems that need to be addressed. So let's have a look. So once all of your individual positions have been taken care of and any and all necessary adjustments have been made, here you turn to your overall portfolio. At the same time, it might not be a terrible idea that as you're making the necessary position adjustments, you have an eye on your portfolio targets. That way, when it's a close call as to what you should do, kind of a toss-up, either way, you can defer to those portfolio targets. But if there's ever a disagreement between the portfolio level and the position level, then the position level pulls rank. Like for example, let's say you need bullish deltas at the portfolio level, but a given position is far too bullish and you need to add some bearish deltas to balance it out. Here, you want to let the position level be your guide first and foremost. The reason why is that there is only one way to adjust a given position's situation. It's through that given position. But with your portfolio as a whole, you can always find new trades and establish new positions to adjust your overall levels to. Then, once each position has been adjusted, you can look to add new positions to adjust your overall portfolio goals, which is pretty straightforward. You need positive delta? You add trades with a bullish bias. You need more positive theta? You add trades with positive theta, probably of the undefined risk nature so that you can build up theta more quickly. You have too much positive theta? Hey, you can close some of your existing trades, also probably undefined risk, or you can add new trades that are more defined risk so their theta impact won't be too significant. Couple of things to keep in mind moving forward with this information. Number one, don't feel like you need to nail your portfolio targets every single day. If they're off just a little bit and it takes you a couple of days to bring these things in line, it's unlikely that that's going to be a real big issue. But number two, at the position level, you should be able to achieve your desired outcome in terms of directional bias, in terms of theta, in terms of whatever it is you're trying to accomplish with that one specific position. You should be able to do that in the moment. You should be able to do that in the here and now. It shouldn't take too long for you to course correct that one individual position. Wow. And just like that, ladies, gentlemen, we are done. We are done with episode number 4. We are done with the entire crash course. I really hope this gave you guys some new ideas. And when you are ready, I will see you in the next crash course, which I don't know when it's going to be ready, but when it is, I hope I'll see you there. So welcome to our newest crash course, how to build a portfolio in 4 easy steps. My name is Jim Schultz and I am very happy that you are here with us today. I'm going to try to make this crash course as quick, as concise, and as worthwhile as I possibly can. And what we're going to do in these 4 episodes is we are going to take a bird's eye view of building your portfolio. And guys, I would argue this is more important than which strangle you're going to sell, what stock you're going to trade, or which earnings announcement you are interested in. So yes, this is going to be a 4-episode crash course, super quick and super to the point. Here is what we're going to do. In episode number 1, this episode, we are going to establish your portfolio goals. In episode number 2, we're going to talk about the power of using indexes first. In episode number 3, we're going to look to add individual stocks. And then in episode number 4, we're going to talk about the day-to-day portfolio management. So without further ado, let's do it, man. Let's dive right into episode number 1, establishing your portfolio goals. Okay, so step 1. And this is mission critical. This needs to happen before you place a single trade. This needs to happen before you look to put on a single position. You need to map out what do you want your target theta and target delta to be at the portfolio level. In other words, how valuable do you want time to be for you at the portfolio level? And how valuable do you want direction to be for you at the portfolio level? Doing this, man, it will give you incredible guidance and clarity with your day-to-day decision making. What you're quickly going to notice is that every decision you make, the new trades, the closing trades, the position adjustments, all these guys can be traced back into these overarching portfolio goals. Now, we're going to talk about each of these targets in more detail in just a minute, but let's take a look at your theta. If your portfolio theta is too low, then you're going to be actively seeking significantly positive theta opportunities with your new trades. This makes sense. But what if your portfolio theta is too high? Which, yes, by the way, this is a thing. Then you're going to be more cautious with adding more theta. And instead, you're going to be looking for ways to reduce your theta exposure. Now, what about your delta? Are you more bullish than you would like to be? Well, then you'll look to add bearish positions or close bullish positions. Are you more bearish than you'd like to be? Then you'll do the opposite. Add bullish positions and close bearish positions. And if you like your deltas, well, then you'll be looking for some more neutrally based positions. Those will be your go-to. By determining your portfolio goals at the start like this, and then using them as your guide, you're able to reduce a ton of subjectivity in your analysis and remain far more objective. All right, so now let's turn our attention to theta in a little bit more detail. And what we're going to do is we are going to look to target a percentage of net lick or net liquidating value in daily theta. What this is going to do is it is going to add an incredible amount of context around what this number means and what it can do for us. Here is what I mean. Generally speaking, we tend to fall in a range of 0.1% to 0.5% of our net lick in daily theta, the number that you see at the very top of your platform. Numbers on the lower end of this spectrum, like 0.1%, these are more conservative, whereas numbers on the higher end of the spectrum, like 0.4% or 0.5%, these are going to be a lot more aggressive. And the numbers in between, of course, like 0.2%, 0.3%, these are kind of middle of the road. To put these numbers into a portfolio context, 0.1% on a $50,000 portfolio is $50 in daily theta, whereas 0.5% on that same $50,000 portfolio would be $250 in daily theta. On a $200,000 portfolio, 0.1% would be $200 in daily theta, 0.3% would be $600 in daily theta, and 0.5% will be a whopping $1,000 in daily theta decay. Now that we've built a little bit of a foundation for our portfolio theta, we can lean on the Tasty research, which has shown we can expect to capture about 25% of our daily theta. This accounts for all the big winners, all the big losers, and everything in between. What this is going to do is it is going to give us a great reference point for returns when it comes to our daily theta capture. So, assuming 360 days in a year to keep all the accountants happy, a 0.1% in daily theta would be 36% for the entire year. But we only expect to keep a quarter of that, so we net out to a 9% return. Not too shabby. And you can clearly see that this number scales with more daily theta, with 0.2% coming out to 18% a year, and so on and so forth. Now, some of you out there, after having heard that, you're kind of licking your chops. You're like, man, this is some really, really good stuff. And rightfully so. I mean, positive theta and daily decay, these are some powerful, powerful allies. But let's make sure that we all understand something. These are just reference points. These are just theoretical markers. It's never going to be as simple as just putting on your 0.5% in daily theta, kicking your feet up on the desk, collecting your 45% returns, and then doubling your money every 18 months. It's never going to work out that cleanly, which is a perfect segue into our next topic and our next target, delta. So now that we have a theta foundation, let's turn our attention to delta. And the interesting thing about delta is there are effectively 3 different options that you can choose, 3 different pathways forward through the forest, if you will, each of which with its own set of gimmies and gotchas. So effectively, the first thing you'll need to decide is what directional bias you want to have in the market. Do you want to be bullish? Do you want to be bearish? Do you want to be neutral? Again, a strong case can be made for each of these. The market wants to go higher over time, and the positive drift in the geometric Brownian motion asset pricing model effectively ensures that it will. So for that reason alone, you might want to be bullish. But the big high velocity moves in the market usually happen to the downside, and these moves generally coincide with expanding volatility. So a short delta bearish portfolio can be a nice hedge against your short premium option positions. And lastly, you might want to remove direction entirely from your portfolio returns, which a number of traders like to do, and just be delta neutral. You have to choose your own adventure here, and any of the 3 can be successful over time. So let's work through how to get started with each bias. So if you want to be bullish, then I think a great way to position your portfolio is relative to the SPY index itself. Here's what I mean. For instance, with the SPY currently around $450 a share, that means that 100 shares of SPY is equivalent to about $45,000. That means that if you had a portfolio that was also equal to $45,000, then 100 beta-weighted deltas at the portfolio level would be the same as 100 shares of SPY. Thus, you would have a 1-to-1 leverage in your portfolio relative to the index. If, however, you had 200 beta-weighted deltas in that same $45,000 portfolio, then you are effectively controlling 200 shares of SPY, which has a notional value of $90,000. Thus, you have a 2-to-1 leverage in your portfolio relative to the index. As another example, let's say you had a $180,000 portfolio. Here, you have 4 times the notional value of 100 shares of SPY. So your starting point to have that same 1-to-1 leverage isn't 100 beta-weighted deltas or $45,000. That's only a quarter of your portfolio. Instead, it's 400 beta-weighted deltas, which has a notional value of $180,000, the same value as your portfolio. If instead you had 600 beta-weighted deltas, that would be a 1.5-to-1 leverage ratio. 800 beta-weighted deltas would be a 2-to-1 leverage ratio, and 1,000 beta-weighted deltas would be a 2.5-to-1 leverage ratio, and so on. All right, so that's how to think about your portfolio deltas if you're bullish. But what if you're bearish? Well, it's going to play out a little differently. Let's have a look. If you're bearish, you could use the same leverage relationships that we established in the bullish context, but it's probably even more helpful to think in terms of your delta to theta ratio. Remember guys, a big reason that you are bearish in the first place is to protect your short premium, and your theta number is a representation of how much short premium you have. So using a delta to theta ratio shows you just how much protection you need. The key here is to lean on our research and strive for a delta to theta ratio of about 1 to 2. So 1 short delta for every 2 positive theta. This makes it pretty easy because you already know your portfolio theta numbers from the work we did just a few minutes ago. So with that in hand, you can easily figure out your short delta target. For example, if your daily theta target is 100, then you're looking for about 50 short deltas. If your daily theta target is 500, then you're looking for about 250 short deltas, and so on. The great thing here is this already accounts for your portfolio size, as that was included in the theta calculation itself, so this ratio can be applied more quickly and universally. Okay, so that's the bullish case. And that's the bearish case. But what about the neutral case? Well, as luck would have it, this guy is actually going to be the easiest of the 3. So let's have a look. With delta neutrality, it's pretty simple. You want to keep your portfolio delta as close to 0 as you possibly can. Now, given the fact that we're retail traders and commissions and transaction costs begin to add up really quickly if we try to peg our portfolio delta to exactly 0, we can just focus on keeping our portfolio delta within a range of neutrality. Anywhere between plus or minus 0.1% of net lick is close enough to 0 that we can classify it as pretty delta neutral. So for example, on a $10,000 portfolio, that's going to be a range of plus or minus 10 deltas. On a $50,000 portfolio, that's going to be a range of plus or minus 50 deltas, and so on. If your deltas move outside of that range, then you make the necessary adjustments with both your new trades and your existing positions to bring it back in line. It's really that simple. So there you have it, guys. That's how to establish your portfolio goals. It's up to you to now decide how to take this information and apply it. But before I let you go, let me give you a couple of points of guidance. First, you might naturally be wondering, Jim, why didn't you include Vega? Because when it comes to option returns, there's 3 pieces. There's theta, there's delta, and there's Vega. Well, theta and delta already cover so much ground that I'm not sure that you're going to derive any incremental benefit from tracking your portfolio of Vega as well. And not to mention, now you also have another metric that you have to babysit. You have another metric that you have to target. And at a certain point, that becomes significant. Right? At a certain point, there's too many cooks in the kitchen and it's difficult to move forward in any meaningful way. So that's why you don't see Vega included in this discussion. Second, many of you out there, especially you new traders out there, and my heart really goes out to you guys that are just starting out, man. It's like drinking from a fire hose. I totally understand. You're thinking, Jim, I have no idea, man. I don't even know where to begin. Well, here is a really great starting point, and then you can adjust and customize later on. First, start with 0.1% of net lick in daily theta. It's very conservative. You can ramp this up later as you gain experience and you get more comfortable. If you want a long portfolio bias, which is totally up to you, then start with a 1-to-1 leverage ratio in exactly the same manner as we went through how to figure that out. If you want to be short, then just target a 1-to-2 delta theta ratio. These ideas, these guide points, they will give you a great foundation. They will give you a great starting point for establishing these portfolio goals, and then you can adjust and you can customize accordingly as you move forward along the learning curve. And just like that, guys, we made it through episode number 1, establishing your portfolio goals. Whenever you are ready, I will see you in episode number 2 of this crash course, where we are going to talk about the power of indexes. We'll see you there. So welcome back to the Building Your Portfolio Crash Course. Jim Schultz here with you guys, and we are about to dive into episode number 2, the power of using indexes. First, back in episode number 1, right, we kind of built up our foundation looking at portfolio theta, looking at portfolio delta. Well, what we're going to do now, as we look out to build out the specific positions in our portfolio, we're going to start to fill in some of the mortar between those foundational bricks. So let's do it, man. Let's not waste any more time. Let's dive right in to episode number 2, the power of using indexes. So the real power behind using indexes, it's actually really simple. It's going to give you a smoother ride from start to finish. Basically, by definition, this has to be the case, right? Because when we look at indexes, we're talking about, S&P 500, NASDAQ, Dow, and all these other guys. These guys, by definition, are comprised of hundreds and hundreds or thousands and thousands of different individual stocks. Now, formally, this difference between indexes and individual stocks is referred to as systematic risk and unsystematic risk in the academic ranks of finance. Now, keep in mind that these labels are a lot more theoretical than they are practical. So for us as traders, we need to slow ourselves down a bit before we attach too much weight to what we have here. But nevertheless, these are very, very useful when it comes to understanding the differences between indexes and individual stocks. Now, systematic risk or market risk, this is the risk that is inherent in simply having some capital at stake in the financial markets. It is unavoidable, and in many ways, it's simply a cost of doing business. Now, unsystematic risk or single stock risk is very different. This is going to be risks that are unique or individual to that one specific stock. Therefore, they are avoidable, and they only become relevant if you happen to have a position on in that particular equity. All right, easy enough. Well, let's dive in a little bit deeper and work through some examples of each one of these guys. So starting with market risk, some common examples would be economic data, global growth or lack thereof, or maybe interest rates. Obviously, these...
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
That, as usual, they did their, hey, a couple of weeks we'll have a deal with Iran. That seems to have lost its efficacy today. It worked for a while. They did the usual shtick. Everything rallied, everything went green, and then started reversing. It was looking like a pretty red day if you looked last night. Things were down pretty hard, but we did rally, and we peaked around half an hour before the opening bell. And 10 minutes ago, we were challenging the lows from last night, but we have gone boing, and we're less down than we were then. EFA, outside the US, this is up about 0.75%, but we're still well below this major gap right here. And I'm just adding gaps all over the from For myself, I'm not in that position anymore. Although I will say, because I've said a lot in the past couple of weeks, I'm really light. I'm playing it safe. I'm being careful. 60% committed, 70% committed. I've been pushing and pushing and pushing into more aggressive stance for the past few days. Friday helped, kind of emboldened me, and today did as well. So I'm not going to say to you right now, oh, I'm so light and so risk-free. No, I'm aggressively bearish again, 200%. So there you go. The last bear standing, the last one crazy enough to be shorting this market is before you, and which is particularly insane as of Thursday. But yeah, bearish on Bitcoin, bearish on pretty much anything except energy, and bearish on bonds, which was a chunk of that bounce we saw a few minutes ago. So yeah, come what may, I am no longer hat in hand sitting in the corner politely saying I'm going to play it safe. I'm no longer playing it safe. Very aggressively bearish once more. Although not insane, don't get me wrong. It's not like zero DTE type stuff. I'm still like the options expire like in October and they're in the money already and so forth. So that the conservative lilt of my trading is still there, but in that context, I'm aggressively positioned. Before the China trip, Goldman was running around saying, buy China, buy China, buy China. Not so much. The peak on that one was here on Wednesday, big reversal. And then today we are, what are we doing now? I mean, we're trading now where we were trading in like 2024. How's that for an investment? So yeah, China, it was a non-event. The whole thing. They might as well not have even gone. Nothing was achieved. Nothing was accomplished. Were they trotting out somebody like, we're going to buy some sorghum or something like that, whatever that is. Pointless. But, buy the rumor, sell the news, right? XLE Energy has blasted past its own price gap. Like so. And, obviously the Iran thing is ruling the roost in terms of what energy is doing. And I got rid of my last energy positions. I only had like Schlumberger this morning. I sold that at a small loss, that short. Actually, it was puts, I think. But that's it. Nothing to do with energy anymore. XOP is up 1.25. It hasn't quite sealed its own price gap. This is poorly drawn. Let's put that where it belongs, right there. So there's the price gap like so, but it's getting awfully close. As far as gold goes, GLD, it's up a little, about 0.25%. I haven't traded precious metals in weeks. I have no intention of doing so. I've made the broad declaration that it doesn't seem well poised to go up, and it has been in fits and starts, kind of lumbering its way lower. And so it's a little up today, but nothing to write home about. GDX, the big miners ETF, is down again, almost 0.5%. Same messy chart that we've seen with the others. And XME, which is kind of a superset of that, it's both precious and non-precious, it's down pretty hard, 2.25%. Speaking of ratio charts, those who've been watching me for a while may remember I would sometimes show the XME/GDX chart, which suggested long ago that XME would badly underperform GDX, and it has certainly been doing just that. Not just today, but broadly speaking. The cubes, tech stocks, are also down. They've been down pretty hard. Friday kind of spooked people some. We're down not quite 1%. We've got a bearish engulfing pattern right here. This is the biggest red bar we've seen since this whole rally started. That's worth reporting, right? It opened up strong. And if you didn't hear the news, this is unrelated to the cubes, but Elon Musk did lose his big lawsuit against OpenAI. The jury's verdict is advisory to the judge. So it's not the end of the trial. But yeah, that was really big news, like an hour or so ago. But The cubes have reversed in bearish engulfing pattern. As I said, biggest red bar we've seen since this craziness began after March 30. And XLK, which is a different ETF for tech, is down really hard, 1.65%. Big bearish engulfing pattern there. And again, the biggest red bar we've seen since all the way back to March 30. For myself, on Thursday and also Friday, I went kind of crazy. Usually shorting stuff because it's really, 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 really high doesn't always work very well because they can get higher. But I did anyway. And on the whole, those have worked out. We'll look at a couple of those, but this sort, these vertical, these bottle rocket type things. And I think XLK must be loaded up with more of those than the plain old cubes are. Hence the double big from a percentage perspective diminishment. SMH is a really good example of how helpful gaps can be because I was very nervous. Keep in mind, we opened strong this morning. And it looked dangerous. There's our price gap. Look how close it got. We got to really get in there tight. Look at that. You could barely fit an index card between those two. But it got terrifyingly close to violating the gap, and then bloop, down it goes. So that's the direction we want to see. That's the biggest red bar we've seen in months. Even during this, I don't think we had anything quite that big. So change is afoot. And keep in mind, the big event this week, Wednesday afternoon, NVIDIA. And NVIDIA has no excuse to produce anything except unbelievable profits at this point because they're the only game in town. They have no excuse to say, we have beat profit expectations by 5-fold, something incredible. They have to not, if they don't, and if you see NVIDIA falling on Wednesday afternoon, and especially Thursday morning, well, God help everybody else, because they are at the center of this circular universe. Some of the items that I did throw caution to the wind and short last week, there's Sienna, for example, down over $28. There's Corning, GLW, down almost 8%. I remember specifically talking about that one on Friday. There's Western Digital, down over $28. Love that sound of that word. Just rolls off the tongue. And the one I haven't monkeyed around with is SNDK SanDisk. Not because there's anything wrong with the chart. I guess I just like charts with lots more history to them. But percentage-wise, kind of the same idea. AMD, another short, down almost $8, about 2%. And I will happily hold this until I will consider covering here if we get down to this price gap. Marvell, MRVL, down almost $10, over 5%. A lot of nice reversals going on. And this is just a little sliver off that giant 2x4 of gains that they've enjoyed. So, it's tempting to be like, oh, thank God, finally a short position produces 12 cents of profit. Let me take it while I can. Nope. Like I said, 200%. I'm not budging. If I can cross my arms and short day after day after day after day after day of lifetime highs, I can certainly do it when it starts to crack. Because ain't nobody bearish but me. Look around. They're all just, and it just go back to the movie I keep talking about, The Big Short. When you watch it in retrospect and the history, it's already happened. It's easy to cheer on the guy on stage castigating the audience about being crazy. No. At the time, guys like that, they're the ones getting tomatoes thrown at them. The people who at the top talk about the bubble, talk about overvaluations, they're the bad guys as far as the public is concerned. Only after the fall do they get exaltations and heralded. So we're still in the tomato part for a while. And I'm happy to take them. Just make them organic, I guess. Micron, Another hard fall. $54 just about. Over 7%. Big old fat red bar. So a lot of diminishment going on. And Oracle, against which I own puts, and I expanded the put position today down over $8. All the hyperscalers, anything to do with hyperscaling, Amazon, Oracle, CoreWeave, NVIDIA. If this whole AI thing cracks, it's just going to be this cascade effect. And as I said last week, the bonds are the core position. And the core thesis here is that interest rates are going to go up, and Kevin Warsh cannot stop it. I can imagine the tweets that will be coming out. You are from Central Casting, do my bidding, You'll see. Here's the ZB down a little bit. Again, I keep looking around here because this weird micro rally we had starting just before the show, which was rather unsettling. But bonds, are in trouble from a long-term perspective. And so how am I exploiting this? Well, I own a lot of TLT puts expiring in September. And from time to time, I'll buy TBT, but the TLT puts are the main one. Over in crypto land, Michael Saylor's strategy down over $12, almost 8%, and it's got quite the right triangle top here. We're sinking beneath. And Ethereum down 5.5%. Beautiful price gap here. It climb, but it's starting to fall away from that. And of course, the big one here, the one that really matters, Bitcoin. And hello, trend line that's moved. Let's say goodbye to that. So there's Bitcoin. We're down $2,580 on the futures here. And, I've got one portfolio entirely dedicated to being short Bitcoin. Yay. What's not so yay is, I've been doing this a while. It should have been more obvious to me. The whole thing about the Clarity Act was a great shorting opportunity. I looked at this very camera and I told you, but not myself, that this is probably a great time to be short because all the optimism is there. The crypto crowd, it's all about, won't it be great when, fill in the blank. Won't it be great when they have ETFs? Won't it be great when Trump's elected? Won't it be great when David Sachs is the crypto czar? Won't it be great when the Clarity Act passes committee? Won't it be great when Clarity Act passes the full Senate? Won't it be great when the Crypto Act is signed by the president? And on and on and on. And in the midst of the biggest bull market in human history, we have Bitcoin, which is down 40% from just October. And that, with all that positivity around it, that's what you get. So, shame on me. When the Clarity Act is out, Tim Scott's doing a thing, and Senator Lummis has got her laser eyes on her Twitter profile in this abject kowtowing to the crypto crowd. This grotesque debasement. That's when you get even shorter. It's like, wow, it's up a few thousand. The prices are even better. Let's short more. But it's falling. And like I said, my target is, I say 35,000. There's a big Fibonacci at 40. Maybe I'm overshooting it some, but that's what I'm looking for. Okay, we've got some time left. Let's look at the other thing I had for you, which is these ratio charts. And like I said, we've at the last moment, we're sort of scrambling to see if this works, but you should see different looking charts on your screen. And as a reintroduction, this is very simple. This is basically one symbol divided by another. And these help normalize the information. It helps reveal insights that aren't possible with a single chart. You can draw conclusions and suppositions and trends that just you can't do with plain old symbol by itself. And so there's one block of this is basically the same conclusion, which is that, goodness gracious me, equities are going to badly underperform precious metals for a very long time to come. And these are all different flavor of that. And when precious was doing great last year, you saw these charts a lot because it was really starting to drive home that point. don't bite your tongue on a live show. That's my safety tip for the day. So this is the NASDAQ composite divided by silver. And you can see here, big topping pattern, a big fall, big topping pattern in the beginning of fall, and a retracement right here. And so, this is, you got the numerator and the denominator. And so what this suggests is this thing at the front is going to go down, and or this thing at the back end is going to go up, or both. So if stocks did nothing for years and silver went stronger and stronger and stronger, this would still behave the way it's supposed to behave. But most of these, you're going to assume that it's kind of a combination. The first one's going to be weak and the second one's going to be strong. Numerator, denominator, chart go down. So that's comp Q over the silver. Here's the Dow Jones Composite divided by silver. Another tricky bit here is like, how high will this retrace? Will it go all the way up here? If so, well, stocks have some room to go up. Or precious metals will be extra weak for a while. Who knows? And there's also no guarantee that it'll ascend all the way back to that pattern. But these are long-term charts. Here's the Dow Jones Industrial divided by silver. And I'm thumbing through these because it's very repetitive. They're not all like this, don't worry. But the point is the same, irrespective of like what equity index you're looking at, or even what precious metal you're looking at. Because we've looked at silver, we've looked at gold. I even got some palladium thrown in here. Here's the Russell 2000 divided by gold. Same conclusion, different pattern. We have a diamond pattern here. I've lazily drawn an oval because diamonds are hard, but this is a diamond pattern. Here we have the Russell 2000 divided by palladium. And notice, look at this. We're actually pushing into the pattern here. Does that ruin it? Is it too strong? No, not necessarily. Look what happened last time. It also went higher before peaking and then tumbling really hard. So that's okay. It's done that before. That's what history is shown us. Now, different class. So you saw, okay, we get the point. Different topic here. But again, emphasizing the role of ratio charts. Here's the S&P 500 divided by GDP. In other words, how expensive, well, let me phrase this in a very neutral fashion. What is the price value of the S&P 500 relative to the gross domestic product? High is expensive, low is cheap. Well, not surprisingly, down here in the late 70s, around 1980, the stock market was very, very inexpensive compared to the nation's economy. Up here, it was very expensive, and then it was less expensive here, and you got this kind of a crude channel going on. How about now? Well, not only more expensive than ever, but so expensive that it has exceeded the bounds of its own trend line. So, and this is the point about normalization. One can debate, is the stock market expensive or not? Well, that's clearly a matter of opinion. And how do you establish an opinion? Well, the logical way to do it is with some kind of anchor, some kind of framework and logic. Not just, well, it feels expensive or it feels cheap, or I was at Walmart and it was really busy. That's crazy. Instead, it's just like, well, how about the entire economy of the country judged over a period of like 80 years? How does that sound? And this is more what this does. And so it's very expensive. End of story. This is the S&P 500 relative to the money supply, the M2 money supply. Same conclusion. It's really, really expensive, so much so that it's even more expensive than its most expensive time ever in the history of the universe, which was back at the tippity top of the internet bubble. Right there. We've exceeded even that. And the funny thing is the housing bubble was actually kind of cheap in money supply terms. And the real bargain was, March 2009. They were just giving stocks away at that point. So, but here we are, the everything bubble. And these are long trends. You know, it's not like just you wait next week the market's going to crash. No, it could be at lifetime highs tomorrow. Absolutely. I've been wrong a few tens of thousands of times. You know, this is not a flawless prediction, but on a long term, you know, if you told me that in 2 years it'd still be an endless series of lifetime highs, then I'm just going to pack it up and, I don't know, finally hit the road as a cabaret singer. But I don't think so, based on everything that I see. This is just kind of an objective way to view it. Here's another. These are all different little stories, you know, told with charts. What's this one? This is the S&P equally weighted index divided by the S&P we all know and love. So what? What does this tell you? Well, it's gone down for years, hasn't it? What does that tell you? It tells you that fewer and fewer stocks are keeping the market propped up. I think I read the other day that of the S&P 500, 5 of them account for half of all the gains we've seen this year, and the other 495 share the responsibility for the other half of gains. So, you know, you've got your NVIDIAs and your Googles doing all the work, and then the 495 others nobody's ever heard of kind of sleeping on the job. Oil. This is the oil stocks divided by the money supply. Until here, I had thought, not without good reason, that this was heading a lot lower. Boy, oh boy, is oil in trouble. That's not true at all. Well, the chart failed you. Not really, because the chart still said, you're wrong. The chart blasted past this pattern here. It's like, sound the alarm. Something's going different here. And so that's kind of shocking. Looks like oil might have a great future after all. It has defied its own history by bursting above that. So you can see the different kind of tales each of these is saying. I'm keeping an eye on the time here because we've got about just over a minute left. But you can see, I mean, I'll try to kind of put a bow on this. The idea behind these is that if you look at, say, you know, just a stock chart of Netflix or something, that tells you just how Netflix is doing, end of story. It doesn't give you any deeper insight than that. Whereas if you look even a simple combination of A divided by B, you can draw new conclusions. I'll just make this the last chart. This is the NASDAQ composite divided by the money supply. I think we can draw 2 conclusions from this. Conclusion 1 is that we have once again equaled, maybe even bettered. I didn't draw a line, it just eyeballing here looks a little bit higher. But it looks like we've beaten the prior peak on this, set back at the peak of the internet bubble. And the other thing we can conclude, besides the fact it's relatively very expensive, historically expensive, uniquely expensive, is the fact that this long wedge that's been going on, even within the confines of that, ignoring the prior history, is very, very expensive relative to its past prices. So it is the end of our almost half-hour show today. Hope you enjoyed it. Saw some interesting new things. We might do it again this week. Depends. If we get a big hard down day, I'll probably be inspired enough to do another long show. But otherwise, you'll certainly get the 15 minutes you're used to. So that's it from me. Thanks for coming by. Hope you liked the extra charts, and I'll see you here tomorrow. Bye-bye.
Hey, Bat, what's up? Not too much.
So welcome back to the How to Build a Portfolio Crash Course. Jim Schultz back here with you guys. In this episode number 3, we are going to focus on the role that individual stocks are going to play in your portfolio. To this point, we've already built up a decent little foundation, right? Episode number 1, we talked about our portfolio targets. Episode number 2, we talked about the power of using indexes. Well, now it's time to layer in some individual stocks. So without further ado, let's do it, man. Let's dive right into episode number 3, adding individual stocks. So as we kind of alluded to on our way out the door back in episode number 2, there's a really good chance that indexes are not going to be enough. There's a really good chance that for you to hit your portfolio targets in theta, in delta, you are going to need some individual stock exposure. That makes sense. Well, before we do this, let's make sure that we all understand it. We all remember what it is that we've signed up for as premium sellers. When you sell an option, which is what we primarily do, you want its price to fall over time. So that way you can buy it back later at a lower price. Doing this would lead to a profit that is really no different from buying stock or buying an option, letting its price increase, and then selling it later at a gain. Selling the option first is just this process in reverse. But even more specifically, we primarily sell out of the money options, so their prices are 100% extrinsic value. Over time, these extrinsic values will naturally be falling, as an out of the money option must sell for 0 at expiration. So we want to benefit from this with our new positions as premium sellers. Okay, so now that we're all on the same page in terms of what we're even trying to accomplish, it's going to be easier to see the power that individual stocks can play, the role that they can have in your portfolio, if we take a look at one of the most important metrics that we use at Tasty Trade, implied volatility rank. So implied volatility rank, or IVR, is a metric that we lean on heavily, and it shows quite literally how the implied volatility for a stock stacks up against its historical self by taking the current implied volatility of the stock in the numerator and dividing it by the previous year's range in implied volatility, the denominator. We're able to more accurately gauge where implied volatility is right now relative to where it has been. For example, let's say that last year's implied volatility range ranged from 10 on the low end to 35 on the high end. If the implied volatility right now is at 15, then the implied volatility rank is going to be sitting at 20. The implied volatility is 20% into the distribution of all the implied volatilities from the last 12 months. Similarly, let's say that the implied volatility were 30 based on last year's range of 10 on the low end to 35 on the high end. Now, the implied volatility is 80% into its distribution or range from the last 12 months. So this would lead to an IVR of 80. Okay, all that stuff about IVR, that's all well and good, but why is this important? Well, let's look at a couple different reasons. First off, and quite simply, higher implied volatility rank means higher option prices. Since higher IVR can only happen from higher IV itself, and higher IVs into the Black-Scholes model lead to higher option prices out of the model, higher IVRs are going to lift option prices. This is helpful because remember what we've signed up for, guys. We want option prices to fall over time. So if we can sell them for a higher price, ceteris paribus, then we automatically have more room to work with on the backside. But second, volatility is a unique metric in that it tends to mean revert over time. This means that volatility expansion is often followed by volatility contraction and vice versa. Therefore, entering positions with higher IVRs can put us in a more...
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
One.
Nikki, we are back, son, and I am so glad to be able to be here with you today because I have one question to ask you. What the hell is going on with this market right now? We get a move down on the E-mini S&Ps that flirts with the lows of 75 from last night. We break the lows from 75, and all of a sudden, markets widened out. The Dow was the first one to react, 30 stocks. It started going higher. Volatility was maybe down about 10 cents. It went down to about 40 cents. Volatility's never been higher all day long. NASDAQ was making a new low back under 28, 850 or so. Russell was making a new low, and that one tweet or saying was something to the effect of...
it's a truth. It's a truth, not a tweet. A truth.
A truth?
Yeah, a truth social.
Truth social.
Yeah,
gotcha.
It's a truth.
They postponed a planned U.S. military strike on Iran from the request of Qatar and a bunch of other Saudi
UAE,
princes.
yeah, all of them.
We did it for the good of them, is what we're saying.
Hey, listen, we've watched it.
My question to you is, we rallied about 30 handles, 25 to 30 handles.
In a set, it was 40 handles in one bar.
Is that all that piece is worth? Because it would have been 150 handles.
I mean, look, he stemmed the bleeding. 1% down moves. That's when we get our tweets. So we were right there. It's going to be interesting going into the middle of the week. You have vol expiration, but they're smashing vol right now. They were smashing vol on Friday into the close, despite the underwater close that we had.
And underwater closes usually, at least from my experience, signal kind of a capitulation moment. If we were lower and you get an underwater close, you think you're going to go higher. If we're higher, you're going to get lower. So for me, it's like kind of like a reverse indicator of what the market's going to do. But we've been weak all day long with volatility unchanged or lower.
It feels like if you're trying to be short, you have to take the money and run when you get it. I just closed out that SPX put spread into this another 20 handle move that we did this morning. It's not a nice trade, but just got back like $1,000. I mean, it's a $500 loser now.
Sweet. Look at you. You're only a little loser.
It's a little loser, but again, things move pretty quickly here. So, you take the money and run when it comes. I mean, what more do you want? It looked like death an hour ago. And now
it looked like a full loser.
Yeah. What else you going to do?
Roll down those calls.
You could have rolled down the calls, but
I'm teasing because you asked if should I roll down the calls
earlier today. I asked. I was
yes,
like,
and
dude,
I actually told you no.
yeah.
So I was giving you a chance to make me wrong is what I was trying to do.
No, it's okay. You're never wrong in my book. But it's been a crazy move. I mean, the market looks awful underneath the surface. When you see the headline, E-mini, S&P 500 down 25 basis points. When you see this at the end of the day today, or read this in the newspaper, that's not saying the full story. I mean, the Mag 7 stocks look horrible.
Mag 7 stocks look horrible.
I mean,
the high flyers look horrible. The ones that have been bringing us to the promised land. Even the fringe ones like like that VST and just a couple others that they all look horrible.
SMH looks horrible. Let's look at RSP. Vecchio will probably quote this for us later. That's up on the day, up a point.
I'm talking about ABGO, which is only down $5 now.
All the semiconductors are getting killed today. I mean, AMD was down another 10 or
VRT. That was it. VRT down $32. That was the one I was thinking. I said VST. I knew I was wrong. VRT down $32 and change. Even Apple today down 2 3/4 was a pig. That Nimbus group down $22.
Nebius.
Nimbus, Nebius, tomato. You know what I'm talking about.
Yeah, it's all good. You're learning new things here. You never would have quoted that.
How about PWR? I wouldn't quote that either. How about that one down $42? I mean, Quantum Services. How about that one?
Yeah, I mean,
how about SanDisk down $80?
Well, like I said this morning, you got a big day on Wednesday. Wouldn't be a shock to be choppy and flat until then. Vol expiration, maybe a move after that, but until then, it's more of the same. It's more news, it's more headlines, it's more truths, it's more tweets. You just got to be nimble. You got to be quick.
So I was going to play for a sell-off into the close, much like what we had yesterday. Before that tweet, when I was setting my computer up and I was sitting here, and it happened right at like
2 o'clock.
2 o'clock, 2:02 or something like that. Yeah. I'm sitting here going, man, this market looks weak. Volatility is not confirming it, but it looks weak. I think we're gonna sell off into the close. That's what I was thinking. Completely wrong.
You still think that now or no?
I mean, now that the market has rallied back and even the S&Ps are only down 14 and the Dow is actually up. No, I don't think that. That's why I'm saying I was completely wrong.
The move in volatility has me
perplexed, right? It's just
I'm in a different solar system right now. I just don't get it. I don't get why volatility is just stay. And it's not that I have a ton of short delta or that I'm long vol. I mean, I have a little bit, but it's just, you see you got a Micron down 20% from the highs. SanDisk. Yeah. You got stuff on the other side of the coin, your Rocket Labs up $6 or $10, $15 earlier today. The move in bonds, I mean, bonds were
They were once
bonds have had they've had 2 full point days.
Yeah.
In a row. I mean, and Friday was just a wild move in the bonds. And you got, nobody cares. Oil was at 105 an hour ago.
Yeah, and you hardly talk about it anymore, right?
Oil volatility is like 0.
Well, it's not 0, but
it's not 0, but OVX at 71 and change. I mean, there's just nobody. There's no fear, and the puts
down 83 cents is actually an uptick today from the lows.
Puts are not bid either.
No,
I mean, so let's just see where SKU's at. Like you go to SPY.
I know, but that's what scares me.
I know that I agree. I am with you, but it seems like we are rare. We're in rare company.
Yeah.
I guess you have a little bit
company
of
that we're scared.
Yeah.
Everybody else has it figured out.
Yeah, I guess so. There is earnings after the close. You got Home Depot. Do you have any interest in that?
Somebody just wrote to me, did you see Tim Knight's hair today? He looks like he got caught in the Trump tweet.
I mean, you can't fight it. We haven't fought it. We can say
we
that.
haven't.
Like, we're not fighting it. We missed some of the up move, which, is sad. We've participated in places, but we're not fighting it. You can't fight it.
Yeah.
And Val is telling you that it's just, there's nothing. It's all short-term little dippy doos.
It sure is. It sure does seem that way. Oh well. What it is.
Home Depot, you got any interest there?
Oof. Not happy with their plant selection, and neither is the stock price. Home Depot.
What kind of plants you looking for?
Like some outside stuff to put a little zhuzh on the house. You know what I mean? Like, they still got all ground cover. Maybe it's because it's so freaking cold here. I mean, we finally got 2 nice days in a row now, but maybe because it's been so cold. But look at Home Depot. The stock's been cold too, trading down to around 300. I don't know. Ivy ranks 98. I think you got to be a little directional here. I want to be a little bit bullish in here because, nothing goes down. You got 4 vol points between June and July. I do something there. You want to go short dated and do something in by June and sell short dated 4-day options?
Yeah, I might do that.
That'll give you a little more bang for your buck. I mean, a guy like you would probably do something like you'll buy the 305 calls. You got about what's the expected move? Just about $13. So if you do 305, you might be able to go up to the 310. Nah, you're going to have to go further than that.
The markets stink here.
Yeah, they do stink.
There you go.
What'd you do? I don't know. But I'm going to say 305, 315.
305 in June, 315 in the May weekly.
682, somewhere like that?
685.
685. Beautiful. I had it up there. I didn't even know what you did, but I figured that's what you were going to do.
Makes me sick.
I got you so pegged.
Makes me sick.
I know what you're going to do before you do it.
You got SPX 7400. Ah,
you should have just left it alone. I told you.
No intestinal fortitude. Missed. Yeah, would have been a scratch.
Right now, it's $1 and change winner. What are you talking about? Scratch. Here it is, $6.40. It's $5.
Oh God. Could have been somebody. Could have been somebody. So sad.
You just had to wait a little bit.
Yeah, come on. You got to take $2,000 to heat, make back 1,000, and then wait.
It's so easy.
And then wait. Come on. Unbelievable. I mean, we did do this somewhat into Friday. You had a little bit of a rally, and then they whacked them. I don't think that's coming today, unfortunately.
No, you got about 10, 11 minutes for them to do it. You got the Dow up. Your volatility hasn't moved down 36 cents, but it's been weak all day. I mean, you're not losing oil. It's 101. I guess you lost it a little bit. Bitcoin never caught a rally all day long.
No.
So,
I mean, the list, like the stuff that's moving to the upside is like Costco, Accenture,
Costco's
3M.
in the clubhouse up 26.
You got some of the software names, you got CRM up a handful. You got Adobe up a handful, and Intuit. You got some of the defense stocks like LMT and RTX. It's like, it's a complete flip of the stocks we've been talking about. Quickly. Yeah. A quick flip.
It's only one day. These will give way to the superstars tomorrow if you catch a bid.
I know. I did another one of those wide butterflies in MU, trying to catch lightning in a bottle like for the 10th time.
Hey, it's a good gig if you can get it.
I'd say it seems too easy.
You did.
It's just like buying on Sunday. It seems like it's the easiest thing to do in the world.
Yeah, you did. This is the one you did, right? For 1650.
Yeah.
Was it 750, 900?
Yeah.
Well, that's a big wide one.
Yeah, big wide one. I mean, what else are you going to do here? You don't want the naked risk on the upside.
750, 900, 1050.
Yeah, it's a big wide butterfly.
Man, you play in the upside. If that ball's going to expand, if we go to the upside, yeah, I get it.
I mean, you got volatility coming in on all those.
I mean, the stock has really gotten killed. I'm just kidding.
Oh my god!
Oh, it's so sad.
I know, it's great. It's crazy. It's wild to watch.
I mean, this is a first. The Dow is the strongest of the group. NASDAQ and the Russell are friends. They're down the same amount on a percentage basis. And even the S&P is basically unchanged.
Yeah.
You got volatility at 20 over a 1% expected move across the board. Crazy.
Nuts.
Yes, it is. Yes, it is.
And now it was so funny. I was taking off junkie short premium, like on the upside earlier this morning. Now I'm taking off junkie put side premium. I just bought back a put spread in PLTR that I lagged into from a butterfly, the ratio spread, and then turned it into a butterfly, and I just closed out for like 40 cents. I mean,
PLTR green for, I think, the first time today.
Yeah.
Yeah, that opened closer to 132 and has been weak all day long until just now when it caught a little bit of a bid up a buck.
What are you looking at?
Kind of scratching my head kind of day here today. I mean, really didn't do too much from an offensive standpoint. Some of these oil stocks I think are getting a little bit frothy, like the XOMs of the world. I've actually got a little bit of short delta in there now. I bought it lower, but watched it go too high, too fast, and I sold into it. So some of these oil-related stocks, I'm selling a little bit of premium in.
Okay.
Good IV rank of 70 in there. Horrible markets.
Yeah.
I do not recommend it for everyone.
The markets across the board have just not been very good. I think a lot of that is just the realized vol that and the volatility of just single name equities. You're just seeing these things fly around. Like how tight are you going to make markets in Micron? It just moved like $30 in 15 minutes.
Right.
You got to expect. And same thing with XOM. I mean, those stocks, on a headline can move $6 or $7, and they're historically like, 30 vol stocks. And they're,
yes. Hey, don't throw McDonald's out there too. I mean, up $6, you got horrible markets in there too.
Yeah.
I mean, seriously, these are 70% wide markets in a stock that has 20% monthly implied volatility. Shame on you, liquidity providers. Shame on you.
Make some calls after this, all right?
What's that?
Make some calls. Talk to some people.
Make some calls. I'm going to call somebody. I'm going to see what they care. Who cares? So you got NVIDIA coming out with the earnings on the 20th in 2 days or so after the market closes. Been weak all day long. Anything you can do in NVIDIA? IV rank of 62?
I actually today took off some risk on the upside, and I bought in. I just bought a strangle to define some of the short-term risks that I have, free up some capital. But I am wrapped right around here, 220 to 225. If we have a nothing move in NVIDIA, would be about as good as it gets. That is as good as it gets.
I mean, with a big stock, a big cap stock like that, $5.5 trillion, you can get an inside the expected move. Now, the expected move going out to the 20th is actually to the 22nd is about $13.
Mm-hmm.
So say they're expecting around by the 20th, today's the 18th, $9 expected move. Maybe it's a pretty $9. Yeah,
take like
$10 expected move.
5% off for each of
5%.
Thursday, Friday. You take like 10% off the top.
Yeah.
Yeah.
And it's marginal.
Yeah.
It's marginal.
Yeah. I wish there was more to do. I wish I had more.
I wish I had more too, son. Your mother might still be with me. Who knows? I mean,
It's a good thing you added that in.
I said that was dissing me. I was dissing me. I wasn't
Of
dissing
course.
her. I'm dissing me. I was self-deprecation right there.
Deprecation. Come on.
Yeah, whatever. That too. You should try it.
Gavone.
Don't try drinking in the afternoon, though. Don't do that. 4 more minutes, son. 4 more minutes. You can do it.
I was hoping the gold silver ratio
today. Say again.
I was hoping the gold silver ratio would have moved. It hasn't.
No.
58.90. You got everything right where it is, like right where it's supposed to be. You know,
gold silver ratio is trading 59. It was like 59.60, $59 like 60 cents earlier today. It hasn't moved at all. Right?
Yeah.
All right. Yeah. All right. Well,
look, I don't know where to go. You got, E-minis. They're down like what?
Would you rather sell bonds or buy oil?
Buy oil.
Sell bond puts, be bullish on bonds, or buy oil.
Buy oil, sell oil volatility.
So you'd rather like buy futures, sell extra upside calls.
Yeah, or do something in USO. Fat, wide call ratio spreads like I have on. I think that's the play. I don't know. Everybody's been looking at back month oil. Because if you think it's going to stay at 100 for the next like couple months, the mid 80s that you have in back month oil going out to October, November, December, you got to think there's a little bit of a bid there. Like in the next month or two, if we're here at 100, those got to be closer to 100, right?
Yeah. I mean, do they? I mean. They got to take into consider carrying costs and everything else like that. I think I don't think there's a play there.
All right.
I don't think so.
All right. So you just give me the GFY.
I mean, I hate trying to do something 200 days out.
I don't know if there's anything to do there, but. I mean, if you think oil's...
That's why they're cheaper relative. I mean, you got carrying costs that have to be put in there.
Yeah.
I mean, I don't know.
So I'll stick to my USO call ratios.
Storage, renting, terminals. I mean, there's everything they put into this. I mean, I don't know. I don't see it, boys and girls.
All right.
Trade the front month. Stay where you are. Stay in your lane, Junior.
Got people calling out your self-defecation.
Self-defecating.
Yeah.
Don't read that until after the show.
Oh my God. Yeah, the chat's having some fun.
Yeah, they're supposed to. Boring day. I mean, really,
it ends as a nothing day.
50-point dip. Even the S&Ps, I was talking about the volume earlier today. The volume actually really picked up 1.84 even the S&Ps after expiration.
Yeah.
I mean, this is
actually
good volume.
This is actually a good thing because I was worried that if we had another 50 or 100 point down move, I'd be getting the text from my sister. Where'd her money go? Where'd my money go?
Down 8 on the E-mini S&Ps and the NASDAQ down 140. You still might get that. You still might get that phone call.
Yeah, this is a tough day. I bought her SMH at 400, 390-ish. So she's gonna be really upset with me today.
Yeah, because she wants to know why you didn't sell it like 575.
Exactly. Why didn't I sell it there and book some profits?
I mean, you watch one thing all day. I mean, you think you would be able to get it right. Volatility in by 42 cents, 10 cents off its lows. E-mini S&Ps, 20 handles off of their highs, even though they're down 7. NASDAQ down 130, over 29,000, 29,100. I say over 29,000 because it's been north and south of that number. Russell flirting with 2,800, but it's still 20 handles off of that. Dow up 130. That's your leader in the clubhouse. Volatility in by 43 cents. Weak all day long. I can't tell you the amount of emails I got today about volatility being down, market being down. What's the reason?
Well,
I
here's
don't
what
have the
gives.
reason.
Yeah, nothing day at the end of the day.
What does it mean? I don't know what it means, but typically it's going to be, I think, a little bit more bullish than bearish. That's my opinion, but who knows, right?
Yeah.
Oil, the canary in the coal mine, almost 102 after trading up to 105. Gold, which was weak all day long, closes up unchanged, up 3. Much to do about nothing.
Nothing day. We got one more of these until the big event on Wednesday.
And then that's NVIDIA earnings. We'll take a quick 90-second break and come back. We'll just have to see what Trump trades. That's what we have to do.
We need an update.
We need an update. We'll be back and see what he does in NVIDIA. We got a quick 90-second break and come back. We got more Tasty Live. Immediately found these messages. Peace.
Peace.
Good job out of you, son. Thank you. Ciao for now.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Estas
We're trapped between OPEX and Vixpiration. Did anything happen? It's still Monday, May 18th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. We're here for the next 23 minutes. Sorry about that late start, folks. A day in the market where stocks open lower and stay lower, Ilya, although they are off the lows and we recover a bit more during the U.S. trading hours. S&P 500 still down 11 points to 74.21. Your NASDAQ is off a little bit more here on the day, off by 0.5%, 147 points there, 29,096. Late in the session, after Futures Power Hour ended, President Trump was kind enough to come out and say that the scheduled attack of Iran tomorrow has been postponed at the request of Middle Eastern leaders. Oil, which was trading up at 105.21 here in the CLN6 contract, comes off in the second half of the section, really in the last 90 minutes, now down to 101.84, helping give a little bit of a lift to the stock market. You see that yields had come off their highs, Ilya, as a result as well. ZN here, 109 and 7 ticks, off the lows of just below there, 108 and 30 ticks. So that's really the trading day today. There's a bit of movement in semiconductors. It's the worst day for semiconductors that we've seen since the lows back at the end of March. NVIDIA earnings are coming up this week, my friend. So tell us, what do we make of this late day action? Just shuffling of paper still as the president leans on the oil market again?
You know, I dare say this looks like rotation in a kind of uneasy way. I think if you take a look at what's going on here, let's say in IGV as relative to the MAGs or as relative to the NASDAQ or as relative indeed to SMH. I think you can see here that we obviously have a little bit of a different story. So the beaten down parts of the equation seem to be a little bit better off. The outperforming ones seem to be a little bit weaker. So it looks like there's a kind of holding pattern here, waiting for event risk, but under the surface, a kind of distribution from capital away from those things that have had a good run, which gives it a sort of defensive flavor.
Yeah, I mean, anytime tech's down the most and oil is up most, that's usually a defensive shift. I mean, quite frankly, I know there's been some studies shown recently, it's popular on FinTwit. If you just invested in XLK and XLE every year for the past 5 years post-COVID, you would be beating the S&P 500. If those are your only two holdings, 50-50. And, that's diversification for you. So oil is the biggest outperformer today, but it's on the back of what has been a rocky session. Oil technically still up, but has come in some here. OIH is up 3.04%, XLE is up 1.87%, IYE is up 1.79%. That's your oil complex, ETF complex, I should say. But you're right. It is the winners. It's semiconductors. It's technology. It's telecom. It's the stuff that has been carrying this rally higher thus far that has seen the greatest weakness. How are you interpreting this price action right now? Because I know you've been big on the volume side of things, and not for nothing, today was a meaningfully large volume day at 1.91 million contracts traded at ES here. Last week, we saw enormous ETF inflows into things like SMH, DRAM, DTCR. Is this, let me take one more step back. I had a really interesting conversation today for trading trends. And one of the conversation points, I don't want to go too much into detail, is how now the S&P and NASDAQ are literally Standard & Poor's and NASDAQ are changing their IPO seasoning requirements from a year to 6 months. So you're starting to see this like late stage activity where people are jamming the rules up in order to maybe try to keep the rally going. You feel delighted with
that hot potato? It sure is hot.
You like this big volume move with the worst day so far in semis? Is that enough to get you to dabble back in on the bear side again?
Oh, I started dabbling back on the bear side on Friday. And the way I started doing it was selling calls in SPY, in the Qs. And what that's done is it's, of course, helped pay for the premium I paid for the put verticals I've been nursing here that have been at max loss for a few weeks. And in the case of the NASDAQ, it's actually paid for all that premium and then some. In the case of the S&P, I've reduced my cost. And I'm still sitting on a bunch of IWM calls that I sold from a couple weeks ago because, of course, this has been the underperformer. It's not had the kind of resilience that the more tech-exposed parts of the markets have. The business cycle has worked more cleanly here. And so I'm still very much in that space, but not exclusively. For example, I'm long IGV. I'm still long Bitcoin. So through
Bitcoin? Can we talk about Bitcoin for a second here?
Yes, please.
This is looking worse and
It's
worse.
worrying.
It's a little worrying here.
It's getting worrying. It's getting worrying.
You get this bear flag trying to run up into that former swing low.
This is the line in the sand right here.
That's not
that level that you just had there in that thick line across the most recent kind of resistance turned support level. That's the line in the sand for me.
You know, Bitcoin is keep rolling over, right? Oil's up, yields are up. There's just this like voice in the back of my head. And also, you know, we've had this conversation around the office, but the voice around in the back of my head is saying, this is not a really healthy setup for the stock market to extend its gains after NVIDIA earnings. You would expect you'd want to see Bitcoin still trading around 80. It didn't need to be going up still, but like it shouldn't be giving up the ghost a little bit here, down 5% off the highs. It's not comfortable.
No.
So, Ilya, I'm thinking about the path forward right now. And in particular, I'm thinking about the seasonality. I know that we brought this up on Futures Power Hour earlier today. I know that some folks may not have been paying attention to Futures Power Hour all day long, which is understandable. But we were talking about the seasonal weakness that we're running into, as it were, right now. From May 17th through the 26th, that is the window with which we typically see a decline in May. In fact, the only day since 1950 that has produced an average positive return in this little window that we find ourselves now having entered is May 22nd. And then it flips over where that final week of May, once you get through Memorial Day, you go into the first week of June, the bulls come back on, and the gains that we typically see in the S&P 500 in that final week of May and in the first week of June are so great that they subsume any losses. In this particular now third week of May, that's bearish. And you typically get a push to levels that were above where you were prior to the May decline. Now, I'm not saying that's going to happen here right now, but you kind of can put together these puzzle pieces. Post-OPEX, all that gamma hedging is unwound. VIX is tomorrow. So where will the volatility hedges be placed moving forward? Volatility is pretty low right now. Are you going to be selling vol or are you going to be buying a little bit of vol protection? You have NVIDIA Wednesday. Apparently, we had strikes planned in Iran tomorrow. So that looks like that could get restarted anytime soon.
That was really interesting how nobody said anything, but then it turned out that there was a plan.
Yes, there was definitely a plan in place. Definitely. But if there was a window for the war to resume, right, it makes sense now. Trump's back from China. Why would there be any conflict between the U.S. and Iran going into China? That would give the U.S. a much weaker point of negotiation. So,
At the very least, it would sour the festivities. Otherwise, it seemed like everything was very, very peachy.
So I bought that dip on Friday, Ilya. Then we got the close below the 1 week moving average, and we're not really rebounding through there in the S&P or the NASDAQ today. So my approach wasn't to make any adjustments per se today. I'm not going to double down on the dip that I bought. I'm willing to give this a little bit of room to breathe. But the forces here, the planets, the stars have aligned in such a manner where bears want to take advantage of a soft calendar. It feels like this is the 5 or 10 day window where they could actually try to accomplish that. I would love to be able to buy another dip, get in at a longer term, like get 72.90 here in ES. Happily go out to September and look to buy some like $7,700 calls. But we need to get a little bit more pullback before I can justify putting more eggs in that basket right now. As is such the nature of a momentum trader, you buy dips and eventually one of the trades breaks. This might be the one that breaks.
Could be.
Totally content with that, though.
Could be. I mean, I think when you look at what you have here, you definitely don't have the ingredients to buy a dip here and now. You've just done some damage. I think if you're not already long, you don't get long. If you're not already short, you might think about getting short or not. But what you, I think, certainly are not clear to do here is kind of rinse and repeat what's been working the past 2 weeks. There's something else that's going on here. The way that this price action has configured itself, either the slope of the trend is about to change, or we're about to go into some kind of consolidation, or we're about to sell off. But I think the one thing you can say here with clarity is that a kind of cadence has been broken. And so what's been working, let's say, since mid-April, you can't expect to work going forward.
That I think there's a level of truth to that here. We're kind of at like a last stand, if you will. This particular, I've had this highlighted for a bit now here. You get these dips on the 4-hour chart, that 2150 EMA band. Not that those timeframes mean anything in particular in the 4-hour chart, but 1, 2, 3, 4, 5, 6 dips down here. Throughout the entirety of that, you never see the 21 cross the 50. We haven't produced that cross of the 21 and the 50 yet, but if there is a place for this market to recover, like this is the bulls need to do it here. Tomorrow, we got to get our close back through 74.50. We have to start building again. I know going into NVIDIA near the highs makes people feel uncomfortable. I would feel much better as a bull if we actually were a little bit weaker going into NVIDIA, because then the chance of people having cleared out the short-term positioning, that's higher. But if you're an S&P 500 trader, right, tomorrow, 74.50, you want to see the recovery. We want to see this market behave like it did, even as it did here, right, in the term between April and May. We can't see further breakdown at this point. So I think for me as a bull today, Ilya, 73.50 is a pretty informative level. The existing position that I have on here, I'm going to have to eat it as a loss if, well, we don't go to new highs, because that's the whole point of the buying the out of the money calls on the dips to the 5 EMA and looking for a pushback into the new highs. But if we do break down through 72.73, then that likely means we never got the close through the 1 week moving average. And therefore, whatever we've been relying on for the past few weeks to buy dips is dead. And so I'm going to have to eat the loss, probably not close to max loss, but maybe like 50% of the position gone. And I'd be okay with that, understanding that the way these trades are structured, we allow for these types of losses. But that's really the game right now. There's a line in the sand, 73.73 for me. Tomorrow, I'll break my long positioning. Maybe that's bad timing with NVIDIA around the corner. I would be comfortable missing the move, given what we're seeing elsewhere, which is really the story of the Treasury yield. We have not seen yields behave like this in several years. 5% has now been achieved on the 20s and the 30s. 10 are now
better than even odds of a Fed rate hike this year.
Better than even I think the market is severely mispricing. Maybe that's the next trade. Are we underestimating the odds?
It kind of is to me. I mean, that's sort of what. I mean, my entire portfolio basically now says we're not close to done with the more inflation, higher rates idea. Whether it be being long dollars or being short bonds, both at the long end and in the middle of the curve, have both TLT and IEF on, being short gold. All of that basically says this isn't over. It's just getting started.
SR3U6 is pricing not a full hike right now by September. Right? I wish they were listed off.
15 out of the 25 basis points that you needed to have by Z6 are in the market. So call that a 60% chance of a rate hike.
Ilya, for $137, we could start to look out max 250. We could.
Oh, you want to go
that.
directly into SOFR?
Yeah.
Okay.
That's where the juice is.
All right.
I think rates are going to be higher in September than what the market's currently pricing.
I mean, it's why I have the trades on that I have on. I've got that boat loaded, and any opportunity I get to put something else in it, I do.
I'm going to have to do a little bit more discovery on this, but for a $125 risk that the market is inappropriately priced on rates to make 4x, that seems like a decent bet. And that's not even crazy, Ilya. March 23rd, when we were talking about hikes being possible by September because of what was happening in the oil market, the SR3 contract for U6 traded down to 96.07. So currently the market, right, doesn't seem so crazy right now. That may be the juice here. You know, stocks could fall apart, of course. The hikes are, you know, once the cost of capital is priced in to be going up, we know this from 2022, then the market tends to decline. It's only once we get the, oh, can we see around the corner? Are the hikes going to end soon? They might.
Yeah.
That's when the market starts to find its footing again at the end of 2022 and bottom September 22, right? It starts to find its footing. We get another hike in March of 23 after SVB and Signature Bank. We then bottom out in October 23, but it's a process.
Yeah, and you kind of get this sense like, oh, so you're saying there's a chance.
Right. Once the what? Because the markets are full of eternal optimists, just by nature of the stock market. So once the cost of capital looks like it's no longer going to go up, risk sentiment can recover some here. I think this is a really interesting time in the calendar. Just because of the seasonal bullishness that we typically see through May, June, July, and how overstretched things have been, I could see a small correction scaring the hell out of a lot of people. And then this market immediately go back to new highs within a few weeks. And we just kind of keep playing this game of roulette where people are constantly in a state of panic. Too far, too fast. We get a correction. Bears are dancing. And then all of a sudden we turn around. It's like, how did we get back to where we just were? When did that occur?
I'm starting to think how that exact dynamic starts to line up with the political calendar as you get closer to the midterms and the markets start to think, well, if there is some kind of an economic outturn, and after the midterms, we end up with a deadlocked government that can't do much about it, just as you have a hamstrung Fed that's got an inflation problem and a growth problem, maybe at the same time. That's what starts to look like the sum of all fears, where you're just out of options.
Just out of options. I think that's certainly one way to think about it, where we have to get a little bit more defensive. So momentum wise, the market is breaking down a little bit if you're trading in stocks. I will point out one of the silver linings today, Mag 7 ETF here, Ilya, former highs. It is holding up here. We saw resistance there. We kind of grind through it a little bit. We broke out, we've pulled back and we're getting a teeny little bounce here today. And it's still not through the momentum level, that 1 week moving average that really held us up. But you know, Mag 7 did close below it on the 23rd and again here on the 30th. So it's not cut and dry. No. I really think we're going to learn about who has diamond hands and who's going to work at McDonald's again over the next few days in terms of this market rally. Either this thing is about to go belly up because it's overextended, or people are going to get shaken out and it's about to rip to new highs. But I don't see us sticking around 74.22 for a good amount of time. I feel like, you know, it's kind of last helicopter, last plane out of Saigon before the market makes its next big move. I just don't know which way it's going to go.
Yeah, I mean, I think at this point, NVIDIA becomes your marker in the sand. And you go, okay, this could go one of multiple ways. And we have a midweek marker that's essentially a kind of tectonic marker for sentiment. And however the market defaults after that marker may be telling, just because of the significance of the marker. It need not be anything more than the market going, okay, so we were at this line in the sand. What happened after NVIDIA? Oh, this is what happened. Okay, so that's the path of least resistance now.
The funniest market reaction over the next 2 weeks to me would be we get slammed after NVIDIA like it's a -2 or -3% down day. Then the market rallies back and rips into new highs prior to June 4th. And then PDT day comes.
Oh, yeah.
And then the market tops on June 4th.
Man, with that.
That would just be the funniest outcome here.
That
NVIDIA
would be just market as warrior poet.
We have a lot to contend with the next few days. It looks like Iran's going to be in the headlines overnight. So you'll have to keep an eye on oil here, Ilya. I think we're done here for today. Overtime's out of time for this Monday, May 18th, 2026. We will be back on Wednesday this week. Ilya and I are both off tomorrow. So we will see you on Wednesday. Good luck trading until then. Before Ilya goes for his brief little one-day reprieve, he's back with Macro Money, sticking around here on Tasty Live. Coming up next. See you there.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
markets paused to think about the pain that they suffered last Friday, but pointedly, they did not unclench. We're still looking at a situation where whatever concern got them bothered Friday continues to hang over their head. And we're going to try to figure out how this might develop this week, looking at the price action at the start and how that might inform what's coming next, because we certainly have an eventful bit of news flow coming in front of us. And it's not perhaps the usual suspects. Last week was a bit more fiery as far as actual event risk. From a data perspective, CPI, PPI, retail sales, we'll touch on them here by way of stage setting. But really, it was the price action itself that created all kinds of ructions. And we're going to take a look at here is where that's left us and how this week's more subjective event risk could influence things going forward. So taking a look here first at the S&P 500 as our kind of barometer for momentum and general risk sentiment, we see, of course, this ugly candle on Friday that seems to create not only a meaningful down day in the first one in a while, but also a pickup in volume after quite a long drift lower. In fact, the highest volumes we'd seen since back here in early April, where the rally was just getting started. Moreover, we start to take out some of these former levels of resistance on the way down and start to set lower lows, which seems to suggest that maybe momentum is starting to break. Now, still, of course, very, very tenuous of a turn. We still have quite a bit of upside momentum here, clearly, but the markers are starting to appear that maybe something is different. And pointedly today, with the benefit of having digested this over a weekend, the market didn't have conviction to keep running, but it also didn't have conviction to come back. Taking a look at what's going on in the background across markets, crude oil pushing higher again. It tried to back in a little bit at the start of the week and ultimately finds its way back on the upside. So the same sort of dynamics that we've seen here, worried about the continued closure of the Strait of Hormuz, the price of energy and the implications for inflation and for interest rates, that gets another kick in that worrying direction today. In fact, while we're at it, natural gas likewise pushing higher. So the whole energy complex on the rise. In fact, here, what we see is this consolidation that we'd seen in the recent weeks, suggesting maybe there will be some sort of an unclenching. It seems to be giving way to renewed pickup. And so the market may be starting to get worried that the disruptions to not just crude, but of course to natural gas as well, which may actually take longer to recover from, even if the strait were open tomorrow, just because of the damage to facilities and the nature of what it takes to restart natural gas production versus oil. You have an even bigger scope for a squeeze. Of course, against this backdrop, bonds continue to melt, and so interest rates continue to rise. This is that implication for inflation. So we can see we've taken out now the lows from where the ceasefire initially got us a little bit of a bounce. So the war trade that we have right here, not only has it resumed, but it's actually setting new landmarks here as it continues to extend. In fact, now we've even taken out these bottoms going all the way back to about a year ago. And so ostensibly the path of least resistance at this point is to these lows from 2025. That, of course, is going to be levels that precede the inflation and the growth scare that came with the tariffs. That was, of course, more of a concern about taking the economy down. And so what we saw there was a jump in bonds, leading, of course, to the conclusion that what the markets were worried about was some kind of a recessionary environment and a round of aggressive rate cuts. What we're seeing here ostensibly brings us back to around the levels where that kind of pressure, where borrowing costs at those levels started to fuel those kinds of fears and made the markets vulnerable to some kind of a growth scare. That doesn't mean that getting down to this level necessarily institutes the growth scare itself, but in an environment where that kind of a situation might occur as this inflation squeezes consumers, it certainly seems to be a place of vulnerability where such ideas are onboarded. Looking at gold prices here, they took a big wallop on Friday, but they're not continuing today. They're just holding steady here, not unlike what's happening in stocks, unwilling to make a break past the levels that they tested on Friday, but nevertheless not having the momentum to go the other way either. Similar story for the US dollar. It's at the top of its recent range and unable to clear that, but again, not willing to give up those gains either. And so that inflation-themed dynamic that we're seeing extrapolate across markets, that continues to look like it's appearing essentially everywhere. And the only kind of meaningful difference is that in yields, it seems to continue to be a real catalyst, although, of course, the speed with which momentum is moving has significantly slowed. But nowhere is the trade giving up any meaningful ground. Nowhere is the message seeming to be that whatever concern was on the board has any kind of meaningful reason to unclench. Bitcoin, for what it's worth, continues to do its own thing, although the Friday melt in sentiment was clearly not helpful. It's come back down to the kind of line in the sand here, the former range top that's been holding up any attempts to break back on the downside. So whatever breakout out of this down move was occurring still seems to have its bounds, still seems to be pointed higher, but a kind of line in the sand is now very closely within reach where maybe this thing is going to fail. So something to watch here, but it continues to operate seemingly outside of the push and pull of macro forces, either in the stock market or across some of these other benchmark assets. And of course, Friday's scare largely follows a sort of catch-up, perhaps waiting for news flow to get out of the way to the economic data that we saw last week. Over the course of the week, we got a number of U.S. inflation figures. We got likewise retail sales data, and it seemed like the market, in having been, at least on the stock side of things, laser focused on the semiconductor melt up and the sort of runaway success of that narrow but nevertheless important pull from AI build-out speculation on markets, even as the war trade continued elsewhere. It was almost as if the one major marker in that story last week, the Cerberus IPO, was a kind of switch where the markets were willing not to commit on the risk-off side, even as the data started to spook and appear like whatever war trade concerns were still lingering in bonds and in gold and elsewhere were not just valid, but important for stocks to pay attention to. they seem to wait for that Cerberus IPO to pass as a kind of crescendo moment. And then on Friday, locked in with what the war trade was saying in the context of this data. Now, the data itself gave us U.S. inflation that was faster than expected, 3.8% at the headline, 2.8% at the core. So on both fronts, a little bit hotter than forecasts had it. Not surprisingly, of course, energy was a big uplift in the calculation and largely accounts for the difference between headline and core. You can see here in the components, surely this part of it was relatively forecastable. There was obviously a big oil shock, and so the energy component in CPI had an outsized pop. That ought to have surprised no one. The larger issue is perhaps that you got this sizable move higher in core services, which is this big part of inflation that has been stubbornly sticky all the way down from the COVID highs, where you can see energy was a big contributor during the COVID highs. Food was a big contributor during the COVID highs. Goods prices were a big contributor because, of course, this is the disruption of global supply chains that you see right here. Now, over the course of the rebound, service sector inflation increasingly picked up and goods inflation increasingly diminished because supply chains reopened here, the lockdowns closed, and demand shifted mainly away from goods to those services that people forewent while they were on lockdown. So there was a big pickup in travel, in hospitality, in all of those things. And so when you see here the part of inflation all the way back down now before this oil shock, the part that's been sticky has been the service sector component. This is the bit that the Fed has really had a hard time trying to squeeze out. And so to see this part rise, never mind the energy shock, that ought to be concerning. And indeed, we can see that even before the onset of the war, going all the way back to the start of the year, we can see here that the story for services sector inflation is of increasingly large monthly gains and a kind of turning back into an upside year-on-year trajectory here gradually over the course of the past 3 months. But even before then, January, February, these are much larger numbers, especially January, than what we saw in the second half of last year, which seemed to clear the way for the Fed to give us those 75 basis points in rate cuts. And then when you look inside the numbers and see what that might have been, it should likewise be worrying that the component that stands out is the jump in transportation service. Because what this is suggesting is on top of whatever was already bubbling in core services inflation, the energy shock is now moving out of energy and into the service sector. It is already spilling over. And this is, of course, much stickier than just the price of oil, which, let's say, in an idealized rose-tinted scenario, could come down quickly were there to be a magic sort of breakthrough over the Strait of Hormuz. You then see something similar in PPI, the wholesale inflation index. Of course, big rises in the month-on-month, both headline and again in core. And when you look into the details, biggest rises since 2022 here, biggest rises not just because of a predictable jump in energy, again, as we saw in CPI, but once we start to look at services, we see, again, spillover. Some of the largest categories here, transportation and warehousing. And of course, the margins component. Now, you wouldn't think that the pressures of inflation are good for wholesalers' margins. When you look at the transportation and warehousing component, you can see this is just fuel costs spilling over into sensitive industries. Largely the biggest one here, the truck transportation of freight. Not surprisingly, that's very sensitive to the price of gasoline. But then for margins, they're expanding because the big standout here is the margin being made by the sellers of fuels and lubricants. In other words, those people on the right side of the rise in petroleum prices. And so what you're looking at then, again, in wholesaling, is the spilling over of energy inflation into much stickier parts of the price structure. Then comes retail sales, a relatively weak number, but not necessarily outside of the range of expectations. Certainly a slowdown from the prior month's jump, but that jump was itself not the greatest of news. And once we look at the internals here, we can see, indeed, in the prior month, there was a rise of 1.6%, but that was largely powered by this astronomical jump at gasoline stations because, of course, again, the price of oil rose. Retail sales numbers don't adjust for inflation. So this is just amount sold times the price. And if the price goes up, well, these numbers go higher. So what's interesting in this context, of course, is that for April's numbers, this came down significantly, which you might almost get excited about if only it happened because the price of oil went down. But of course, we know that's not what happened. The price of oil did not go down. So if you have a significant decline in gasoline station sales after this massive surge in March, but the price of oil didn't go down, well, in that multiplication, quantity times the price, there's only one way that really works out, and that's if the quantity went down, which is to say you're starting to see these prices for gasoline destroy demand. That, of course, is not good news for economic growth. Now, when you look at the year-on-year numbers, they're certainly not any more encouraging in year-on-year terms. Gasoline's sales, we can see here, up 21% almost year-on-year. And that's because of the rise in prices after a 16.6% jump in March. And we can see already from these University of Michigan consumer confidence numbers that the consumer is getting squeezed. That much is clearly not rocket science here. And if we look at the consumer confidence surveys question here about the survey takers' outlook for inflation 12 months forward, we can see that there is a strong relationship between what expectations there are for inflation and where consumer sentiment is. We can very clearly discern here that as we've come down from the depths of COVID, we've seen that with the pandemic's inflation overhang, there was clearly a weakening of consumer confidence. We can see that as the Fed, and of course other global central banks as well, but in this case, we'll stay focused on U.S. data, since that's what this is. We can see that as the inflation expectations came down, so too sentiment improved. Then comes the beginning of 2025. We get the tariffs. That's one inflation surge. It moderates a bit. Now we have the war. That's another inflation surge. And so consumer confidence is already at the lowest we'd seen it at least since 1990. And the problem itself, of course, persists. As we can see here, the bond market is giving us rising inflation expectations by way of these break-even rates right alongside the increase in crude oil. So the squeeze on consumers here implied by what we're seeing in CPI, in PPI, and in the retail sales numbers, according to what the bond market seem to think is going to continue. Moreover, this isn't just a one-time spike in prices. Note here, at the beginning of the year, the gap between the 5 and the 10-year break-even is basically non-existent, which suggests a stable inflation outlook over the longer term. That is to say, the difference between 5 and 10 years out is negligible. Whereas now that spread is significant. And what that seems to suggest is inflation is on some sort of a widening trajectory here, near term. That there is an arc developing here. And of course, in response, you have this increasingly significant build in hawkish policy expectations. For the Fed, most dramatically perhaps, we are now looking at about a 60% chance that there is a rate hike this year. 15 out of 25 basis points have already been priced in. In fact, we can see that from the latter part of April, after this sort of moderated a bit following the initial wartime shock, we've rebuilt in a hawkish direction. The same thing has worked out for the Bank of England and the ECB. The ECB is now fully priced for 3 hikes. The Bank of England is now fully baked for 2 and about 50-50 on a third. The Bank of Canada now looks like it's set for 2 rate hikes. The RBA was set for 2 hikes at the start of the year. The war took them out to 4. They've already delivered 3. And now the pricing is starting to lean in favor of a 5th. So not 1, but 2 more over the remainder of this year. And so the squeeze coming not just from prices themselves, but already the markets onboarding, hence the moves in yields and in bonds, that the implications for central banks don't need any more consideration as to what happens in the Strait or in the negotiations. This is already getting priced in. Now, this makes for an interesting setup for event risk this week, besides, of course, the tectonic announcement of earnings from NVIDIA, which ought to be some kind of a sentiment marker this way or that, just by virtue of how much market cap there is in that company. The other notable point from a macro perspective on Wednesday will be minutes from the last FOMC meeting. And although we are going to have a new Fed chair at the next meeting, Fed Chair Kevin Warsh will take the helm. Fed Chair Jerome Powell will revert to just being Governor Powell. We are nevertheless going to get a sense of where the committee is, because the chair is just one vote on that committee. And although the chair has the bully pulpit, chair does not have dictatorial powers to set interest rates. And so what this will suggest is just how hawkish the committee has become before Chair Warsh takes his post. And of course, there has been speculation that he will favor rate cuts, much as the White House has demanded and has said this is, in fact, a litmus test for getting the job. And since they nominated one Kevin Warsh, one would think that he's made some sort of commitments about cutting rates. But how possible that even is if the committee is hawkish and outvotes him, that's, of course, the question du jour. And so reading these FOMC minutes and just how hawkish the committee has become, that ought to be very instructive. And then, of course, we are going to get, at the end of the week, a check on growth. We're going to get flash PMI numbers from S&P Global. They're going to cover most of the major economies. China is always a little bit delayed, but Australia, Japan, the Eurozone, the UK, and the US, expectations are such that we can see here for Australia, we are already at standstill, and we're going to be looking at these numbers to see if they, at the front of the global supply chain, sort of at the frontier there, are going to give us some indication of where things are going. As ever, of course, 50 for these numbers is neutral. Above 50 is growth. Below 50 is contraction. For the Eurozone, we're expecting continued contraction, although the pace is seen holding relatively steady. For the UK, we're looking for growth to slow. For the US, if we look at the expectations here for both manufacturing and services, relatively stable is where the market seems to be anchoring, although manufacturing here looks like it might tick down a touch. Now, of course, for the markets, this is going to be a very important check of what's going on, because if indeed all of these central bank rate hikes are going to start to squeeze the economy, where the economy is at the time of the squeezing is a critical question, and just how vulnerable it is. Of course, most critically, we just saw in the numbers for the first quarter out of the US that the consumer was already weakening for 2 consecutive quarters. And what really made the difference, what really allowed GDP to continue to maintain a reasonable pace of growth, was the incredibly rapid build out through business investment of these AI data centers. And of course, the question will become, how long can that continue? And how weak does the consumer need to get to overwhelm those forces, even if they continue? Because, of course, the consumer is 68% of the economy. And those data centers and business investment in general is only about 14. So at some point, no matter how fast that 14 is growing, a meaningful slowdown in the 68% slice of the economy looks like it would overwhelm those forces. So with that in mind, what I am looking at here, positioning-wise, is still short gold. That's a function of the yields are going up idea. Long the dollar, same idea. Still a bit long Bitcoin here, although as we talked about, the test for the trend's viability is just about now. Long a little bit in the tech space, long IGV, the sort of unloved software ETF, on the idea that if the runaway semiconductor trade starts to give ground, and this isn't, then maybe the first step in a kind of risk off transition is some reshuffling within the sector. So I have that on now a bit as a kind of relative idea. And still very much long rising interest rates with some puts in IEF. That's the middle of the curve. Still sitting on these TLT puts. That's the long end of the curve. Long a further rise in energy. And so still have UNG here and USO. In fact, UNG just as of today, USO, which I'm still long holding on from the past couple of weeks. And I've amended a bit on my equities exposure here in both the NASDAQ and the S&P. I've sold some calls against the put verticals that I had here before, essentially reducing their cost while increasing downside exposure. And so looking for a bit of extrapolation here in a risk-off direction now that the market seems to be starting to take some real meaningful lumps and showing a little bit more technical damage, a little bit more actual downside progress for prices as the news flow deteriorates. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.